Right, so I'll first focus on how sector exposure took place. Highest exposure was seen in sectors like industrial, auto, transport, as well as metal mining. And low exposure was seen in sectors like financials, utilities, oil and gas, as well as healthcare. Now, in terms of what stocks were bought by mutual funds, in terms of top 5 stocks in the large cap space, as you rightly mentioned, it was ITC, Swiggy, SBI, NTPC, and HDFC Bank. In the mid cap space, stocks like IDFC First Bank, SAIL, VMart, Suzlon, Union Bank were bought. And in the small cap space, Sagility India, NBCC, Ujjivan Small Finance, RBL Bank and Bandhan Bank were bought. Now, in terms of top 5 stocks which were sold by mutual funds in the month of May, in the large cap space, selling was seen in Samvardhana, Coal India, NTPC Green, BEL and Bank of Baroda. In the mid cap space, Nykaa, ABFRL, NHPC, Indian Hotels saw some selling. And in the small cap space, pressure was seen in terms of Utkarsh Small Finance Bank, HFCL, Paradeep Phosphates, Delivery and Reddington. In terms of cash levels across schemes, overall cash level in equity-oriented mutual funds was down by about 50 basis points. Cash level grew for large cap and mid cap mutual funds, but cash levels declined for multi-cap as well as flexi-cap and focused sectoral and thematic funds. So this is the overall picture as to what stocks were bought and sold by mutual funds in the month of May.
Okay, thank you so much for that, Mahima. But Mahima is also staying on with us to tell us about the sectors which will be impacted due to the high crude prices.
The first sector, of course, that will be impacted is paints because they use crude derivatives, and around 30 to 35% of their total raw material cost could come from crude. And stocks that could see impact includes Asian Paints, Kansai Nerolac, Indigo Paints, as well as Berger Paints, and their margins will be impacted on the back of this. The second one is aviation, of course, because ATF will get expensive, and Interglobe and SpiceJet could see that pressure coming in. Tire stocks will also be impacted because crude derivatives are used in raw materials like synthetic rubber, chemicals and carbon black, and they amount to roughly 30 to 35% of their overall raw material cost, and this will again impact their overall margins. Stocks in focus could include Apollo Tires, JK Tires as well as Seat. Lubricants will also get impacted because they use oil derivatives like base oil and additives, and they generally account for 40 to 50% of their overall raw material. And stocks that could see impact includes Gulf Oil and Castrol India. Lastly, even the packaging companies will get impacted on the back of this because polymers and overall will have direct impact of these crude derivatives, and margins could be under pressure for these companies. That includes your Polyplex, Uflex as well as Jindal Poly. So all of these counters will get impacted on the back of rising crude prices.
You know, before we get to the next story, folks, just look at this on the flashes right now from the Foreign Ministry. This is citing Bloomberg. India and China have agreed to expedite steps on resuming direct air services. India and China to take steps for visa facilitation and exchanges. It's after the meeting of the Indian Foreign Secretary and China's Vice Foreign Minister in Delhi. So this is, of course, Vikram Misri, our Foreign Secretary, meeting with the Vice Foreign Minister of the People's Republic of China, that has seen some of the thaw coming in both relationships. So that's important as well, and all of that on your screen. I thought that's, you know, when the world is fighting, and of course, this has been a
positivity in terms
this
of
has been a relationship,
right?
fraught with, but this is opening up because there is a lot of trade and business entities also.
And probably this could be another step towards filling the gap with regards to rare earth metals, right?
Yes.
So that is another aspect which we need to consider as well, that if things are improving, probably there will be facilitation with regards to trade as well. So probably all the crisis that we're seeing on rare earth metals will subside, and you know, I mean, that's where India is expediting as well in terms of companies which are looking at entering the space. So let's watch out how closely this can develop. But let's quickly look at the monsoon impact. You know, at NDTV Profit, the entire week we've given you coverage with regards to how monsoon will impact sectors on the positive side, from auto to fertilizers, etc. Right now, we're talking about a negative impact coming in there. This is going to be with regards to the power sector. Let me head across to my colleague Varsha to understand what happens with regards to power demand when the monsoon is in surplus, and in turn, the impact usually is not in terms of the full year. It's the first quarter of that financial year which sees the financial impact as well. But Varsha will decode this for us very quickly. Varsha, over to you.
Well, thank you so much for that. You know, generally good monsoon is considered super for the economy, but we'll see how surplus monsoon can actually lead to slowdown in power and affect power companies because the need of cooling appliances diminishes. Now, as you can see from the data here, power demand growth trends to slow down significantly during years with a surplus monsoon. Now, for example, take 2020, for instance, a surplus year where you have seen a substantial, almost 15% decline in the demand. Conversely, if you see in the years like 2021 and 2023, which experienced deficit rainfall, show much higher demand of power. Now, this seasonality is a crucial factor for the sector. Moving on, the correlation is straightforward. The lower power demand directly translate to lower revenue growth for power companies. Now, conversely, when the rainfall is in deficit, if you see, and power demand is higher, companies tend to report stronger revenue growth. This isn't surprising. Why? Because of this, companies operate largely on volumes. Let's see the data there, because if you were to see in surplus power, you have Adani Power reporting 32% of growth, while in deficit it reported almost 31% of growth. Now, if you see, moving on, the interesting point over here is the stock price movement. Now, one might expect share prices to reflect the lower revenue growth, but here we find a disconnect there because of the capacity expansion these companies are doing, and also the business model that these companies has. For instance, if you see Adani Green Energy and Suzlon Energy, so incredibly higher average share price changes in surplus year, which could be attributed to the specific business model and the capacity expansion that they are going. However, traditional players like NTPC or Power Grid, the differences between surplus and deficit years in stock performance are less pronounced or even inverse, reinforcing that the impact isn't uniform across the sector. Now, if I want to talk about the revenue growth overall for Q1 FY26, what the street is estimating. So they're expecting overall revenue growth to range from 7 to 42%. Now, companies like Adani Green Energy, JSW Energy, and Tata Power are projected to lead the top line growth, driven by their ongoing capacity addition and the diversified portfolio that these companies has. In contrast, estimates suggest a more muted top line growth for traditional players like NTPC and Power Grid Corporation during this period. Now, we'll just talk about the valuation of all these companies. We'll compare the price to earning ratio, that is current price to earning ratio versus 5-year average that these companies have commanded. You'll notice that many companies are trading above their 5-year average P, suggesting the market might be factoring in the future growth or a premium for the specific business model. Finally, if you look at the street view, what analysts are expecting, this gives a data of how the broader market and research community view these stocks. If you see, we'll see a range of return potential, with NTPC showing a healthy 25% of potential return and Adani Energy Solution giving almost 43% of return potential. Interestingly, some companies like Torrent Power show a negative return potential. So overall, this presentation summarizes the market's current expectation, how the revenue and stock price movement have been delivered when it comes to surplus and deficit power.
All right, thank you for that. So power demand, from the perspective of power demand, monsoon is perhaps a bit of an issue. Varsha there with all of those details. Okay, so we've been telling you about how Ahmedabad's air crash tragedy may be India's most expensive aviation claim, with potential liabilities translating to upward of 2,000 crore rupees. My colleague Pallavi joins us with more details.
So that's right, Tamanna. Yesterday's tragedy can very well turn into India's most expensive aviation claim, and we're already looking at estimates of potential liabilities going upwards of 2,000 crore rupees. Let me break this down a little bit for you. Now, typically an airline's fleet insurance policy covers its parts such as the hull, spare parts, as well as the liabilities to passengers as well as third parties. Now, yesterday's incident will mean that it will trigger claims under both the hull and the liability sections because of the total loss of the aircraft and the fatalities over and above. Now, aircraft damage will be covered under the aviation hull all risk section, which ensures the current valuation of the aircraft. Looking at the details we have regarding the model of the aircraft, this can range alone anywhere between $200 million and $280 million. The figure, of course, depends on how much the company has insured the aircraft for. Now, coming to the liability section, that could very well be an even more significant component of this loss and could amount further to millions of dollars. This will cover the airline's legal liability to passengers and third parties, and this will include medical expenses, cargo and baggage losses. Now, over and above, the airline did crash into a civilian compound and will result in substantial third-party claims as well. What we should remember though is such losses generally affect multiple insurers and reinsurers, as typically what airline fleet policies do is they're placed on a facultative basis and involve multiple participants. So this is some of what we've been picking up speaking to industry experts, but let's remember these are estimates, but given the quantum of loss involved both in terms of material as well as lives, these numbers could very well be anywhere upwards of even what we're talking about.
Thank you so much for that, Pallavi. Quickly trying to mark a few stocks, we have the Baltic Dry Index, which has risen 10%. It's a measure of the cost of transportation of dry bulk commodities, and it tracks dry bulk carrier rates, and this doesn't look too good, right, from an export perspective or from an import perspective. It's an indicator of global trade, and typically when it spikes, costs have actually gone up. That's what it typically signifies. Sectors reliant on transport from India and to India will likely be impacted. I want to quickly mark out some stocks on the back of this. You have something like a GE Shipping. Let's pull that one up, 2.5% higher. Shipping Corp of India is also up around 6% odd. You have maybe some of the smaller names as well as CMEC, which is up around 1.4% odd. So maybe that's a space.
Logistic ones, probably a Blue Dart, who I don't know. All of these could be in focus as well on the back of this.
That could well get impacted. Some chemical companies as well, which rely on import of certain raw materials, will also
margins
likely
will be under pressure.
Yeah.
So
and
we have to see how this pairs out. I think it all depends on how long.
Correct.
And what the retaliation is, because Israel has gone ahead with these aggressive strikes and then told its people to hunker down. So what is going to come from the other side is what remains to be seen. Meanwhile, we're wrapping up on India Market Open. It's been an action-packed morning, but the news continues. We'll be back on the other side with Ask Profit, where we address your specific questions on your stocks. Stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. अब कोई soft spoken तो है?
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome to NDTV Profit. You are watching Ask Profit. I am Mahima Bachchajani and with me is Anushi Vakharia. Well, before we move on to the queries for the day, of course, as you all know, Ask Profit is a show that gets all your stock-related queries answered. But before we move on to that, let's take a quick check on how the markets are doing. Well, it's one thing that we all know certainly that markets don't like uncertainty, and that is why the markets are seeing a bit of pressure. The Nifty 50 is down by about 0.9%. The Nifty Bank seeing pressure of about almost 1% as we speak. The broader markets, although, are doing a tad bit better than what the benchmarks are doing. The mid-cap 150, let's pull up that. It's under pressure and down by about 0.4%. The small cap 250 is also down by about 0.3%. Let's pull up the constituents on the Nifty 50 and see what counters are buzzing in trade today. Adani Ports, Ultratech, Shriram Finance, Reliance, SBI Life and SBI. All of these counters under pressure, down by about 1.5 to 2%. But counters that are doing well are the defense pack. Bharat Electronics up by about 2%. Something like ONGC is also doing well on the back of crude price rising, up by about 0.8%. Wipro up by about 0.6%. Tech Mahindra and Apollo Hospitals are some of the top gainers on the Nifty. Let's pull up the sectoral heat map and see how sectors are doing. Well, it's just the Nifty Defense which is in the green, which is up 1.8%, and Nifty IT slightly skewed towards the green, up by about 0.15%. But Nifty Oil and Gas, on the back of rising crude oil prices, again under pressure, 1.2% down. Nifty Finance, Nifty FMCG, Nifty Bank, Nifty Auto, all under pressure. Let's also pull up some stock specific action and see how the BSE 500 in fact is faring. Let's pull up that and see what counters are actually buzzing in trade today. There you go. There's Jubilant Ingrevia, which is up almost 11%, and this is on the back of the block deal that is taking place. There's G Shipping up 5% on the back of the entire saga of Iran war. There is Jubilant Foodworks, again a block deal there, up by about 3%. Bharat Dynamics up 2.6%. But something that's not doing well is Tata Teleserve, Canara Bank, Interglobe Aviation down by about 3%. IGL, Crisil, all counters under pressure, down by about 3%. But with that, let's also welcome in our guest for the day. We are joined by by Jatin Gedia, Technical Research Analyst at Mirae Asset, Sheikh Khan joining us. And we're also joined by Sameer Dalal of Natural and Sons Stockbrokers joining us now. Welcome to both of you, gentlemen. Jatin, before I move on to queries, your quick take on how the markets are faring right now and what do you expect? How will the next week fare?
Yeah, see, good morning, everyone. So as far as the Nifty is concerned, we believe that 24,700 was a very crucial level that should not have been breached for the Nifty. However, it has touched a low of around 24,460 thereabouts in today's trading session. So we believe that the structure might have just become weak, and overall we believe that there could be deeper correction going ahead. So all the bullish bets are now off the table as of now until we get clarity or a close about the 24,950, 25,000 kind of a level. So as of now, we believe that the bullish bets are off the table, and we will be looking out for selling opportunities on rise. So the structure has turned or tilted in the favor of the bears as of now.
Okay, so that's the view that we are seeing for the markets, but let's shift our focus to the stock-specific queries. And the first query is from Viresh from Bangalore. He holds about 660 shares of IEX and he's bought this at a price of 195. If you look at the share price currently at the levels of 188, so slight bit of correction from those levels that we are looking at. Wants to understand whether he should exit or continue to hold the counter. Let me come to you, Sameer, on this query. What's your view on IEX?
So we remain positive and constructive on IEX. Look, the electricity futures that are traded in the exchanges are very low compared to the overall volumes that are of electricity in India. Globally, the volumes on the exchanges are as high as 70 and 80%, and in India, we are closer to a low double-digit number like 10 or 12%. So the opportunity is quite large. Yes, there is the market coupling worry that is coming where all the exchanges would, there'd be like an interplay between them and the dominance of IEX would come down. But if the overall pie grows by, say, over the next few years by a CAGR of maybe 25-30%, IEX would still be able to see some volume growth even after losing some amount of market share. And this is a business which has low capital intensity. Everything is in place. Increase in volumes. You've seen it with MCX and BSE, which have rallied so significantly. When volumes start seeing an uptick, automatically the operating leverage kicks through and then the profitability increases multifold. We believe a similar kind of opportunity exists in IEX. It's just the market coupling that's keeping the stock subdued. But over a period of time, we think the investor will make money. So if he has a 2-year horizon, stay invested.
If you have a 2-year horizon, stay invested in IEX is the view coming in from Sameer. In fact, there was an interesting UBS note also on IEX, which has given a target price of 285, which is over a 47% upside from where it's trading at right now. All right, the next question is from Pakshal, who's writing in from Sivana, Rajasthan. He wants to invest in a two-wheeler stock and he wants to continue to hold this for the next 3 to 5 odd years. Sameer, which two-wheeler stock would you prefer? Or if there's no preference in the two-wheeler space, which stock would you suggest for Pakshal to invest in?
So Mahima, I was on your channel last evening at about 2:45, and 2 of the stocks that we recommended as investments were the two-wheeler space. One was Hero Honda, one was Bajaj Auto. We remain very constructive on both of them. We think, the correction has been quite sharp. Valuations are relatively inexpensive when you look at it. I mean, the opportunity for growth is still very good. At the end of the day, let's talk about one company at a time. Let's talk Hero Moto first. So they are making that push in the electric space themselves. They have a not subsidiary, but they have a 30% investment in Ather Energy, which is an electric two-wheeler. And as the electric space scales up and Hero is able to capture some share through Ather and through themselves, we think the opportunity and profitability of the company from that segment would rise. Then you have the export market, which Hero is catering to also and looking to expand its presence in. As that sees more traction, we believe that also will lead to growth in earnings. So we think Hero is looking attractive at this point. That would be our top pick. Second in line is Bajaj Auto, also very constructive on them. We believe that the two-wheeler space in India will only keep growing for the next many years because the affordability is getting into with interest rates coming down. You'll see more uptake in the EMIs. I mean, lower EMIs, so more demand coming through. And as all of these things happen on the rural side, we think both of these counters have the opportunity to do well. Bajaj Auto, I'd like to also add one more thing. They did a buyback at 10,000 rupees about a year plus ago, and you're getting it at 8,400 odd levels. So you're getting it at a 15% discount to what the management, I mean, the promoters of the company bought it. So that gives me a very clear indication that there is room for support on the downside, and the stock can go up. So Hero is a top pick, Bajaj is second.
All right. So those are the topics in the two-wheeler space. And thank you for that comprehensive answer, Sameer. All right. Our first caller for the day, Harish is calling in from Chennai. Harish, a very good morning to you. How can we help you today?
Yeah, good morning. I'm holding shares of Varun Beverages.
Okay.
So I hold 2,000 shares at 488.
Okay.
So I just wanted to know how will it look for the short term?
Okay.
How's the short term trend?
Okay. Got your question, Harish. I'll take this up with Jatin. Jatin, I'll come to you. In terms of the overall performance in FY25, the Varun Beverages has not performed, very badly. It's been a good year per se for Varun Beverages, but early monsoons could be a bad indicator for Q1 performance. But with respect to where charts are concerned, how are the charts faring for Varun Beverages?
Yeah, see, in the case of Varun Beverages, the overall trend is still bullish. We believe that the recent price action has been subdued. It has been consolidating between 490 and 460. However, in terms of pattern, it's forming an ending diagonal pattern. So that indicates that a trend reversal is around the corner. So now I'll be expecting the stock to, continue to outperform towards the level of 500, 520 on the upside. And on the downside, the crucial support is placed at 450. So considering that the investor has bought it around 488, I suppose he should continue to hold with a stop loss at 450 and expect a target of 520 on the upside.
Okay, so that's a view that we are seeing for Varun Beverages. Now, next question is from Rajesh from Karnataka. He holds 1,000 shares of RVNL at a price of 642, which was at its higher levels that it picked up this stock. Currently, if we see his position, he's facing a loss of 2.3 lakh in the stock that we're seeing. Despite the correction that we've seen, he has missed out on those opportunities in averaging out the stock price. Wants to understand whether he should continue to hold the stock or whether he should sell this without making any further losses on this counter. Sameer, let me come to you on this. Overall outlook on the railway space, and what's your view for RVNL in particular?
So we're quite positive on railway stocks at the end of the day from the point of view that, opportunity is good. The order flows are going to keep coming through, which would mean that the companies would have enough business over the next couple of years or many years, actually, even as the modernization and upgradation of the Indian railways keeps happening, right? The problem with RVNL is, look, the stock had run up far more than what fundamentals justified. The stock, even after the sharp correction, still trades at expensive valuations. So from that perspective, it becomes difficult for me to tell someone, the problem for this investor is, I guess he's sitting on a huge loss, and that's why I'm a little reluctant to tell him to sell, because there is a possibility you may get a bounce in the market and in RVNL as well. But if I were an investor, RVNL would definitely not be the top pick of mine in the space. It's something I wouldn't invest in actually at this point, but just given his loss, I say stay a little bit invested. When it bounces up a bit, maybe a 7-8% rise, get out of the stock and find something better in railway. For me, IRCTC is an excellent investment. Look, as the ticketing opportunities continue to, as more tickets get sold, IRCTC will continue to do well. Apart from that, what we've also discussed once on your channel before, IRCTC is getting into these curated travel plans. It's like a travel agency making a plan for you. And as that part of the business scales up, I think the profitability of IRCTC can continue to increase. Of course, we know the food side of the business also has a great opportunity to grow operating leverage and profit. So IRCTC being a monopoly is a better bet to be invested, even though valuations are expensive compared to an RVNL. But wait for a bounce before you exit.
IRCTC a preferred bet over RVNL is the view coming in from Sameer. All right, our next caller, Raj, is calling in from Bengaluru. Raj, a very good morning to you. How can we help you today?
Hi, good morning, Mahima. This is Raj here.
See, I was planning to invest in Balu Forge.
Okay.
I had a corpus of say around 1 lakh. I was planning that much of investment in a staggered way.
Right.
And I also see, I don't see any reason, but today I see that there is a fall.
Right.
So I just wanted to, get inquire about this. How is the company? Can I have done a little bit of study, but they are now entering into defense also,
right,
a little bit, and so just wanted to know, is it a good time to staggerly invest in this? Can I go ahead and invest, or should I see any other
right.
company?
Right, got your question, Raj. I think you've done your research well, so I'll take this up with Samir quickly. Samir, he's saying that since Balu Forge is down almost 12% as we speak right now, do you think this is the right time to make an entry? And he wants to invest 1 lakh rupees. So you may also suggest if, he should not invest the entire amount in Balu Forge itself.
So first up, I don't have coverage on Balu Forge, so for me, commenting on that one is impossible.
Okay.
Coming to the second part of the question, which you posted, not him, that whether he should put 1 lakh in one individual stock. Well, if he has other investments, then yes, he can take a call of 1 lakh in one particular stock. But if this is his only investment in the market, Balu Forge may not be the right company for him to put all of his eggs into. I think there are stocks in the forging space, Bharat Forge, for example, which is already in the defense space, which has a good amount of traction there. That might make more sense for him to invest in. The promoters are strong. They have a lot of legacy history with them. They in the forging business, for the trucking in the US, all of that, they're doing quite well. The defense will only see more acceleration. So if I was the person and I had only 1 lakh invested in the market, I would rather spread it amongst 4 to 5 stocks if I could. And Bharat Forge, if you want forging, would be the stock to invest in. And like I said, I don't have Balu Forge under coverage, so I really don't know much about it.
Got your point, Samir. Jatin, I'll take this up with you then. Balu Forge, what are the charts indicating?
See, now if the person wants to invest, then 587 to 600 is a very crucial support, wherein we have the 20 and the 40 week averages placed. So I think during this phase of correction or the dip that the stock sees, there is a possibility that it might slip towards those levels, and that would be a good entry point for this investment. As rightly pointed out, it should be done in a proportionate manner, not all in one stock.
Okay, thanks for that view for Balu Forge and overall forging space that we are looking at. But next we have a caller joining us, and this is Snigdha calling us from Hyderabad. Hi Snigdha, how can we help you on the show today?
Hi, hello everyone. So I have a corpus of 6 lakhs and I need few stock recommendations for short term, that is 1 to 2 months, and I need it from both the arena, if it is possible.
So Snigdha, when you're planning to build this corpus, I'm assuming that there should be diversification, long-term as well as short-term outlook. Give us more perspective in terms of how you're planning to build this corpus that you're looking at.
Yeah, I just told you, right? I want it for 1 to 2 months, that is short term.
Okay, only for 1 to 2 months that you're building on. Okay. Jatin, let me come to you on this query. It's a overall 6 lakh of a portfolio size that we are looking at. 1 to 2 months is the period of investment. For that in mind, do you have any stock recommendations?
Yeah, so we have a couple of them. So one of them is Bharti Airtel. So if I look at the short-term charts, then this indicates a range-bound consolidation between 1800 and 1900. So despite all the correction that we are seeing in the markets, this stock has held on to its range. So whenever this up move begins, then Bharti Airtel would be one stock that would be on my radar to invest. So Bharti is one of them. If I have to pick one from the IT pack, then it would be the frontline IT company, that is TCS. So TCS on the daily charts is forming a bullish flag pattern. I'm expecting a breakout above 3550 on the upside. So the next leg of the up move can take the stock towards 3700, 3750. So I would stick to the frontline names rather than investing in the mid and small cap space at this point of time, and the preferred picks would be Bharti and TCS.
And TCS are the picks that Jatin has. All right, and sticking with what he mentioned about IT as well, the next question is from Gautam, who's writing in from Mumbai. He's got 7,000 odd shares of Wipro, bought at 262 a piece, and wants to know whether he can hold, sell at the moment, and wants to know if this is the right stock to keep holding for the next 12 to 18 odd months. Samir, I'll come to you on this one. Wipro, of course, one aspect, the entire view on Wipro, and of course your take on the entire IT space, considering how Q4 has fared and how FY26 outlook stands.
Okay, so again, yesterday we had the same discussion on your channel where I was quite clear when I said that, I believe that the IT space has limited room on the upside when it comes to stock performance over the next 2 years. And I'll give you my reasonings why. The first is that these are companies that are growing anywhere between 4 to 8% on the top line, especially the larger players. And operating leverage to whatever extent has already played out, and now EBITDA margin increases are going to be very limited. Meaning profits may grow anywhere between 8 to 10% at best. Now, when you have companies which are growing at 8 to 10% on the profitability side, and these stocks are trading at 30, Wipro is at a lower level, but you have TCS, Infosys, HCL Tech, all trading anywhere between 25 to 30 times earnings. It leads to a PEG of 2.5 to 3. So re-rating on the valuation upside, especially in a B2B business model, which these guys are, is very, very limited. So now you're playing purely on the growth side. And if you believe that the stock is going to grow its profit by 10% and no re-rating in profit, re-rating in valuations happening, you're talking of a maximum 10% decrease in profits. I don't think I want to invest in companies which are going to maybe give me a 10% CAGR return over a 2-year period of time when I'm taking risk of equity, when I can invest in debt and earn maybe 7.5%, or even a hybrid fund of sort and earn maybe 7.5%, 8%. So 2% extra premium to take a risk for equity investments is something I don't agree with. Now, coming to Wipro in specific, Wipro is actually one of the slowest growers in the entire IT space and has been for a while. It's been kind of a laggard when you come to IT. And from that perspective, I think, growth for them has always been a challenge and will remain a challenge. So even if the sector sees a slight bit of improvement, Wipro's performance improvement is not going to be significant. And from that perspective, I think there's very limited upside. So I would personally not be looking to make any fresh investments in IT. And for Wipro, I would advise, if he doesn't have a view of being stuck in IT, take your money out from IT and find some other sectors, NBFCs, consumer discretionaries, auto sector, which we discussed, the two-wheelers, engineering and construction goods. Those might be better opportunities to invest where you can make better returns over the next 3 years.
Thank you for that comprehensive view. So not so bullish on the IT sector. Well, that's the view coming in. But moving to the next caller, we have Murli calling us from Bengaluru. Hi, Murli. How can we help you on the show?
Good morning, madam.
Good morning.
Thank you very much for taking up my query.
Please state your query.
Yeah. Our heartfelt condolences to share crash victims. I hope all of you are fine there. And my query is on Gabriel India.
Okay.
I bought 1,100 shares of Gabriel India at the rate of 633.55 after the recent results. I'm a fundamental. I want a view from the fundamental investor. I'm willing to hold for at least 15 to 1 year, 15 to 2 years, 15 months to 21 months.
Okay, 15 months to 2 years is the timeline that you're looking. Also, just want to understand, in the results that you've seen, when you like the company, what were the particular takeaways that resulted in you investing in this company?
One is, it is a very old company in the field, a very established company with a low debt equity, almost nil debt, and with a good return on equity of around 20-21%. And a lot of things are lined up with the new products also in the offering. And they are doing a very slow and steady growth, and things to be, the best is yet to come. That's what my view that time.
Okay, let me take this across to Samir. Samir, what's your view on Gabriel India? Now, as Murli was just pointing out on the key reasons as to why he likes Gabriel. Do you have a similar view? What's your overall stance on this company?
So sadly, again, this is a stock that we don't have under coverage, and I don't want to comment on something we don't cover in detail.
Okay, no problem. Jatin, let me take this across to you. Jatin, what's your view on Gabriel India?
Yeah, see, overall, the trend for the stock is positive in the medium term. On the weekly charts, we can see formation of higher tops and higher bottoms. So, on the lower time frame charts, whenever the stock dips towards its 40-day moving average, the stock, resumes its uptrend. So, currently, it's trading very close to its 40-day average, which is placed around 600. So there could be a couple of percentage points of downside from current levels, but overall, we believe that this dip should be considered as a buying opportunity. On the upside, the immediate hurdle that we are seeing is around 668 to 680. So if he wants to add more, then around 600 he can consider. Otherwise, continue to hold on. From the short-term perspective, 680 is the upside target.
Okay, so hold is what we are looking for Gabriel India. Thank you, Jatin, for joining and sharing views on various of these counters. But it's time to slip into a short break. Lots more queries lined up on the other side, so do stay tuned in.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. Abbas bhai, soft spoken to hai.
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, the next question is from Surendra, who's writing in from Chennai, and he wants to make a fresh entry in HDFC Bank at current prices. He wants to know as to what should be the outlook for this. Samir, I'll come to you on this one. I know that you like banks, but do you think this is the right time to make an entry in HDFC Bank?
Yeah, so I don't think there's ever a wrong time to make an entry into HDFC Bank for the simple reason that this is the best-in-class bank with good growth opportunities. It's capturing market share from the private sector. It's been a little slow over the last year and a half for the simple reason of the merger, where they've had to raise their deposits kind of more aggressively and not lend as aggressively for the simple reason that they want to kind of replace their high-cost borrowings, which they got from the erstwhile HDFC Limited. But we believe they will be back on track very soon for growth as the entire economy sees an uptick. Valuations are not as challenging. This is a bank that used to trade at 4.5 times price to book. It's trading at 2.5 times price to book right now. Well, it may have moved up to about 2.8 right now, but in the rally. But any small corrections closer to 1800 would be a great buying opportunity. Even now, it's a good time to buy. I have no problems. And yes, I am very constructive on the banking space over the long term. HDFC in the large cap private would probably be the top pick. But I sometimes like to say that it makes more sense if you want faster growth and more stock appreciation with a little higher risk to go into smaller banks, where IDFC First Bank is our top preference. We believe all the pain for them is more or less over. We believe valuations are very attractive, and the bank is set for the next round of growth over the next 3 years without requiring any further capital after the last round they've done. So if you want to buy only HDFC, it's a great time, you can buy it. But if you want to venture out in a slightly higher risk, high return kind of strategy, you can look at IDFC First Bank.
Okay, very positive on banks as the view, especially HDFC Bank. But next we have a caller joining us, and this is Geeta calling us from Karnataka. Hi Geeta, morning. How can we help you?
Good morning, ma'am. Thank you for taking my queries. I bought 20 shares of Lux Industries Limited from 1920.
Okay, and you want a long-term or a short-term view on the stock?
Short-term view.
Short-term view on the stock. Okay, Jatin, let me come to you for this. What's your view on Lux Industries currently? If you compare Geeta's price from there on, it has corrected quite a bit. So just want to understand your view on this one.
Yeah, see, recently during the month of April and May, we got a pullback towards it 40 average, which is placed around 1570, 1600. From thereafter, again, it has resumed its downtrend. Overall, the trend for the stock from a short and a medium term perspective is negative. So I believe that the investor should consider exiting even at a minor loss, because currently the stock is in a downtrend. We are expecting a dip towards 1200 from a short-term perspective. So I think better off to exit the trade as of now.
That's it with regards to where Lux Industries stand. Our next question is from Ranjana, who's writing in from Bengaluru. She's holding 50-odd shares of Bajaj Finserv, bought at 2001 a piece, and wants to know a short-term view on this one. Jatin, I'll stick with you for this one. Bajaj Finserv, what are the charts indicating?
Yeah, see, in the case of Bajaj Finserv, there is a strong support around 1950, 1940, which is the 20-week average. So recently, it has been consolidating within this range of 1900 to 2050 on the upside. We believe that the overall trend is still positive, and the investor can continue to hold on to his investment in Bajaj Finserv. On the upside, we are expecting 2100, 2150 from a short-term perspective. I would suggest to keep a stop loss of 1850 for this investment that he has made. Continue to hold on as of now.
Okay, so that's the view that we are seeing for Bajaj Finserv. Next question is from Ishant from Rajasthan. Now, he has about 15,000 shares of Central Bank of India. It's bought it at the levels of 40.8. Now, currently, if we look at the stock price, it's at the levels of 38.24%. 24 wants to understand whether he should continue to hold this counter or sell. Jatin, your view on this?
Yeah, see, in the case of Central Bank, again, this stock did witness a bounce back from 32 to 41 or 42 odd levels. However, post that, the price action has not been encouraging. In fact, today it has dipped below its short-term support of the 20 and the 40-day average. So yes, there is a weakness from a short-term perspective, and we are expecting 32 levels to be retested that were the lows it touched in the month of May. So I believe that there's a decent downside even from current levels. Better to exit at a loss and wait on the sidelines before the trend reverses.
Okay, so that's the view with regards to where central bank stands. Our next question is from Jay, who's calling in from Pune. Jay, very good morning to you. How can we help you today?
Yeah, hi, good morning. I'm Jay here from Pune. First of all, I regularly watch this program and quite informative and helps to take call.
Thank you
so
so
my
much,
question is about GICRE.
Okay.
I have 150 shares bought at 400 last September. So I would like to know, should I be holding this or exiting? Basically, the stock, trades between 400 to 500 range regularly.
Correct.
And, whenever it reaches that upper limit, again, it comes back and I haven't been able to make any good profit. So, sorry, I should be booking profit at upper ranges and entering again at the lower ranges, or how I should be dealing with this stock.
Right, so you've basically seen the charts while studying this company, correct?
Yes.
All right.
I can hold it for longer term also.
Okay.
If I can hold it for a longer period, that is also fine with me.
All right. Okay, Jay. Then I'll take this up with Samir then. Samir, GIC is the counter. What's the view like?
So what you rightfully said, the stock has been stuck in a range for a very long time. And one of the reasons the stock has been stuck in this range is, look, at the end of the day, the government still owns 89% of the stock. And every time it rallies, there's a fear that the OFS will come and then the sell-off happens, right? Fundamentally, nothing wrong with the earnings. We believe the reinsurance space in India is going to keep happening. Of course, they don't only reinsure from India, they reinsure from overseas as well. So we're not too perturbed when it comes to the earnings and the fundamentals of the company. It's just the OFS that is the overhead. Until that remains, you're always going to have these kind of ranges. So what he's suggesting of buying at 400 and 500 might make more sense, and Jatin could probably give more of a detailed of where the actual supports and resistances are. But yes, even if he holds for 2 years, is he expecting like a multi-bagger return? I'm very unlikely. I mean, it's very unlikely, I would say that. So it'd be more for trading stock at this point.
Okay.
Okay, so that's the view that we are seeing for GIC. But the next question is from Venkat from Andhra Pradesh. This is an interesting query that we are seeing. He has about 7.78 lakh shares of SEPC, and this is at an average price of 13.78 that we are looking at. Average horizon period is about 1 to 2 years. Currently facing a loss of almost 2 lakhs on this counter. This stock also is 15% of his overall portfolio. Wants to understand the long-term picture on this. Samir, let me come to you for SEPC. Now, this stock has also been under focus on the back of multiple order wins from the UAE, Middle East side as well. Can you share your outlook whether you have the stock under coverage?
So we don't have it under active coverage, but I have studied this company. And one thing I would like to say to the investors, if he's bought it before the rights issue shares have come, then he's getting the rights at $10. He can probably sell a few of his existing stocks and invest in the rights. He'll get a cost saving of 3 rupees per share, if he wants to keep his equity at the same level. Now you're right that the SEPC has been getting a lot of orders, and because of which the operations to see an uptick. But the problem is this company is going through a lot of pain points and they're barely coming out of it. The equity base has become so large because of even this further rise. The equity is kind of constantly growing. For them to service that large of an equity will need huge order inflow with high operating margins, and the construction activity in general, the margins are never that great. So it's going to be a while before you see drastic turnaround. The stock has corrected from 30 to 13 all the way. So it's a huge correction. I'm not denying the fact that can it move up to 20 again? Probably can, because of liquidity, because of the kind of buoyant markets that we have. But as a fundamental analyst, I'm not able to justify a buy. Hence, we do not have coverage on the stock, but we have studied the stock. And that's why I can tell you that I am not of the opinion that you should buy, but can it give a rally up to 15, 16? It can. And at that point, I would advise you take your money off the table. There are better investments in the construction space that you can make.
Our next question then is from Satyan, who's writing in and wants to ask about PNC Infra from the next 12 to 8 months perspective. Jatin, I'll come to you on this one. What are the charts indicating for the next 1 year for PNC Infra?
See, the stock has witnessed a trend reversal after you can say a 50% correction from the highs of 560. It corrected towards 240. So that's a decent amount of correction. Now the stock has reversed its trend, and I'm expecting this up to continue towards 360, 375 on the upside. It's currently trading at a crucial support of its 20-day average. So now this becomes a good buy on dip kind of an opportunity for PNC Infra. Having said that, keep in mind the overall market conditions and then consider to add on to his existing positions. Overall trend is positive. I'm expecting 360 to 375 from a short term to medium term perspective.
Okay, so that's with regards to where charts are concerned for PNC Infra. Our next caller, Jitendra, is calling in from Hyderabad. Jitendra, very good morning to you. I believe you have a question on Scient DLM.
Yes, madam. Good morning to all. And madam, I'm searching for multi-baggers and I'm having 1,06,000 and I have been doing my homework on the stocks to find them. Will this stock be a good bet for me for long term? And I want overall outlook, fundamentals and technical analysis. Please tell me, madam.
Sorry, can you tell me the stock name again?
CYIEND,
Scient DLM. Okay, got
Yeah.
your question, Jitendra. I'll take this up with Samir quickly. Samir, I think we've discussed this before also, but do you think this is the right time to make an entry in Scient DLM?
So like I told you, I'm not very positive on that space overall. I think there are better opportunities. And Scient DLM as a stock, we don't have under active coverage. But like I said, in the entire space there, I'm not very positive.
All right, so that's with regards to where Scient DLM stands, and it's not something that Samir would suggest. All right, the next question though is on Titagarh, and Sivateja from Bengaluru is writing in and wants to know if he can continue to invest in this counter and make an entry right now. He's already holding 30 odd shares at 853 a piece. Jatin, I'll come to you on this one. Do you think the levels are right to make an entry in Titagarh?
868 is the level that is the 40-day average. So I think it's just above that. So overall, yes, he can consider buying at current levels or even averaging at current levels. Overall, it's trading very close to its crucial support zone. So yes, he can consider to average. On the upside, the immediate targets that we are seeing is around 1,000, 1,020 on the upside, which coincides with the 40-week average. So yes, continue to hold or even average is suggested.
Okay, the next query is from, we are seeing the next query again. This is from Ashok Reddy from Andhra Pradesh. He's holding 400 shares of Tejas Networks and this is at a price of 763. Wants to understand whether he should average it further. Currently, if you are seeing the price of the counter about 696. Samir, let me come to you. Wants to understand 1 year outlook on this share price. So what's your view?
So honestly, I think he can hold on to the stock. The stock has seen a huge correction. Valuations are a little rich even after the correction, but we believe the growth opportunity still exists for the company. Averaging, I would not suggest at this point of time because, like I said, valuations are a little bit on the expensive side. But it's quite possible that the stock could give a nice bounce when, a little bit of stability comes in the market. Of course, stability is not going to come because now, I'm not sure if you all have heard, but I'm getting news reports that some retaliation has happened from Iran side. And if that escalates, then all bets go off the table. But at the moment, I say stay hold on.
On Tejas Networks is the view coming in from Samir. Well, now, taking a slight detour, and we've all been talking about the Air India crash in Ahmedabad since morning, and it's been a mayday for sure because of this reason. And we have the first interview with the lone miraculous survivor from the Air India crash. Let's hear in as to what he has to say.
मेरे नज़रों के सब सामने हुआ था। मेरे खुद को भी बिलीव नहीं होता कि मैं कैसे उसमें से जिंदा बाहर निकला, क्योंकि थोड़ा टाइम लिए कि तो मेरे को लगा था कि मैं भी मरने वाला हूँ, लेकिन जब मेरी आँख खुल के मैं देखा ना तो मुझे लगा मैं ज़िंदा हूँ। तो मैंने ट्राई किया, जब मेरी सीट थे वो मेरी बेल्ट निकाला, मैंने वो ट्राई किया जहाँ से निकल सकता वहाँ से, तो मैं निकल गया वहाँ से। मेरे नज़रों के सामने एयर होस्टल और दूसरे आंटी अंकल सभी उसमें मिस हो गए थे सभी।
अच्छा, थोड़ा सा बता पाएँ, जब जैसे ही टेक ऑफ हुई फ्लाइट क्या हुआ था और अचानक से कैसे हादसा हुआ?
टेक ऑफ के बाद 1 मिनट के अंदर ही जब टेक ऑफ हुआ ना तो सडनली 5-10 सेकंड कैसे लगा जैसे स्टक हो गया वो। बाद में से मेरे को लगा कि कुछ हुआ। बाद में प्लेन में लाइट ऑन हो गई, ग्रीन और वाइट। बाद में वो पता नहीं वो प्लेन टेक ऑफ ज़्यादा करने के लिए वो रेस तो बोलते हैं क्या, रेस दिया होगा ऐसा कुछ, और सीधा स्पीड में ही घुस गया जहाँ वो क्या था वो
हॉस्टल था, एक हॉस्पिटल का।
हाँ, हॉस्टल में, और सब सामने सब हुआ।
ये जब फ्लाइट जब क्रैश हुई उस समय हॉस्टल पे लैंड की थी, उसी समय आप बाहर निकले थे?
नहीं, क्योंकि आई थिंक मेरे को जब मैं जो साइड पे था ना वो साइड हॉस्टल पे नहीं लैंड हुई थी। हॉस्टल के जो ग्राउंड फ्लोर है ना जैसे नीचे, वहाँ लैंड हुई थी। तो मुझे दूसरे के बारे में मेरे को पता नहीं, लेकिन मैं जहाँ लैंड हुआ था ना वो नीचे की साइड थी। तो जब वहाँ थोड़ा पेस भी था प्लेन के जब बाहर, तो जब जैसे मेरा डोर टूटा ना सब, तो मैंने देखा ना जब सामने कि थोड़ा इधर पेस है, तो मैं ट्राई कर सकता हूँ निकलने के लिए। तो मैंने ट्राई किया निकलने के लिए, तो फिर मैं निकल गया उधर, क्योंकि अपोजिट साइड पे था ना वो बिल्डिंग का वो था ना दीवार, तो उधर से कोई शायद नहीं निकल सका होगा, क्योंकि उधर पूरा उधर ही क्रैश हुआ था। और मैं जो जहाँ था वहाँ ही थोड़ा पेस था। फिर भी मेरे पता नहीं मैं कैसे बचा हूँ, क्योंकि मेरे नज़र के सामने ही सब 2 एयर होस्टल वो अंकल आंटी सब उधर ही सब।
आप पैदल चल के आए वहाँ से निकल के?
हाँ, और थोड़ा जब आग लगी ना मेरा लेफ्ट हैंड भी जल गया थोड़ा। फिर एम्बुलेंस मेरे को उठा लेके इधर आया हॉस्पिटल में।
All right, so as you heard and saw, that's the last survivor, Anushi, of that entire flight crash. And I mean, I cannot even imagine as to what would be going on in his mind right now. The visuals that he's seeing.
It's a big tragedy that we are seeing. 242 people and only one survivor from there. It's just weird how lives work.
I know, exactly. And it's just God's grace that has saved him, and hopefully he shall recover, both mentally and physically from this entire tragedy. All right, again, moving back to Ask Profit, our next question is from Dr. Sunil Kumar. BK is holding around 1,160 shares of Ujjivan Small Finance Bank at 28 and wants to increase the number of shares to average out for a longer term perspective. Samir, I'll come to you on this one. Do you think that's the right thing to do?
So Ujjivan is also a good bank. At the end of the day, they have applied now for their the comprehensive banking license, and once they get that, I think obviously they will be able to scale that business up and grow quite well, because we think the opportunity in the banking space is quite good. But if there's no specific reason to only add Ujjivan, barring him averaging, I think there are other stocks which could probably give him more upside in the quicker, maybe in the next 2 years than probably Ujjivan could. You can look at IndusInd, you can look at an IDFC First Bank, you can look at an RBL Bank. You can look at some PSUs like Canara Bank, which have corrected a bit today, Bank of Baroda, which have corrected today. So I think there are other banks, not specifically that you should only buy Ujjivan. It's of course not our top pick. Valuations, again, not challenging there, but they focus a lot on the lower segment, the microfinance and the micro housing and all of that segment, where NPAs have been relatively higher, and because of which the provisions have been increased over the last year, because of which profitabilities have come down from, I think, almost 1,200 to about 700 crores or something around those levels. I mean, I don't remember the numbers exactly, but they've come down quite a bit. And that probably could remain for one more year. So there are other banking spaces, but even Ujjivan over a 3-year period, I'm sure it'll be decent returns.
Okay, so that's the view that we are seeing for Ujjivan Small Finance Bank. But next we have a caller joining us, and this is Shankar calling us from Bengaluru. Hi Shankar, morning. How can we help you today?
Good morning, madam. I'm happy that you are taking all sorts of helping investors in an excellent manner. I really like it. And today I have one query on Schneider Electric Infrastructure. I'm holding 30 shares at 760. Today some correction is there. But considering the last 3-4 years performance of the company, I have invested now. So is it right time to buy, or we have to wait for the quarterly results and then proceed ahead? I'm a long-term investor.
Okay, Shankar, first of all, thank you for the compliments. Just want to understand your overall perspective on the stock. Whether you're waiting for the long-term approach, whether you're seeing for more 1 year or so. What's your position? You want to continue to hold this?
Long-term investor only, madam.
Okay, long-term. Samir, let me come to you for this one. Schneider Electric is the counter which is in focus. Wants to understand the overall picture and what's going on. He's also waiting for the results for more clarity. What's your stance on this company?
Sadly, today I've had a few companies ask me where I don't have coverage. So Schneider, unfortunately, is also one of them. So let Jatin please take this one.
Okay, Jatin, let me come to you then for this one. What's your view on Schneider Electric?
Yeah, see, overall, if I see the medium-term charts, it's forming a bullish flag pattern on the weekly, monthly chart. So now, if the investor has a long-term holding period horizon, I would suggest to, add on to the positions at crucial supports. Now, the levels of crucial supports are 688 to 647, which coincide with the 20 and the 40 week moving averages. So I think during this period of consolidation or during this period of volatility, if there is an opportunity to buy at these levels, that is 688 to 647, then you should consider to buy or add more. And overall, the structure is still positive, and we are expecting a move towards the all-time high of 900, 950 from a 1 to 2 year kind of a perspective. So continue to hold and add at 688 to 647.
Need to hold and add at lower levels is the view coming on Schneider Electrics. All right. Next question is from Pandu, who is writing in from Hyderabad. And this is a very interesting question because he is investing a hefty amount, that is 8 lakh rupees in Reliance Industries. He's saying he wants to do that and wants to know if this is a right time to make an entry for the next 1 odd year. Samir, I'm sure you have an answer on this one.
So if it's all your money in Reliance Industries, I'll say you got to diversify. But if you have other investments, and Reliance is something you want to add on to, I think Reliance is a great investment from a longer term perspective. Okay, I'll give you 3 reasons why I'm very bullish. First, the Jio launch, the IPO. So the telecom IPO. I think there will be value unlocking that comes through that, which will automatically drive the stock a little bit higher. 2, we believe the retail space is something that is not fully captured and understood. That is your B2C direct consumer goods business, because it's all under one large basket. And, they've got so much, so many brands, so much space that they have occupied. They're the largest, right? So once you see the consumption story in India picking up, Reliance obviously will be one of the big benefactors that come from this growth in the discretionary spend that will happen. And there will be a actual value re-rating or value look at for the retail part of the business. The third is they've talked about the new energy ventures, the clean energy ventures, which they've barely made a scratch in at this point of time. We believe that they will start placing out their orders for their solar parks soon. And that by itself will lead to increase in profitability and over a period of time, of course, because they have the panel manufacturing in place. They also have their Sterling and Wilson Solar, which will set up their solar parks. And then, of course, once the solar starts, the energy generated and the profitability will come through from that side as well. Plus, they want to get into the hydrogen space. Of course, hydrogen is still very early days. But once they have the green solar in place, then setting up the hydrogen manufacturing electrolysis plants is not so difficult for them. And they will be able to push that quite aggressively. And if hydrogen as an alternative fuel sees the light of day, which we believe eventually will have to when it comes to public transportation and logistics, and because electric may not be the easiest thing for trucks and buses covering long distances, hydrogen could be that play. They already have a good distribution network through their petrol stations where they could obviously start selling the hydrogen. So it's a long-term story, but we believe all of this will take time. If you have a 3 to 5 year view, I think Reliance is a great investment. There will be value unlockings and re-ratings that keep happening. And of course, their cash flows are quite good. So we believe there's no harm in investing 8 lakhs. If you have other investments, if it's only the investment that you want to make in the market, I say no, please diversify.
I knew this is the right question to ask you, Samir. With that, we're completely out of time with this edition of Ask Profit. Jatin, Samir, thank you so much for joining us and giving us all those insights on Ask Profit. All right, viewers, like I mentioned, we're completely out of time on this edition of Ask Profit. We'll all see you on Monday again with all your queries. But till then, stay tuned to NDTV Profit, because know your company is right on the other side of the break.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब्बास भाई सॉफ्ट स्पोकन तो है।
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make
Hello and welcome. You're watching KYC. I'm Harsh Saita. We'll today look at City Union Bank, and what I want to really know within this mid to small cap banking space is 3-4 things key which stand out for me when it comes to a City Union Bank. One, what's their growth strategy? Growth has been muted, has been weak. Last 3-4 years have been a bit of a drag, but does that change going forward? They've guided for decent growth. How sustainable, how long is really the question. The second one is they have a large geographic concentration, whether that is expected to change. Short term and more so long term. Is there a thought process behind changing that? Third piece is with regard to recovery pipeline. They've spoken a lot in their calls about how recoveries is going to outstrip slippages. What is the recovery pipeline? Their PCR has gone up, so where should your provisioning coverage ratio go, and all of those factors around asset quality, and whether the past, which has been slightly checkered in terms of provisioning, is now firmly behind them. Last off is with regard to ROA stability. Can they maintain that ROA at 1.5, and is there any upside potential to that ROA number? So all of that and more as we speak about City Union Bank. But first off, I want to quickly talk about the company and quickly get you perspective on where this company is from. It was incorporated in 1904. Tamil Nadu was its presence, continues to be a predominant presence in Tamil Nadu. It's one of the oldest and largest, or rather oldest private sector banks in India, can't be the largest. It operates around 875 branches, around 1736 ATMs nationwide, and has a very, very strong presence in South India. Out of those 875, 732 branches are in South India, of which 550 are in Tamil Nadu in particular. So it's got a large presence in Tamil Nadu. Let's also look at the branch mix now. Before we go to the exact states in which they have branches, I want to look and give you perspective on each of these. Rural is the lowest focus for this one, around 171 branches in rural. Metro is around 203, semi-urban is 215, and urban is 286. So a large part of where their presence lies is beyond tier 2 and beyond rather. Metro is something which they have the least presence in after rural. So that's broadly the mix, but it's a decent mix, to be frank. With an 875 branch count, that mix seems to be well shaped. In terms of branch geography, their maximum is in Tamil Nadu, as is evident. Then you have less than 10% in all of the others, you know, Karnataka, Andhra, Telangana, Maharashtra. But you look at that 550 out of 875, that's a very, very significant number in terms of the presence in Tamil Nadu. 60 to 70% presence, which is extremely large. The current strategy and how they're looking at business, they're looking at digital loan origination. That's what they are currently pushing. They have part of this is the credit assessment and risk-based pricing, which they are beginning to implement. They have BCG, and BCG has helped them implement digital lending initiatives. The bank is also focused on pre-qualified stroke unsecured personal and business loans. That's one place they are focused on. But now let's look at the loan mix, because that is essential to understand what the bank is up to. The largest focus, again here, the concentration is very large. The largest focus, 41%, is MSME. So when you're looking at the loan mix share, it continues to be very, very large where MSME is concerned. You can see that 41%. Then there are some others, agri, joint liability, non-agri, all of those start taking center stage. So those two pockets, agri and joint liability, non-agri, is around 30%. Again, the concentration, 70% of their loans, MSME, agri and joint liability, non-agri. That's 69 or nearly 70% of their loan book. So again, something in terms of the concentration that the bank has been rather lending to in terms of cohort is extremely sharp. Then you have some of the others, commercial real estate 7%, housing 5%, NBFC 2%, personal loan 2%, wholesale trader 2%, loan against deposits, retail traders, large industries, infra. Then you have all of these within the 2 to 1% bracket. But really, that concentration in those three buckets is what I would be most worried about. So, well, that's with regard to what the company is doing at this point. They were pulled up by the RBI a year or so back with regard to lower provisioning that they have done, and therefore the stock went into a long period of consolidation. The bank had to correct some processes. These are also systemic issues within the bank which were present, which now the bank claims they're out of the woods. I'd want to understand and get more clarity on that as well. But let's talk about the metrics first. What is it that we will be looking for? We'll start off with the income statement, the balance sheet, the operational metrics, as we always do when it comes to banks, and then we look at asset quality as well. Thereafter, we look at shareholding, street cred, street coverage, and valuations. We'll cap that up and we'll give you a rating out of 8 at the end of it. Let's start off with the income statement. Now, when you're looking at the numbers, FY22 to FY25, what is it that you're seeing as a viewer? You're just seeing an 8% NII growth, 2% operating profit growth, while provisioning has come down significantly. What you're on a higher base, of course, and hence I'm saying significantly. Otherwise, in absolute terms, it's just 13% lower on a CAGR basis. But profit is getting a lift because of that. So you want to, do you want as an investor, do you want profitability to come from lower provisioning, or would you want profitability to come from higher growth? And this is not a bank which is substantially large. It's a 50,000 crore AUM bank. What you would want is stronger growth. And that's not coming. That's not reflecting on the net interest income or on the operating profit for that matter. So therefore, we've given this a strong thumbs down. Provisioning has had its set of issues as well. I did say that. And therefore, again, even on the provisioning front, how stable is this number is something we'll ask. But that's how the last 3 years' numbers have evolved. FY23, FY24, FY25. So it's largely in the 500 to 550 range in the last couple of years, but FY23 again was elevated, the provisioning number. And that kind of drags the bank down as well. So all of that not adding up very well. And that's why you're seeing a thumbs down on your screen when it comes to the income statement. Not too happy, you'd want more with regard to the income statement. Let's look at the balance sheet now. Again, what you're seeing is an 8% to 9% growth on the advances front. The deposits have grown slightly better at 10%, and CASA is up around 11.5 odd percent. So maybe on the CASA front, maybe it's slightly better, but outside of that, you're not seeing growth. I mean, you're just about seeing a double-digit 3-year CAGR growth on the deposit number. Wouldn't you want more on a deposit base of 60,000 crore? For sure. And therefore, again, here, the numbers don't look very enthusing. You want a better number. The only piece here is the capital adequacy. It's poised at 24% to do decent amount of growth, at least going forward. Now, whether they capitalize on that or not is really the question. But at least the capital adequacy looks okay. They haven't done any equity funding round since a while now. So the balance sheet from that standpoint is okay. There's no dilution of shareholders' equity. But what you're otherwise seeing is just very, very low growth on an otherwise extremely low base. So maybe a lot more to be desired on that count as well. Now let's look at operational metrics and let's put this into better perspective. Look at the way in which your yield on advances has gone up, just about 50 basis points since FY23. Even your cost of deposits has gone up, and that's also to a certain extent due to the repo rate as well. You want to factor that in. Your net interest margin has largely been stable, so that's the impressive bit. 3.9, 3.7, 3.6 is largely stable net interest margin. What you're seeing on the cost to income side, it's seen a bit of a spike, but at least last 2 years it's been decently stable. But really the essence of it is the ROA. 1.46 to 1.55 is not a bad range to hover around, and they've done that for 3 years on the trot now. Mind you, FY23 was a year in which provisioning was elevated as well. So despite that, the ROA number doesn't look too bad per se. So it's been a steady kind of a number on the ROA count as well. Largely, we'd see this number as a steady number, and therefore we've given this a neutral rating where the operational metrics are concerned. Now let's talk about asset quality. This is where you start to see a little bit of improvement of a high base. 4.4% GNPA in FY23. FY24 it tapers down to 4. FY25 it tapers down to 3.1. So you're seeing that improvement year on year on the GNPA number. Clearly a thumbs up. You look at the NNPA number as well. It's largely in that kind of a bracket. And the NNPA number has come down from 2.4 to 2 to 1.3, as you can see on your screen. So a thumbs up when it comes to the GNPA and NNPA. I also want to quickly zoom in. Q2, the GNPA number was 3.5%. Q3, it was 3.36%. Q4, it's 3.1%. So you're seeing steady improvement even when I'm looking at the last 3 quarters in terms of GNPA. NNPA also very similar trajectory, 1.62, 1.42, 1.25. That's how the NNPA number has come down by in the last 3 quarters. So a thumbs up on that count where asset quality is concerned. Credit where credit is due. They've improved their asset quality. They've improved their provisioning coverage ratio, which is the coverage on the NPA number has gone up, which is again a positive. They've provided, they've over-provided, they're being conservative. All of those are positive points. Let's talk about shareholding now. Now, there isn't a single promoter in this bank, and therefore, you would want to look at what kind of institutional investors are sitting here. You look at the December 24 numbers, you look at the March 25 numbers, there are some numbers which are already sitting there in front of you. But let me quickly read out some numbers on an annual basis. FIIs originally were holding around 20 to 21% of the share capital in FY20, came down to 18% by FY22 and has risen back to 28% by FY25. So steep FII interest that we've seen over the last couple of years. DIIs, on the contrary, used to hold 30 to 35%. Holdings inched up in FY22 to 40%, and now they've tapered back down towards the 29 to 33% kind of band. As usual, the tug of war between FIIs and DIIs seems to be evident here in the shareholding. The public holding has been around the 42 to 39% kind of number, or maybe 43 to 38% kind of number. That's the kind of band that public shareholding has stood at, in particular with regard to this one. I want to also try and point out that there are some very interesting institutional investors sitting here. Let's pull out that list and we'll get perspective. There you go. And HDFC AMC holds around 9% and SBI AMC 8%. Capital Group is the other one, and Franklin India. And again, then you have a combination. You have Axis, ICICI, all of those mutual funds, AMCs holding roughly 8 to 9%, including a Kotak AMC holding around 8 to 9% stake in this one. So you've got these clutch of investors and AMCs which really seem to like the stock and therefore have decent amount of holding in it, which kind of gives you some bit of comfort, right? That you've got these large institutional investors which are holding large stakes. Not that it doesn't mean that they will exit at some point. They might. But what I'm saying is it gives you comfort. It lends comfort that there are several of these large ones, and therefore there's something that they are seeing in terms of positivity with regard to the bank. And therefore, we've given this one a thumbs up because of the uniqueness of the way in which this is structured. Let's look at street cred now. Again, an interesting picture. You look at the 1 month returns, it's up 1.5%. 3 months, it's up 16%. 6 months, it's up 6%. And 1 year, it's up 31%. All of this looks good till you zoom out and look at the 5-year picture. That's where the problem lies. 43% returns in the last 5 years is a far cry from satisfying, and therefore again you want to see more with regard to the performance over the longer period, and hence we've given this one a neutral. Now let's look at the street cred. What is it, the street coverage. What is it that the analysts are suggesting? There's only one sell call, the 26 buy calls, and the average upside is just 10%. Again, we'll give this a neutral because what you want to see is more. Have you already seen a larger part of the rally having been done or not is really the question. While there are 26 buy calls for sure, the upside is not as compelling at this point. I want to also look at the valuation picture because that will also give us a clearer picture as to how this is stacking up in terms of peers. You look at City Union versus some of the others. Now I understand that the ROA picture for some of the others may be different, and that's something that you must also note. But the price to book at 1.5 times and the recent stock rally, again, the valuations will likely price in a decentish growth and a 1.5 to 1.6% ROA. Can it beat some of those expectations will be the question. And before I go across to N. Kamakodi, who's joining us, who's the CEO at City Union Bank, who's joining us, before I go across to him, let's quickly stack up the KYC ratings in front of us for our perspective. The income statement and the balance sheet are a thumbs down. You want more with regard to growth. Operational metrics are a are a neutral. Asset quality is a thumbs up. Let's look at shareholding, street cred, street coverage, and valuations. All of that stacks up to a 4 out of 8 on our KYC ratings for a City Union Bank. Now let's go across to N. Kamakodi, who's joining us. Mr. Kamakodi, always good speaking with you. Good morning. I want to start off by asking you that you've guided for around a 200 to 300 basis points higher growth than industry. What's capping your growth at this point? I mean, you're well capitalized, your PCR has gone up, you should be happy with the way asset quality metrics are evolving. So what's capping and what's keeping you cautious with regard to growth on a loan book which is 50,000 crore?
See, if you look into any bank, the actual mistakes are made in good times. So we had always maintained, like say, we are test match players. We are not a short-term player, like where we want to have, like say, a 10% over and above the industry and take it and all. We take a cautious, like say, a treaded path, where like say our growth rate almost like say a few percentage point over and above the growth rate of the industry, so that like say we have a total comfort over the risk metrics and also on the growth per se. So this had all along been our practice. This is how the bank had stayed profitable and efficient for 120 years over the since it was like say started. So we continue with the basics, so that like say we take a growth like say about 2 to 3% over and above that of the industry.
But what will help you grow faster, or will you just avoid growing faster just because you're being cautious? Other banks have proven that they can grow faster along with being cautious with regard to asset quality. So what's stopping you from doing that? Because you've already ironed out some processes as well within the bank.
See, basically, all the banks which you say, like say, they had their growth for like say 2 decades or 3 decades. But particularly when a bank has a larger, like say, time horizon to take care, you might have already seen all the traditional banks which tried to accelerate the growth. The experience had not been that good. So it will be a measured growth over and above that of the industry. That's why we survived without any issue during the your AQR period or during the asset quality cycle of your corporate consortium lending or your infrastructure lending period and things like that. You had a period when the maximum growth happened through the unsecured segment, which we have kept ourselves away. So we will continue with our long-term proven strategy of, and we don't burn the capital also unnecessarily. So we take a decent return, both in terms of ROA and ROE, measure the growth, like say, slightly above that of the industries. We take a relatively cautious path, which has been a proven thing. And this is our strategy, which is we have demonstrated and communicated in no uncertain terms.
Sure. So a steady growth that you will likely see, will it be a consistent growth as well? Are you expecting to see a 13 to 15% kind of growth clip continue for the next 5 years, and therefore will you double your advances book in the next 5 years? Is that the way to look at this one?
Yeah, we had been that doing that way till the COVID. After that, we had a round of, like say, some setbacks in between. After that, we are getting back to that rhythm, and this is how we are doing. Like say, if you had a chance to look into our number up to 2020, that is how we had built up our franchise. Across all matrices, we had that 15% plus growth for about 15 years continuously.
Okay. When I'm looking at the other piece that kind of draws my attention is concentration, both in geography as well as in loan mix. Is there a thought process to diversify from that, and how quickly can you do that?
How do you say on loan mix?
So MSME and MSME agri are a predominant part of your loan mix. You also have joint liability, non-agri, which is 12%. So when I'm combining those three, it's amounting to 70%. Do you believe that that's too concentrated, or you feel that you're comfortable with that?
See, within that, the exposures are granular and don't call it as a concentration. Like say, even if you look into the MSME metrics, the MSME within that, it comes from the different types of industry. So I don't agree with that point of view of, like say, viewing it as a concentration. But yes, we had been a traditional Tamil Nadu-based bank. We just reached a level of, like say, saturating Tamil Nadu. So over the last 5 years, about 60% of our branches got opened in non-Tamil Nadu. Slowly and steadily, we are expanding to non-Tamil Nadu state. So, like say, maybe like if you look into the next 10-year basis, the Tamil Nadu contribution will come below 50%. This is how traditional private sector banks have expanded in the past.
Okay, and is there scope for ROA expansion? And I ask you this question because when you're looking at your cost to income, it's seen a bit of a spike. Do you expect these levels of cost to income to sustain on the growth that you're now expecting, or do you expect cost to income to start to aid your ROA? Just trying to understand that metric.
Basically, like say, before making investment in the capacity expansion, we used to have a cost to income ratio between 40 and 42%. And at the current level, once, like say, as we had already communicated during our earlier conference calls and all, we had created certain capacities in certain lines of activities, like including retail and other areas, where we expect like last year we had taken P&L impact, and this year it should be getting into the what you call your break-even period, or next year itself they will be starting to contribute for the incremental profitability, when you will start seeing the like say from next year, I mean 26-27, when you will start seeing the cost to income ratio coming down, and we expect the cost to income ratio to stabilize around 45% over a period of 5 years, like by reducing about 1.5% every year or so. And to directly answer your question, how to see ROAs expanding, if the good credit cycle extends for, like say, another 4 to 5 years, so our once we get below the 0.5% net NPA level, the incremental credit cost, already we have reached a stage where our NPA recoveries are more than the NPA slippages for the past like say 3-4 quarters, which means that the incremental provisioning that is getting made or directly utilizing for reducing the net NPA percentage and improve the coverage ratio, which you have already started seeing. So when that number further reduces, probably like the credit cost may further reduce, and whatever savings we make in the credit cost, it will get added into the ROA. So another 10-20 basis point to improve in the next 3 to 5 years time frame, there is a visibility.
Okay, okay, point taken. Thank you so much, Mr. Kamakudi, for coming in, speaking with us and helping us decode City Union Bank this morning. But completely out of time on this edition of KYC. Before I leave you, I want to quickly look at the KYC metrics one last time. That's how the KYC rating parameters stack up in terms of thumbs up, neutral, thumbs down, and that's how the rating stacks up. But with that, completely out of time on this edition of KYC. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब्बास भाई सॉफ्ट स्पोकन तो है.
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to
ICICI?
invest?
Residents of Tehran woke up to loud explosion and Israeli Air Force launched airstrikes across Iran targeting nuclear and military sites. In response, Israel declared a state of emergency, preparing for possible missile and drone retaliation from Tehran. Oil prices surged over 13% following Israeli airstrikes on Iran, sparking fears of supply disruptions amidst escalating Middle East tension back home. Barring ONGC, all oil-related stocks are trading with cuts. Markets off day's lows, however, trades with a negative bias. Nifty moves past the 24,650 mark while Sensex cracks over 650 points. Nifty defends top sector gainer. Prime Minister Narendra Modi is visiting the site of Air India's Dreamliner crash that killed 241 people in a day, earlier marking one of the worst air disasters in recent times. The Prime Minister has also met the crash's lone survivor, Ramesh, at the hospital. Meanwhile, sources tell NDTV Profit that Civil Aviation Ministry may temporarily ground Boeing's 787 fleet following the pending investigation of Air India's maintenance practices to be under scrutiny. Hello and welcome to Markets at 12. I'm your host Mahima Vachajani, and before we move on with the show, let's take a quick look as to how the markets are doing. Well, the markets certainly don't like uncertainty, of course, but markets are off from its day's lows. Let's pull up the Nifty 50. It's trading about 0.8% lower. The chart of the Nifty 50 is almost flat since the start of the trade. Let's pull up Sensex as well. Sensex also trading with cuts of about 600 odd points, over 600 odd points, down by about 0.81%. Let's pull up up the Nifty Bank and see how that's doing in trade today. It's almost down by about 1% odd, down by about 600 odd points. Let's also pull up the broader markets, how they are faring. The broader markets are slightly doing better than that of benchmark indices. The mid cap 150 seeing cuts of about 0.5 odd percent, small cap 250 also seeing cuts of about 0.5 odd percent. Let's pull up the Nifty 50 constituents and see what counters are in pressure and what counters are doing well. Well, some counters that are under pressure includes your Shriram Finance, SBI, some pressure seen in Adani Ports, Bajaj Finserv, Ultratech seeing cuts of about 1.7 to 2 odd percent, but some counters that are in green, and there are very few counters that are in green. ONGC is one of them, and an exception in the oil and gas space, up by about 2 odd percent, followed by Bharat Electronics, Tech Mahindra, Sun Pharma, Wipro, Apollo Hospitals up by about 0.5 odd percent. Let's also pull up the advanced decline ratio and see how skewed that ratio is. In fact, there you go. The line, however, has been narrowing when it comes to the overall NSE total market universe, but the ratio is quite skewed. It's almost 1:3 when it comes to advances versus declines. So there's 1 advance versus 3 declines in the markets today. All right, let's also pull up the sectoral heat map and see how sectors are faring today. I think it's only the Nifty Defense that's in the green, up by about 1.7 odd percent, and this is because of the entire geopolitical tension that is going on. And there is Nifty IT, which is seeing gains of about 0.3 odd percent. Nifty CPSE also in the green now, up by about 0.3 odd percent. But Nifty PSU Bank, Nifty Finance, Nifty FMCG, Nifty Bank, Nifty Metal all under pressure, down by about 1 odd percent. Let's also pull up some specific names and see how these counters are faring today. Let's pull up the BSE 500 in fact and see how counters are buzzing in trade today. Well, something that's not doing well, you have counters like NMDC, Colgate, which is down by about 2 odd percent. There's Tata Teleserve, Canara Bank, Interglobe, IGL, Metro Brands all under pressure, down by about 3 to 4 odd percent. There's Jubilant Engraver on the back of the block deal is up about 11 odd percent. GE Shipping, Oil India, Finolex, Cables, Mahindra Life, all counters doing well in trade today. In terms of the Nifty Defense, let's pull up the counters on the Nifty Defense and see what are the counters actually buzzing in trade today. There you go. Except for one counter, all of these counters trading in green. There's Unimec, Zentech, Garden Reach, Paras Defense and DCX System, all buzzing in trade today. Now, let's move on to the first story of the day, that is your entire crude impact that we're seeing because of the Iran war. And we're seeing this because crude spiked to almost 13% in trade today, and there are a lot of sectors that use crude and crude derivatives as their raw materials, and these sectors might be impacted because of the overall war going on, because crude supply will become more expensive. And some of these sectors include paint sector, of course, is the sector that uses crude derivatives, and almost 30 to 35 odd percent of total paint raw material cost comes from crude. So this going up of crude prices will overall impact their margins. Of course, not to forget, paints industry already is facing a lot of headwinds. Stocks in focus could be something like an Asian Paints, Kansai Nerolac, Indigo Paints, Berger Paints. There's aviation, of course, because ATF will get expensive, your aviation turbine fuel will get expensive, and margins will be impacted for counters like Interglobe Aviation as well as SpiceJet. Tire companies will also see an impact because 30 to 35% of their raw material is made up of crude, that is synthetic rubber, chemicals, carbon black uses crude as derivatives, and this could also impact going forward their overall raw material prices going up and margins under pressure. So stocks that could see impact could include your Apollo Tires, JK Tires as well as Seat. Lubricants will also see an impact because crude oil derivatives like base oil and additives are used here, and they generally account for 40 to 50%. Your base oils generally account for 40 to 50% of their raw material. Gulf Oil, Castrol India might get impacted because of this. There's also plastic and packaging which might see impact because polymers and polyethylene will see an impact as they are direct derivatives of crude, and a rise in crude could lead to a margin contraction here as well. So some counters in focus on the back of this include Polyplex, Uflex as well as Jindal Poly. So these are some of the counters that one must keep in mind where crude prices of course are considered, but all of these companies generally have a derivative that is taken, for 3 months at least. They have a stock which leads to 3 months period. So the impact of this might be seen in Q2 for all of these counters. All right, so this is with regards to where oil prices stand, and the reason as to why this is happening is because of the Israel and Iran conflict. And we have Anushi joining in now, talking about the Israel and Iran conflict and how it may impact the entire shipping space via the Strait of Hormuz. Anushi, what are you picking up?
So the Strait of Hormuz, if we are looking at that point, is very important for not just the global checkpoints that are there, but also for India as a standpoint. Now, why is it important? Potential disruptions could lead to shipping disruptions throughout the global chain supply that we are looking at. The biggest impact seen in the oil and gas sectors, and this is from the Persian Gulf that we are looking at. Do note that 1/3 of the global seaborne oil moves through the Strait of Hormuz, so that is an important point that we should keep a track of. Now, Strait of Hormuz primarily exports routes all the LNG exports from Qatar and UAE, and taking Qatar and UAE in consideration, they account for about 20% of the total global LNG trade. In fact, 2/3 of India's oil and half of its LNG imports flows via this route that we are looking at. So India will have to source its imports from alternative countries and shipping routes if they close this route or the escalating Iran and Israel tensions that we are looking at. Now, what would be the impact of the shutdown? First, crude prices will be increasing significantly. Even the Jefferies reported, the JP Morgan report did point out that this could increase to the levels of 100, about the 100 to 120 levels also. While that is a low risk event, that is something that we do have to keep an eye out for. Shipping companies may also see higher shipping costs. Insurance related costs would also increase due to this conflict on the impact that would be faced by these shipping companies as well. Do note, just a few months ago, OPEC plus crude output has also, OPEC countries have agreed to hike crude output in July. Saudi seeking further output increase in August, so that also stands out as a point for the volatility that could be faced for these crude oil prices out there. Which companies will see the impact now? Now, negative impact would be seen on the counters like Petronet, LNG, IGL and MGL. This is due to the increase in the pressure in the margins due to the increase in the crude oil prices that we can see. While for the right now, shipping companies, the amount, or rather the quantum of how it would be impacted on these moves is something that is yet to be ascertained. We do have to keep the shipping companies also on the radar. So these are some of the counters which would be impacted, and how Strait of Hormuz is such an important checkpoint for the overall shipping sector for the nation as well as for the global supply chains.
All right, thank you so much for giving us those insights, Anushi. In fact, expecting how this entire thing will play out and crude prices to cool off, says Dinshaw Irani of Helios Capital Management. Listening to the conversation where he spoke about the geopolitical impact of crude price surge.
So basically, I don't think this conflict is going to have a long-lasting issue. As hopefully it will get sorted out pretty soon, and that should stabilize things. But and probably crude prices also will come back to normal. They're already at $75, $76 to a barrel, which is bad news for us. But fortunately, we have a buffer in the form of a very low inflation. So maybe they'll add some percentage points to inflation. And you're right, and you rightly pointed out that actually that geopolitical tension, apart from the crude, I don't think they'll have much impact on India per se.
All right, we also spoke to Lynn Alden, the founder of Lynn Alden Investment Strategy, about how the entire crude impact will take place. Listening to what she had to say.
As far as global markets are concerned, one of the biggest impacts is going to be what happens with the oil market, not just Iran's production, but anything that they could strike around them as well. And so there's numerous factors to consider all at once here. My expectation is that the 70s are more reasonable going forward. There are outlier scenarios that could drive it much higher if there's a major supply disruption. Those are hard to predict in advance, but I think the base case is higher. We also see that at current prices, U.S. shale oil production is gradually rolling over, and so that starts to, over time, limit supply and potentially put a floor under some of this. So in the near term, it's hard to say, but I do think that we probably have seen the lows in oil, and it's probably flat to up would be my base case expectation.
Right, and rising crude prices not looking sustainable, says Gurmeet Chadha, the managing director, the managing partner and CIO at Complete Circle, and he also explained about how this will overall have an impact in India. Listen into the conversation where he speaks about Iran and Israel tensions.
It's now been almost 4 years since the Russia-Ukraine conflict started post-COVID. And something or the other keeps coming. I think this one looks a little more in terms of the ladder of escalation, because they've actually targeted, the commanders of the Iran army as well as the nuclear side. So, clearly the objective is very clear. And I think at such large-scale attack would obviously have, while I'm not a geopolitical expert, but with some US backing, and Trump has been talking about it for past couple of days. So my sense is I go by the old template. I'm not an expert who can tell you how much this will escalate. But if you go by history, especially last 4 years, any such correction due to things which are non-India related have proven to be a buy on dips kind of a thing. But things can, as I said, quickly escalate, even de-escalate, depending upon how the situation does.
Okay, we also spoke to Peter McGuire, the CEO of AustraliaTrading.com, about what will be the geopolitical impact of crude price surge and how it will impact India's crude oil prices. Listen to what he had to say.
If you look at price, and let's look at there first, it's been up nearly 12% as far as a super spike on crude. You've had WTI really ratcheted up, and so has Brent. So there's the first part as far as price. Now it's come back to around about 8 or 9% up. So it's given up some of those big blowout as far as gains. If you're looking now from a geopolitical standpoint, the impact of this is, first question, will there be retaliatory action from Iran, and how will that be positioned? Is it going to happen now, or is it going to happen over the next couple of days? Is this going to be a long drawn out wartime, or is it going to be something compressed and we're going to see no further action in 24 or 48 hours? That's the unknown. And does the US get involved in this, Tamana? So there are many moving parts that need to be, I think, worked through until we get to that point.
All right, so that was Peter McGuire talking about how crude prices will have an impact. Now, shifting focus to one of the lead stories of the day, that is Air India's London-bound flight AI-171 crashed in Ahmedabad yesterday, leaving 241 dead. While the cause of the crash is yet to be ascertained, it is brought Boeing back into the eye of the storm. Prime Minister Narendra Modi also visited the place earlier in the morning. My colleague Aishwarya joins in with the ground report. Aishwarya?
Hrishikesh Patel, Gujarat Health Minister, is going to shortly address the press conferences. What we've been told, he just entered the trauma center, and let me show you these visuals from the civil hospital. Amid of the heavy security, there has been these patients who have been treated, who were injured badly yesterday at the hostel where undergraduate doctors were having lunch when the aircraft crashed. And this is where Prime Minister Narendra Modi was, along with many others and the senior officials who met the survivors and the family members of the doctors as well. There you can see this notice over here at the gate of the trauma center, 171 Air India. Relatives of passengers are requested to get the information from Kasauti Bhavan BJ Medical College building, and they have been told a specific desk had been organized for them, the information center, where all the details can be received. And this is a place where the DNA samples would be also given, so that matchmaking can happen as soon as possible, and those bodies can be identified so that they can be dispatched after identification. Of course, for the preservance, they had been kept at a separate location here at the civil hospital as well. But of course, Prime Minister Narendra Modi meeting the lone survivor over here at the civil hospital, and to get the official and authentic information as to what is the update of the doctors who had been injured, the bodies recovered from the hostel over there. Hrishikesh Patel, the Gujarat Health Minister, has just gone inside at the trauma center after conducting and taking a brief from the doctors. He would be shortly addressing the press, is what we've been told.
All right, the visuals for sure are very disturbing, and sincere condolences to the families who've lost their family members as well as lives. Now, India is also considering a safety probe on the Boeing's Dreamliner series. The Ministry of Civil Aviation may even ground the ill-fated Boeing jets, and Sessa joins us with more details on that. Sessa, what are you picking up?
The Ministry of Civil Aviation is considering a safety review of the domestic fleet of Dreamliners following the devastating crash of an Air India Boeing 787 aircraft, which claimed lives of 241 out of the 242 people that were on board of the London-bound flight, which is seen as the deadliest air disaster globally in a decade. Sources say that as a precautionary measures, authorities are likely to look at the possibility of temporary grounding of all Boeing 787 aircraft, with initial safety inquiries underway. Several stakeholders, including Tata Group, Boeing India, the US National Transportation Safety Board, as well as the Federal Aviation Administration, are engaged in discussion. A final decision hinges on the investigation's final findings. Meanwhile, Air India, which operates 34 Dreamliners, the largest fleet among Indian carriers, is also likely to face scrutiny, especially regarding maintenance practices. The crash has prompted international attention, with the NTSB leading a team of investigators from the US alongside Boeing and engine manufacturer GE Aerospace. Meanwhile, the Indian Aircraft Accident Investigation Bureau is also probing the incident, with a preliminary report expected in about a month's time. Now, this particular tragedy is, not only raises questions about the aircraft's safety, but may also lead to a global review of Dreamliner's safety protocols as authorities seek to prevent such disasters in the future. We will keep you updated as the investigation progresses. Back to you.
That's a critical information that is coming in from Sessa's sources, and this is exclusive to NDTV Profit. Now, just to give viewers a perspective as to how many Boeing aircrafts does Indian Airlines own, Indigo has around 14 Boeing airplanes, out of which 2 of them are leased and 12 of them are owned, that is their B737 model. For Air India, 27 Dreamliners Boeing aircrafts are owned by Air India. Total Boeing aircrafts owned by Air India is roughly 58. October 2012 was the first time when Air India actually bought the first aircraft from Boeing, because Indigo till now also has majority Airbuses in their entire fleet. Air India has Boeing aircrafts that include the series of B787 and B77, that includes your 200LR as well as 300LR. And the total order book, that's very interesting, because the total order book of aircrafts which are already ordered is 570, out of which 220 are of Boeing aircraft. So we'll have to see as to how this also changes for Air India going forward. For SpiceJet, they have the Boeing 737-700 line and the 737-800 fleet as well, and they own around 32 Boeing aircrafts as of June 24. For Akasa also, there are 29 Boeing aircrafts that they own. This is from the series of 737 MAX aircraft, and the firm has also placed order for 226 more Boeing aircrafts going ahead. So this is also something critical to watch out for, because we'll have to see as to how now orders for Boeing go ahead and change. All right, so that's with regards to where the entire airplane stack stands. But Ahmedabad air crash tragedy may be India's most expensive aviation claim, with potential liabilities translating to upwards of over 2,000 crore rupees. My colleague Pallavi joins us with more details on that.
Right, so like you said, yesterday's tragedy can actually turn into India's most expensive aviation claim. Now, typically how it works is that airline fleet insurance policy covers risks such as the airline parts, spare parts, the aircraft hull, and liabilities to passengers as well as third parties. Now, yesterday's incident is expected to trigger claims both in terms of the liability section section as well as the hull insurance, because we saw a total loss of the aircraft as well as the fatalities. Now, the aircraft damage will be covered under the aviation hull all risk section, which ensures the valuation of the aircraft, including the spares and the equipment. And according to industry experts we spoke to, this valuation could range anywhere between $210 million to $280 million. Now, in fact, one of the people we spoke to was Amit Agarwal, the Chief Executive Officer and MD of Howden, India. And he explained that the aircraft which was involved yesterday was in fact insured for approximately about $115 million. Now, coming to the liability section, which could very well be the most significant component of yesterday's loss, could amount to millions of dollars. This section covers the airline's legal liabilities to pay to passengers as well as third parties, and this includes medical expenses, cargo, baggage loss. Now, the fact that the aircraft crashed into a civilian compound will also mean substantial third party losses. But let's remember that these are estimates at this point, and what the figures will be are still to be ascertained precisely. But how this typically works is such losses are generally split between multiple reinsurers. Airline flight policies are often placed on a facultative basis, and they involve several participants. So that's what it is. We're speaking to more people to ascertain these numbers further.
All right, thank you so much for breaking that down for us, Pallavi. Now, shifting focus to some stock-specific action, and we have a lot of order wins and a lot of stocks buzzing on the back of order wins, and Jasmeet joins us with more details on these stocks. Jasmeet, what are you picking up?
Yes, well, NBCC, you see NBCC received work orders in 4 states, and the order is valued aggregating somewhere between 500 crores. The order is for construction of permanent campuses, while the next one is Torrent Power. The arm of Torrent Power, the Torrent Green Energy, received the order letter of 2,650 crores. This is the order for 300 megawatt of wind projects, while this project needs to be commissioned in next 24 months. The third on my list is Crompton Greaves. They received an order worth 101 crore, and the order is for commissioning 4,500 off-grid solar projects. These are basically solar pump projects, you can say. And this order is received from Maharashtra Energy Department Agency. The period for this project is 90 days.
Thank you so much for breaking that down for us, Jasmeet. All of these counters buzzing on the back of order wins. Now, the next focus is on L&T Finance. Now, UBS came out with a note on this particular counter. They've downgraded the counter to a neutral stance, but hiked the target price a bit to 210. What they're saying is that there has been a 39% run-up in the stock price in the last 3 months, and stock prices are in improvement on the back of the overall improving of business. The stock has reiterated a 1.7 times PBV versus that of 1.2 times of a 5-year average, and they expect loan book CAGR to grow at around 20% and PAT CAGR at 16% between FY25 to 27. They expect a decline in MFI share from 27% to 24%, and they are valuing the stock at 1.8 times FY27 PBV. So this is the overall view as to how L&T stands and why UBS has downgraded the counter. We also had an interesting data that came out from the mutual fund Amphi data that came in, and there are reports now suggesting as to how this data has fared and what stocks and sectors have mutual funds bought and sold. There was high exposure seen in counters like industrials, auto, transport and metals, and lower exposure was seen in financials, utility, oil and gas as well as healthcare. In terms of stocks that were bought most in the large cap space, there was buying seen in ITC, Swiggy, SBI, NTPC as well as HDFC Bank. In the mid cap space, buying was seen in IDFC First, SAIL, VMart, Suzlon, Union Bank. Small caps saw buying in Sagility, NBCC, Ujjivan Small Finance Bank, RBL and Bandhan Bank. And there was selling seen in large caps like Samvardhana, Coal India, NTPC, BEL and Bank of Baroda. Mid cap saw selling in Nykaa, ABFRL, NHPC, Indian hotels, and small cap there was selling seen in Utkarsh Small Finance Bank, HFCL, Paradeep Phosphates, Delivery and Reddington. And interestingly, the overall cash levels in terms of mutual fund equity schemes was also down by about 50 basis points. Cash level grew for large caps and mid cap mutual funds, but there was cash levels decline for the multi-cap fund as well as counters like thematic, sectoral, dividend yield funds and focus funds as well. So, this is with respect to how mutual funds bought and sold stocks in the month of May, but with that we are completely out of time on this edition of Markets at 12, but stay tuned to NDTV Profit for more news and updates on the other side.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब्बास भाई सॉफ्ट स्पोकन तो है.
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in flames. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
But you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Dadia, and with me is my colleague Varsha. Good afternoon, Varsha. Clearly, a very interesting day of trade because not everything which is good news which is on the streets right now. You have geopolitical tensions with the Israel-Iran war, which is impacting overall. Apart from that, the Ahmedabad Air India plane crash is something which is concerning as well. But as usual, the business needs to go on, and that's what we're doing at NDTV Profit. If you see in terms of markets, a good recovery that the markets have staged in today's session. If you pull up Nifty 50 on the screens, you'll see 0.7% lower. We hit a low of around 24,473 From there on, you've seen Nifty, which has come up to around 24,700 in trade. Let's quickly look at the other sectors in terms of Bank Nifty as well. That's remained absolutely stable as the way it started off the trading day. Mid-cap has also staged a good recovery. Now it's seeing gains, cuts of around 0.6%. It actually opened up with cuts of around 1.5 to 2% in trade. Overall, in terms of Nifty contributors, HDFC Bank, ICICI Bank, Reliance Industries, SBI, these are the ones which are putting pressure, but what's holding up is a BEL, Tech Mahindra, but marginal moves coming in there. ONGC on the back of the crude spike is what is up in trade. Let's quickly pull up the advance decline ratio. There you go, just 600 advances versus almost 1,600 declines is what you're seeing in terms of overall stats on that front. We will look at other companies which are being impacted on the back of crude, on the back of the geopolitical tensions where shipping companies are in focus. But IT is the sector which is up in trade now. Defense, 1.5% up move, but it's absolutely a sentimental move, and defense as a sector was the one which actually saw a lot of selling pressure over the last couple of trading sessions. So that is recouping that lost ground. But PSU Bank Index is down in trade. Bank Nifty, metals, FMCG, these are the ones which are taking a beating as we speak, Varsha.
Yes, and Hiral, when it comes to broader markets also, the pain is quite visible there. If you see Nifty mid-cap 150 is down almost 0.6%. Let's see, who are the losers when it comes to mid-cap 150. You have IRDA, you have IGL, Metro Brand, CRISIL, which are on the losing end when it comes to mid-cap 150. Though, even if I were to talk about small cap 250, let's see what small cap 250 is doing. It's down. Again under pressure. Now on the loser side you have Tata Tele, you have PNB Housing and Prism John as well, which are on
moving in trade, right?
Moving in trade, yeah.
In fact, we'll be joined by the management of DCM Shriram, but let's quickly address the flashes at the bottom of your screens. You have External Affairs Minister S. Jaishankar, who's commenting on that. He's saying in touch with UK Foreign Secretary and Foreign Ministers of Portugal and Canada regarding the plane crash. That is what is coming in from S. Jaishankar. Apart from that, the other commentary he said is, that's the only line that is flashing at the bottom of your screens. And this is to take into consideration the foreign internationals or, commuters that were on board Air India flight that crashed in Ahmedabad. We will try getting you more details on that front. And on Israel-Iran conflict, Israel is intercepting Iran drones without US help. That is what reports are indicating to Bloomberg. That's what we've been picking up so far. Drones that are being intercepted in Jordan and Syria airspace as we speak. In fact, a lot of support that will be going on this front, where Iran is demanding urgent UN Security Council meet on the Israel attack. Let's see how things pan out on this one. But you have seen a sharp recovery as well with regards to where oil prices go on the back of this. So, there is that, good knee-jerk reaction that is being resolved. So far, this will be a space we will be tracking pretty closely. And taking into consideration the recovery in Brent prices, you're seeing Oil India, ONGC, which is seeing a slight dip from the day's highest level. So you can understand the kind of correlation all of this have as well. But let's quickly welcome in Amit Agarwal, Executive Director and Group CFO at DCM Shriram, to discuss more. Welcome to the show, Amit. And firstly, 100% stake purchase in Hindustan Specialty Chemicals, and this is coming in at approximately, if I'm not mistaken, 375 odd crores. Firstly, a pleasure to speak to you. If you could help us understand the deal details and how does this benefit?
Yeah, so we are acquiring this company for 375 crores, which includes repaying the entire debt of the company and the balance for the equity. Now, the other important is about 3.5 kilometers from our site at the chemicals complex that we have in Gujarat. So I think there are a lot of synergies that are coming in. The other is that, and the most important is that it gives us a jump start into this segment of advanced materials, wherein, if you remember, about a little over a year back, we had taken approval from the board to get into this business of advanced materials. Given that, this is a high growth business, growing at about 11% in India, globally also at about 4 to 5%. which is a good rate at a global level. That is one. Second, for DCM Shriram, it's moving up the value chain. So we are the second largest producers in the country for caustic soda chlorine. We also manufacture epichlorohydrin, ECH, which is a key raw material for manufacturing epoxy. And the plant that we are acquiring manufactures a liquid epoxy resin and is also into derivatives. So we are actually, by this acquisition, we are able to cover up the entire value chain. And the idea is that we want to further expand, and this acquisition has a surplus land as well of almost about 37 acres, which will ensure that in future we can expand this business significantly. So that's the whole rationale of getting and buying this company.
Amit, hi, this is Varsha here. A pleasure to have you. Amit, the target company, that is Hindustan Specialty, is actually a loss making. In the last 3 years, we have seen company making losses. Two questions. What's the reason behind this losses, and when are you expecting the tables to turn around?
Yeah, it's a very important question. I think one, we should be profitable in next 1 year. I think that's we are very clear on that. The other, why this company is making loss, as I mentioned, they have huge debt, and if you see the difference between their operating profit and PAT, there's significant difference. So their EBITDA in FY25 was about -8 crores. The reason for negative EBITDA, a couple of reasons. One, their capacity utilization is low, around 60%. So I think that leads to lower economies of scale, efficiency, and things like that. They also, had issues in working capital. They had, they don't have a fully forward and backward integration. Now with DCM Shriram coming in, we will bring in efficiencies. We'll bring in the backward integration in terms of ECH. And obviously, the funds and all that. So I think we'll be able to turn it around pretty fast.
That view. Also, so Amit, now beyond this acquisition, if I were to think, a little long term, when it comes to what is your long term strategy when it comes to advanced material segment, how large do you anticipate this segment to become as a percentage of your, overall revenue in next maybe 3 to 5 years?
Sure. So I'll give you a 3-year plan, which is very clear with us. So let's say the current capacity of liquid epoxy resin with Hindustan Specialty is 17,000 tons per annum. We will take it up to about 50,000 plus in next 3 years. On derivatives, their capacity is another about close to about 18,000 tons per annum, which also will grow by almost about 4 to 5x. So then that's the plan, and therefore it will become a significant contributor to both top line and bottom line for the company. And more, as what is more important to look at is that we are de-risking our chemicals business, where let's say about 2 years back we were only into caustic soda chlorine. Then we have hydrogen peroxide, we have epichlorohydrin, and now we will have epoxy and the derivatives. So I think it's a complete value chain, and therefore the de-risking for the business.
Any kind of number that you can help us with, Amit?
I wouldn't give you the numbers right away, but this business generally has a capital output ratio of in the range of 1.2 to 1.5, and the margins are in the range of around 10 to 15%.
Okay, and also, in Feb 25, if I'm not wrong, in Feb 24, you had committed 1,000 crore of investment in epoxy and advanced material. Now, how this 375 crore acquisition will fit into this broader investment plan, and will there be any further investment that you will be doing?
Yeah, so as I mentioned, it is all within that ambit of 1,000 crores, which the board had approved. So we invested about 375 crores. As we speak, we will be investing in this acquisition. And the expansion which I mentioned about, which is taking the liquid epoxy resin capacity to approximately 50,000 tons per annum, and the other derivatives capacity increasing by 4 to 5x, that should take up another 450 to 500 crores. So I think we will be within that framework and grow the business.
Also, Amit, I think I just wanted to have a number on that, because on your overall business, what is the value added contribution currently and where you want to take that contribution in next 2 to 3 years, because I believe those products would be having a high margin potential, and that would lead to increase in margin going forward.
Yeah, very true. So these derivatives, especially that we are saying we will increase the capacity by 4 to 5x, they definitely have much higher margins. And see, the agenda of the company or the goal of the company is to have volume-driven growth year on year. And I think that's the whole reason why we're investing in growth sectors. We're looking at volume growth. So the profitability has to go up as we go forward.
On this acquisition, Amit, so what are the key milestones and the anticipated timeline for achieving full integration and realizing the stated strategies that you have?
So I would say turnaround strategy, as I mentioned, we should turn this plant around within a year's time. And in terms of achieving what I mentioned in terms of capacity, at least should be up and running in next 3 years. And it will take another 2 years to scale up that capacity.
Okay. So interesting moves on this front, but thank you, Amit, so much for joining us on the show and sharing the views. That's the management of DCM Shriram. Let's quickly pull up the stock on the screens and see what the counter is doing in trade. Gains of 0.4% in today's session, but if we can just have a 5-day chart as well to understand what it's looking like in terms of business and stock price. If I can just have the 5-day chart, guys. 129 lakhs is the kind of volumes. There you go, 3.5% up move coming in on the counter. But moving on, Iran-Israel escalation has India on high alert. The Ministry of External Affairs expresses deep concerns as Israel claims responsibility for strikes on multiple targets in Iran, including the nuclear research facilities. With tensions soaring, Indian embassies in Tehran and Tel Aviv have issued urgent advisories for citizens to stay vigilant. So that's the latest that we're picking up. That's Randir Jaiswal, MEA spokesperson. That's the note coming in from there. In fact, let's quickly also understand what has happened so far on that front. You have Emirates Airlines, which has cancelled flights to Iraq, Iran, Jordan and Lebanon until, from here on, after Israel strikes on Iranian targets. Regional airspace closures, forced flight diversions and delays. In fact, the Dubai Stock Exchange also interestingly plunged around 4.5% amid the fears of wider conflicts. So that is something that we should be continuing to look at from here on. Taking into consideration all of this, if you see, we did speak to Peter Maguire to understand the impact on crude prices, because crude was on a tear. It started off with 2-3%, 5%, 7% uptick, moved up to 13%. Now it's cooled off slightly. But let's quickly listen into what he had to say as well.
If you look at price, and let's look at there first, it's been up nearly 12% as far as a super spike on crude. You've had WTI really ratcheted up, and so has Brent. So there's the first part as far as price. Now it's come back to around about 8 or 9% up. So it's given up some of those big blowout as far as gains. If you're looking now from a geopolitical standpoint, the impact of this is, first question, will there be retaliatory action from Iran, and how will that be positioned? Is it going to happen now, or is it going to happen over the next couple of days? Is this going to be a long drawn out wartime, or is it going to be something compressed and we're going to see no further action in 24 or 48 hours? That's the unknown. And does the US get involved in this, Tamana? So there are many moving parts that need to be, I think, worked through until we get to that point.
Well, crude prices edge higher right after Israel declares special emergency across the country. It surged up to 12% earlier in trade today and now has cooled off, but still surged 6% higher. We spoke to Peter McQuarrie, who's CEO at AustraliaTrading.com, about what will be the geopolitical impact of crude price surge. Even crude oil might see lows, says Line Eldon, who is a founder at Line Eldon Investment Strategy. Listening to the conversation where she speaks about how global market will be impacted by the oil prices.
As far as global markets are concerned, one of the biggest impacts is going to be what happens with the oil market, not just Iran's production, but anything that they could strike around them as well. And so there's numerous factors to consider all at once here. My expectation is that the 70s are more reasonable going forward. There are outlier scenarios that could drive it much higher if there's a major supply disruption. Those are hard to predict in advance, but I think the base case is higher. We also see that at current prices, U.S. shale oil production is gradually rolling over, and so that starts to, over time, limit supply and potentially put a floor under some of this. So in the near term, it's hard to say, but I do think that we probably have seen the lows in oil, and it's probably flat to up would be my base case expectation.
So that's the word coming in terms of crude prices. But let's also welcome in Chakri Rokpriya, CIO at LGT. Well, Chakri, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. My first question coming to you is, taking into consideration the kind of conflict that we are seeing between Iran and Israel, tensions have mounted on a geopolitical front. You're seeing an impact in terms of crude. You did see a knee-jerk reaction in terms of Indian markets as well. How would you advise an investor to play, from a market perspective, the markets right now?
Good afternoon. It's always good to be on your show. The oil, if you look at oil, it has moved down about 20% over the last 1 year. So it was about $65 just before this latest conflict broke out. So even if an oil rises like it has today, it's still below the India's long-term averages, about that $35 mark. And also, there has been a worldwide, OPEC understanding that they would pump out more oil in case of just to contain inflation worldwide. And that's one of the US's requirements as well. So that's a good thing. So everything in transportation depends on oil and therefore inflation. And so up to that $75 mark, which is where we are hovering around, I think, and that's where it'll kind of settle down, hopefully, irrespective of what happens to the conflict, because the other OPEC countries, or rather, Iran was never a big player in the last couple of years in the oil market. So against that scenario, I think we're still all right.
Okay. So, Chakri, very quickly, if you have to look at the OMCs which are under pressure, you have the likes of an ONGC, Oil India, HOAC, which are up in trade. You have the shipping companies which are up in trade today as well. We will get you more details on that front. What would your top pick be in this space?
OMCs, I wouldn't really touch them at all, irrespective of where the oil goes. Give or take where the oil is up or down, the benefits may have to be passed or stored back and passed on to the... So it's too messy with all the regulatory price controls that are on HPBP. CL, if we have to buy, then it would be Reliance Industries, because they would actually have some inventory gains from the latest conflict.
Right. Thank you for that view. Well, moving on, Israel and Iran conflict may impact shipping via Strait of Hormuz. We have Anushi with all the details telling us.
So the Strait of Hormuz, if you are looking at that point, is very important for not just the global checkpoints that are there, but also for India as a standpoint. Now, why is it important? Potential disruptions could lead to shipping disruptions throughout the global chain supply that we are looking at. The biggest impact seen in the oil and gas sectors, and this is from the Persian Gulf that we are looking at. Do note that 1/3 of the global seaborne oil moves through the Strait of Hormuz, so that is an important point that we should keep a track of. Now, Strait of Hormuz primarily exports routes all the LNG exports from Qatar and UAE, and taking Qatar and UAE in consideration, they account for about 20% of the total global LNG trade. In fact, 2/3 of India's oil and half of its LNG imports flows via this route that we are looking at. So India will have to source its imports from alternative countries and shipping routes if they close this route or the escalating Iran and Israel tensions that we are looking at. Now, what would be the impact of the shutdown? First, crude prices will be increasing significantly. Even the Jefferies reported, the JP Morgan report that point out that this could increase to the levels of 100, about the 100 to 120 levels also. While that is a low risk event, that is something that we do have to keep an eye out for. Shipping companies may also see higher shipping costs. Insurance related costs would also increase due to this conflict, on the impact that would be faced by these shipping companies as well. Do note, just a few months ago, OPEC plus crude output has also, OPEC countries have agreed to hike crude output in July. Saudi seeking further output increase in August, so that also stands out as a point for the volatility that could be faced for these crude oil prices out there. Which companies will see the impact now? Now negative impact would be seen on the counters like Petronet, LNG, IGL and MGL. This is due to the increase in the pressure in the margins due to the increase in the crude oil prices that we can see. While for the right now, shipping companies, the amount, or rather the quantum of how it would be impacted on these moves is something that is yet to be ascertained. We do have to keep the shipping companies also on the radar. So these are some of the counters which would be impacted, and how Strait of Hormuz is such an important checkpoint for the overall shipping sector for the nation as well as for the global supply chains.
Thank you, Anushi, for getting us the details. In fact, as you mentioned about shipping companies, what's interesting is the way the Baltic Dry Index has moved up in trade, and this clearly tells you how freight prices are expected to move and how the shipping companies are reacting to it, because yes, they probably could be key beneficiaries. My colleague Jasmeet Singh joins us with more details. Jasmeet, what are you picking up?
Well, right. The Baltic Dry Index is up 10% in trade today, indicating a gain for shipping companies. Let's understand how. While the index measures the shipping cost for dry bulk commodities, a rise in this index will lead to increase in freight charges. Well, in return, the change in Strait Hormuz route to alternative route might increase distance, while increased distance might also impact positively for shipping companies given the increase in profitability and margin. While this might also lead to a costlier shipping and a slower shipping route. As we see, GE Shipping and Shipping Corps are up in trade by 6 and 11% today. There's also a mixed impact for port companies, given there could be a risk in volume as the prices will go up, but also have a pricing pressure.
Right. Thank you so much, Jasmeet, for getting us the details. So, Adani Ports volume risk, but pricing power. Container Corp as well. There is a volume risk. All Cargo Logistics is another one. Chakri, any comments on these names? Shipping companies which are seeing some smart moves. Ports probably could see a volume risk, but pricing is in their favor.
Shipping companies, I think, will benefit if this continues, and if anything else, it'll. This is also the U.S. driving season, the Western European summer, all times when oil demand goes up. So against that backdrop, there will be greater demand for oil. But, it's a question whether this conflict will be contained or not. And as far as Adani Ports is concerned, I think the medium term, the volume risk is just whether it gets shifted to the next quarter, but not losing volume altogether. So the overall estimates are still intact. The company will still grow, north of the 20-odd%. So we're still very positive on Adani Ports.
Right. Well, we all know, the crude prices which are on surge. Now, which sectors will be impacted due to this high crude prices? Mahima joins us with all the details.
To start with, paint companies will get impacted because crude is a key raw material for paint companies, and it can make up to 30 to 35% of the total raw material cost. Paint companies generally use crude derivatives, so the impact will likely be seen in second quarter. Stocks that can see impact includes Asian Paints, Kansai Nerolac, Indigo Paints and Berger Paints. Aviation sector, of course, ATF gets expensive and higher crude will impact their overall margins. Stocks in focus will be Interglobe and SpiceJet here. Tire companies use crude derivatives for synthetic rubber, chemicals and carbon black. Crude derivatives roughly amount to again 30 to 35% of their total raw material cost, and higher crude will overall impact tire manufacturers' margins. So stock in focus includes Apollo Tires, JK Tires and Seat. Lubricants, they use again crude oil derivatives as base oils and additives. It could amount to roughly 40 to 45% of that overall raw material, and stocks in focus could be Castrol India and Gulf Oil. Lastly, plastic and packaging also might be impacted because polymers generally are direct crude derivatives, and rise in crude price here again will impact their overall margin. So stocks in focus could include Polyplex Corp, Uflex and Jindal Poly. So all of these sectors will be in focus on the back of rising crude oil prices.
Thank you for getting us the details. What's interesting is how Brent crude has come off the highs right now. So that is interesting to watch out for. In fact, you have some flashes from the NATO Secretary General as well, who's calling for de-escalation after Israel-Iran strikes. That's the only commentary that we're picking up so far from the NATO Secretary. But clearly, the Iran's nuclear program is what has been, really impacted, and that's why you would see Iran, which is looking at threatening as well, because overall that could probably impact the Strait of Hormuz, which is one of the key routes that is required as well. So a lot of aspects that we need to consider which can be impacting the overall global trade from here on. But let's also come back to the domestic story where Air India has gone ahead and confirmed tragic loss of 241 lives out of 242 people in the Ahmedabad flight crash. In fact, only one could survive, and we have the first interview with the lone miraculous survivor from the Air India crash. Let's hear what he has to say.
अहमदाबाद से लंदन के लिए जो फ्लाइट जा रही थी, उस फ्लाइट में 242 लोग सवार थे और उनमें 2 पायलट थे और इसके अलावा 10 क्रू मेंबर थे और 230 जो आम लोग थे जिसमें विदेशी भी शामिल थे। विश्वास कुमार इस समय हमारे साथ हैं। आपको बता दें कि विश्वास कुमार इकलौते ऐसे शख्स हैं जो उस हादसे में जिंदा बचे और ये एक तरीके से चमत्कार है, क्योंकि ऐसे चमत्कार बहुत ही कम देखने को मिलते हैं। प्रधानमंत्री यहाँ पर पहुंचे, विश्वास कुमार से उन्होंने बातचीत की, उनका हालचाल जाना।
सर ने पूछा कि कैसे हुआ, तो मैंने उसके बारे में बताया और सब हालचाल पूछा सब।
विश्वास, अगर हम जानना चाहें कि आप थोड़ा सा बता पाएं कि ये हादसा कैसे हुआ था, क्योंकि ये एक बड़ा चमत्कार है जिस तरीके से आप वहाँ से इकलौते ऐसे शख्स हैं जो जिंदा बचे।
वो मेरे नज़रों के सब सामने हुआ था। मेरे खुद को भी बिलीव नहीं होता कि मैं कैसे उसमें से जिंदा बाहर निकला, क्योंकि थोड़ा टाइम लेके तो मेरे को लगा था कि मैं भी मरने वाला हूँ, लेकिन जब मेरी आँख खुल के मैं देखा ना तो मुझे लगा मैं जिंदा हूँ। तो मैंने ट्राई किया, जब मेरी सीट थे वो मेरी बेल्ट निकाला, मैंने वो ट्राई किया जहाँ से निकल सकता वहाँ से, तो मैं निकल गया वहाँ से। मेरे सामने नज़रों के सामने एयर होस्टल और दूसरे आंटी अंकल सभी उसमें मैच हो गए थे सभी।
अच्छा, थोड़ा सा बता पाएं, जब जैसे ही टेक ऑफ हुई फ्लाइट क्या हुआ था और अचानक से कैसे हादसा हुआ?
टेक ऑफ के बाद 1 मिनट के अंदर ही जब टेक ऑफ हुआ ना, तो सडनली 5-10 सेकंड कैसे लगा जैसे स्ट्रक हो गया वो। बाद में से मेरे को लगा कि कुछ हुआ। बाद में प्लेन में लाइट ऑन हो गई, ग्रीन और वाइट। बाद में वो पता नहीं वो प्लेन टेक ऑफ ज़्यादा करने के लिए वो रेस बोलते हैं क्या, रेस दिया होगा ऐसा कुछ, और सीधा स्पीड में ही घुस गया जहाँ वो क्या था वो
हॉस्टल था, एक हॉस्पिटल का।
हाँ, हॉस्टल में, और सब सामने सब हुआ।
ये जब फ्लाइट जब क्रैश हुई उस समय हॉस्टल पे लैंड की थी, उसी समय आप बाहर निकले थे?
नहीं, क्योंकि आई थिंक मेरे को जब मैं जो साइड पे था ना, वो साइड हॉस्टल पे नहीं लैंड हुई थी। हॉस्टल के जो ग्राउंड फ्लोर है ना, जैसे नीचे वहाँ लैंड हुई थी। तो मुझे दूसरे के बारे में मेरे को पता नहीं, लेकिन मैं जहाँ लैंड हुआ था ना वो नीचे की साइड थी। तो जब वहाँ थोड़ा पेस भी था प्लेन के जब बाहर, तो जब जैसे मेरा डोर टूटा ना सब, तो मैंने देखा ना जब सामने कि थोड़ा इधर पेस है, मैं ट्राई कर सकता हूँ निकलने के लिए। तो मैंने ट्राई किया निकलने के लिए, तो फिर मैं निकल गया उधर, क्योंकि अपोजिट साइड पे था ना वो बिल्डिंग का वो था ना दीवार, तो उधर से कोई शायद नहीं निकल सका होगा, क्योंकि उधर पूरा उधर ही क्रैश हुआ था। मैं जो जहाँ था वहाँ ही थोड़ा पेस था। फिर भी मेरे पता नहीं मैं कैसे बचा हूँ, क्योंकि मेरे नज़र के सामने ही सब 2 एयर होस्टल वो अंकल आंटी सब उधर ही सब।
आप पैदल चल के आए वहाँ से निकल के?
हाँ, और थोड़ा जब आग लगी ना मेरा लेफ्ट हैंड भी जल गया थोड़ा। फिर एम्बुलेंस मेरे को उठा लेके इधर आया हॉस्पिटल में।
अभी इलाज वगैरह कैसा हो रहा है? अभी कैसा फील कर रहे हैं आप?
इलाज बहुत अच्छा है, यहाँ के लोग बहुत सपोर्टिंग है, बहुत अच्छा इलाज कर रहे हैं सब।
ये आपने देखा विश्वास कुमार जो इकलौते शख्स थे जो इस हादसे में जिंदा बचे थे। प्रधानमंत्री यहाँ पर पहुंचे घायलों को देखने के लिए, क्योंकि जब हवाई जहाज क्रैश हुआ उसके आसपास भी कई सारे लोग थे जो घायल हुए थे, जिनका इलाज अहमदाबाद के सिविल हॉस्पिटल में चल रहा है और प्रधानमंत्री ने दिशा निर्देश भी दिए हैं कि इनके इलाज में किसी तरह की कोई कोताही ना बरती जाए और बेहतर से बेहतर इनका इलाज किया जाए.
Miraculous escape for Vishwas, and it's always said, right, it's good karma that does pay off, and probably that's what has come in over here as well. But let's quickly slip into a short break. Up next, we will unravel the financial toll of this Ahmedabad air crash, the potentially India's priciest aviation disaster with liabilities exceeding 2,000 crores. Don't go away. More details coming up. We have Chetan Kashyap, who will be joining us on the show.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. अब्बास भाई soft spoken तो हैं.
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on
residents of Tehran woke up to loud explosions as the Israeli Air Force launched airstrikes across Iran, targeting nuclear and military sites. In response, Israel declared a state of emergency, preparing for possible missile and drone retaliation from Tehran.
Oil prices surged over 13% following Israeli strikes on Iran, sparking fears of supply disruptions amid escalating Middle East tensions. Back home, barring ONGC, all the oil-related stocks are trading with cuts.
And Baltic Dry Index surges 9.7% in intraday amid Iran-Israel conflict. This is what is boosting the shipping stocks, taking into consideration frets will go up.
Markets of days low, however, trades with a negative bias. Nifty moves past 24,650 while Sensex cracks over 650 points. Nifty defends top sector gainer.
And Prime Minister Narendra Modi is visiting the site of Air India's Dreamliner crash that killed 241 people a day earlier, marking one of the worst air disasters in recent times. The minister has also met the crash's lone survivor, Vishwas Kumar Ramesh, at the hospital.
Meanwhile, sources tell NDTV Profit that Civil Aviation Ministry may temporarily ground Boeing 787 fleet following the pending investigation. Air India maintenance practices to be under scrutiny.
Welcome back. Here watching Profit Buzzers. Let's quickly first address the flashes at the bottom of your screens. It's an update on Israel-Iran conflict where Mossad had used drones to damage Iran missiles during the attack. That's what is coming in. In fact, Israel says they've targeted the air defense system in western Iran, and IDF says that they've completed large-scale attack on Iran air defense systems, and that is further damage that's happening over here. Israel has struck drones of radars and missile launchers. That's what we've been picking up right now. And Mossad has also used drones to damage the Iran missiles during the attack, is what we're picking up latest from Bloomberg. But moving on, Ahmedabad air crash tragedy may be India's most expensive aviation claim, with a potential liability translating to upwards of over 2,000 odd crore rupees. My colleague Pallavi joins us with more details. Pallavi, what are you picking up? Because this is a slightly complicated calculation.
Right. So, like you said, yesterday's tragedy can actually turn into India's most expensive aviation claim. Now, typically how it works is that airline fleet insurance policy covers risks such as the airline parts, spare parts, the aircraft hull, and liabilities to passengers as well as third parties. Now, yesterday's incident is expected to trigger claims both in terms of the liability section as well as the hull insurance, because we saw a total loss of the aircraft as well as the fatalities. Now, the aircraft damage will be covered under the aviation hull all risk section, which ensures the valuation of the aircraft, including the spares and the equipment. And according to industry experts we spoke to, this valuation could range anywhere between $210 million to $280 million. Now, in fact, one of the people we spoke to was Amit Agarwal, the Chief Executive Officer and MD of Howden India, and he explained that the aircraft which was involved yesterday was in fact insured for approximately about $115 million. Now, coming to the liability section, which could very well be the most significant component of yesterday's loss, could amount to millions of dollars. This section covers the airline's legal liabilities to pay to passengers as well as third parties, and this includes medical expenses, cargo, baggage loss. Now, the fact that the aircraft crashed into a civilian compound will also mean substantial third party losses. But let's remember that these are estimates at this point, and what the figures will be are still to be ascertained precisely. But how this typically works is such losses are generally, split between multiple reinsurers. Airline flight policies are often placed on a facultative basis, and they involve several participants. So that's what it is. We're speaking to more people to ascertain these numbers further.
Thank you, Pallavi, for getting us all the details as well. In fact, let me get in Chetan Kashyap, Head Aviation and Specialty Lines at Prudent Insurance Brokers, to join in. Kashyap, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit. My first question coming to you is if you could help us and the viewers understand as to how, in a situation like this, the entire transaction would work.
So, good afternoon. So, as explained by Pallavi, it primarily works in two different sections. One is the hull section, which takes care of the insurance claim because of the damage to the aircraft hull. The other one is, of course, the liability. So the liability includes the passengers, the third party people who are affected on the ground, the property damage on the ground, and the baggage which was carried on board. So all this put together translates into a liability claim, and of course there is a hull claim. And as a lot of people have spoken about the possible hull values, and again it should translate anything between 75 to 80 or $1 million, or maybe $85 million. The liabilities would be very it will be very nascent to comment upon anything on liabilities as yet, because it primarily will be driven by the cause of loss. As we have mentioned earlier also, that the liabilities in this particular case will be governed by Montreal Convention, to which India and UK are a party. And of course, the convention limits the liability, but yes, there are occasions on which the liabilities limits imposed by the convention can be breached and can be relooked by the courts. So that's where we stand as of now.
So what is the likely insurance claim coming out of this incident? I know you're saying it's difficult to ascertain the liability, but as per what Pallavi was looking at as well, it's seeming to be upwards of 2,000 odd crores. Is that something which you would look at as well, or do you think it could be a completely different number?
So as I said that, commenting on the liabilities piece, we can be certain about the hull part, and hull may also include the cleanup cost or the removal of the parts, debris there. But as far as the liability goes, it will be very difficult as of now to ascertain a limit. As I said that though the convention limits the liability to 100,000 SDR, which roughly converts into $135,000 per passenger, but in a few scenarios the liabilities can be unlimited or can be decided as per the actual situation as considered by the judge who presides over the hearings. And largely it will, as I said, that it will depend on what caused this loss, whether it was a equipment failure, or whether it was a pilot error, or whether it was weather, God knows what. But depending on what has driven this accident, the liability limits can change, and can change very drastically.
So Kashyap, as you mentioned, we can determine something which is under hull. So how much is that coming up to?
Should be between $80 to $90 million. And this was a 12-year-old aircraft, so I think a newer one would have cost much higher. But being a 12-year-old aircraft, this would be something close between $80 to $90 million.
Okay, in terms of your memory, if it serves you right now, in past experience as well, which has been the highest possible claim so far that we've seen in the history of aviation? Because this is something which we will know only later with the current one, but the last one, just to understand the dynamics.
So I think the most expensive claim everyone would be aware of was 9/11. So it ran into a few $1 billion. Then? I think it was close to about 4.8 or $5 billion.
Wow, okay.
That resulted from it. And the second most expensive would be a cargo plane crash in Amsterdam, a livelihood of which resulted in an outgo of about a couple of $1 billion.
Okay. And what happens with regards to the people who are outside the plane who've been affected by the crash? Do they get covered as well under this?
Yes, certainly. They are categorized under third party. And as against on board who are governed by the convention, these people are not governed or limited by a convention. They can get compensation as what the law finds fit for them, or deem fit. If there have been young fatalities who had good prospects living forth, there could be a decent amount of claim which can come through for these people who were killed on the ground.
And is there a cap to that kind of a number usually?
No, not for the people who are affected on the ground. Certainly there is a limitation on the people in the aircraft, but not one on the ground.
Okay. And taking into consideration the concerns that we've seen with Boeing currently, what happens to the entire air insurance market? Do you think there is a propensity or a possibility for the premiums to increase from here on? Because if that happens, it's the market that will see a hit.
Certainly, there will be some impact on the premiums, especially for the Indian carriers, considering this is one of the largest events in modern aviation history for India. I think after Kanishka bombing, this would be the largest claim or largest event for a single tragedy. And obviously, there would be implications on the other players in the international market. But again, as I said, that it will take time because, as I said, the hull is not a very huge number. The huge number will come out of the liability. And that will, as I said, it will entirely depend on what primarily caused this loss. If there was an equipment failure, then there will be other parties would also become a party to the claim, and then the claim can just run away. So that's where we will get to know more about it. So,
okay.
But yes, there will be an impact, considering that there have not been any major incident after Kozhikode in India. So yes, there will be a significant, should be a significant impact. But considering India is a rapidly growing aviation market, the reinsurers will also be likely, mindful of that also.
Okay. And overall, if you have to look at the impact that will come in from here on a usual basis, if you have to take the overall insurance premium that goes in right now, how much does a airline company pay as premium, and to what extent you could expect it to go up?
So it's very different for different airlines. Somebody operating domestic will pay a different, price for it. Somebody into international operations will have a different number, depending on how many routes you operate and what kind of fleets you have, what kind of aircrafts you have, how old are they. So there are a lot of things there are a lot of moving parts to it. It is very difficult to say that, what number they would be paying now after the incident. But yes, in turn, I am honestly, it's my view that there would be a positive, or there would be a positive correction in the rates currently being offered to these markets, airlines as of now. And that would be anywhere upwards of, 5 to 7%, or maybe even higher, depending on what exactly comes out of this claim.
So, Chetan, would it be right to say that, the losses that will come out of this, that's the total insurance payout that will happen, whatever that number will be, majority or largely of it will be absorbed by the global insurers, and then it's likely to impact the aviation insurance market in India, and that is only with regards to hardening of rates and tighter underwriting that will happen in the next renewal cycle. Would it be right to put it like this?
Yes, largely. And so any renewals for Indian carriers coming from this date forth will, face some kind of impact of this incident on their premium bearings also. So I'm talking about other airlines which will get renewed till the next renewal for Air India happens in the next financial year. But yes, the other airlines may also see some change, upward change in their premiums going forward. And yes, that's what we expect out of it. And yes, there has been some local capacities also being used up in this particular instance. And we also see local market tightening up and offering capacities at a higher price than what they used to do.
Chetan, my last question coming to you is, in this case, from what we hear and read is that Tata AIG was the lead insurer, and there were others including New India Assurance who have written part of the policy. So Tata AIG, New India Assurance, National Insurance, United India, Oriental, ICICI Lombard, they would probably then retain less than 10% of the risk. And your state-owned reinsurers like GIC, RE, they have 5% on the reinsurance treaty. So they will also see a claim. If you could help us understand the entire math as to how it would work amongst these players, just to understand the schematics.
So how it works is that, as everybody, we have been reading this in news, that a majority of the risk is offloaded to London reinsurers, and a lot of them are on the program right now. But there is a part of which is retained in India amongst the insurers you have named, like Tata AIG, ICICI, New India, National. So, of course, that will be a hit on their net, net worth, and the claims would be taken out from their net. Of course, they would have some cushion with the reinsurance programs which they normally carry on with them to cover these kind of exigencies. But yes, despite of that, there will be a significant hit on their net because of this particular instance. And as I said, that depending on where the claim liability number actually lands on to, that will further decide on how and how much the impact will be on the Indian insurers and GIC, of course.
Understood. Thank you, Chetan, for that explanation, because it really, lets a viewer understand as to how this entire process works, but it is highly complicated, taking into consideration the number of parties that are involved as well. But thank you so much for speaking to us at NDTV Profit and getting us a lowdown in terms of what's happening and how, things could change from here on. But from what Chetan mentioned as well, there will be some impact in terms of where Indian carriers go from here on, where the moment you renew, your premium rates could go up, and I'm talking about from an airline perspective. Now, whether that gets passed on to other companies, gets passed on to the consumers, is going to be interesting, because to some extent it will get passed on as well. So overall, again, that's an angle that we have to take. And the most expensive insurance claim was during 9/11, as Chetan was mentioning. Currently, not really ascertaining as to what that claim could arise right now, but we are looking at somewhere upwards of 2,000 odd crores basis what my colleague Pallavi has brought to us as well. In fact, let's now shift focus to some action in the primary markets. You have Oswal Pumps, the new IPO that has hit the block, opened today. And Sajid is joining us to tell us more about it. Sajid, if you could help us understand, what are you picking up? Close competition to a Shakti Pumps as well, and then we listen to the management.
That's right. The company's IPO has opened today. It will be there from June 13 to June 17. The company is primarily, in the is manufacturing of solar pumps, which is off-grid solar pumps, which is there, and that's a good big market for them. If you look at the financials for them, they had a top line of nearly 1,000 odd crores for the 9-1 period ending December. For the full year, it's supposed to be around 1,200, 1,300 crores, which is there. FY26 numbers, if you're going to extrapolate based on a 20% growth in the top line, it's coming to roughly around 1,700 odd crores of top line for FY26. And the EBITDA margin of nearly 30%, which is there. On the basis of that, if you look at the company is trading at a forward PE of roughly around 20 times earnings, which Oswal is trading. So it's a decent IPO coming from the agri space, and with a large order which is coming from the PM Kusum, which is the government scheme, and it has an order book of nearly 1,100 crores going into the IPO, and it's using a large part of the capex or the fundraise which is getting to set up capacity for the solar modules going forward, so that it can supply to all the government schemes going forward. I met up with the management, and let's hear what they have to say.
Regards
To begin
where?
with, give us a sense of what your company does, a business profile of the company, and the model that you have.
हेलो सुजीत जी, वेरी गुड मॉर्निंग एंड बहुत बहुत धन्यवाद आपका, आपने मुझे अपने स्टूडियो में इनवाइट किया. सो बेसिकली ओसवाल पंप्स लिमिटेड एक वाटर पंप मैन्युफैक्चरिंग कंपनी है, और फ्रॉम 2003 से हम लोग पंप्स की मैन्युफैक्चरिंग कर रहे हैं हरियाणा स्टेट, और हर तरह के वाटर पंप्स, एग्रीकल्चर, डोमेस्टिक और इंडस्ट्रियल पंप्स की मैन्युफैक्चरिंग करते हैं. एंड वी हैव द बिगेस्ट बैकवर्ड इंटीग्रेशन सेटअप, और हमारे पास ओसवाल पंप्स के पास जो स्पेशलाइजेशन है, जिसकी अपॉर्चुनिटीज़ इंडिया में बहुत तेज़ी से बढ़ रही है. ओसवाल सोलर पंप में बहुत अच्छे एक्सपर्टीज़ के साथ मार्केट में आगे बढ़ता हुआ जा रहा है. सो डेफिनेटली वी हैव वेरी बिग प्रोडक्ट बास्केट्स. ग्लोबली हमारी बहुत स्ट्रॉन्ग प्रेजेंस है, बहुत बड़ा R&D सेक्शंस इन हाउस, हमारी बहुत एक्सपीरियंस टीम है, एंड सो ऑन.
Mr. Kumar, you are raising 890 crores in fresh issue. Can you give us a breakup of how and where you are going to use this money?
ओके सर, 890 करोड़ जो हम लोग रेज कर रहे हैं कैपिटल, सर इसमें हम लोग बेसिकली 370 करोड़ के करीब हम कैपेक्स कर रहे हैं. इसमें से हम बाइफर्केशन कर रहे हैं कि 90 करोड़ कैपेक्स हम ओसवाल पंप्स लिमिटेड जो हमारी पेरेंट कंपनी है उसकी एक्सपेंशन कैपेसिटी को एक्सपेंड करने के लिए, प्लस ऑटोमेशन, प्लस मॉडर्नाइजेशन के लिए हम लोग वहाँ पर स्पेंड कर रहे हैं. प्लस हमारी सेकंड जो 100% सब्सिडरी कंपनी है ओसवाल सोलर स्ट्रक्चर प्राइवेट लिमिटेड, वहाँ पर ऑलरेडी हमारा 600 मेगावाट कैपेसिटी में वी आर रनिंग सोलर मॉड्यूल प्लांट. सो नाउ वी आर गोइंग टू एक्सपेंड अप टू 2.1 गीगावाट फॉर दिस फंड्स, विद दिस फंड्स. और पैरेलली हम लोग 2.1 गीगावाट की बैकवर्ड इंटीग्रेशन लाइक एल्युमिनियम एक्सट्रूजन प्लांट, EVA बैकशीट प्लांट, JB boxes, पैकेजिंग एंड वायर रिबन, इनकी सबकी बैकवर्ड इंटीग्रेशन के लिए वो फंड्स यूज़ कर रहे हैं. एंड द बैलेंस अराउंड 520 करोड़, आउट ऑफ दैट अराउंड 320 करोड़ वी आर गोइंग टू रीपे वर्किंग कैपिटल डेट, ताकि उसके बाद कंपनी 100% डेट फ्री हो जाएगी. एंड द बैलेंस विल बी GCP पार्ट, जनरल कॉर्पोरेट पर्पज. इट विल बी द फ्यूचर वर्किंग कैपिटल पर्पज. थैंक यू.
Mr. Gupta, since you spoke about the expansion part of it, that you're going to raise your capacity for solar modules from 600 megawatt to 2.1 gigawatt, what is the timeline for this entire expansion? When will 2.1 gigawatt come into play, or is it going to be in phases?
Okay. Sir, basically we are going to expand in a phase manner. So within this year we are going to expand another 600 megawatt capacity, and then in the remaining capacity we will infuse up to FY28. So in a phased manner, that's all.
Can you give us a sense of the kind of demand that you have and the order book that you have? Because my understanding is that you get, either you participate directly for the turnkey pumping solutions or pumping systems, or you go through state and center bids or tenders which is there. What is the kind of order book that you are sitting on?
Okay, so basically this project is taken care by central government, and the most beneficiary is the state governments, the state government and their farmers. So approximately in many states we are going to participate. At present we have around more than 1100 crore orders in hand, and remaining like our whatever our pan India private network, and even we are supplying to EPC players also, or who are directly participating in PM Kusum Yojana. So, and also we are exporting. So that sort of is different. And now we have we applied in many states. So we have a big quantum of LOE. So out of that, slowly and gradually we are getting, in every quarter we are getting very good orders.
Well, that's Oswal Pumps on the outlook when it comes to, next few years. But, that's all the time we have on this show. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. अब कोई soft spoken तो है?
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Hello and welcome to NDTV Profit. You're watching Top Trades. I'm your host Anushi, and right now what the markets are doing, it's not so well. Now in terms of where the benchmark indices are headed, now it's a day of the geopolitical developments that we are looking at, as well around tensions escalating. We've already seen an impact on the crude oil prices, up over 12% in trade today. Nifty 50 currently down about 0.7% at the levels of 24,700. At the right there at the some bit of range bound of session in session that we are looking at the last half an hour or so, but off the day's highs if we are looking at in those levels. Nifty Bank, if we are seeing, even that is facing the brand, seeing cuts of around 0.9% in trade today. Now this is where the benchmark indices are, but overall if you take the Nifty heat map in consideration, let's see that as well, and the Nifty point contribution table, whichever is available. The only stocks that are doing well is something like ONGC, up over 1.3%, and this is on the outlook that crude oil prices increase would be better for these upstream oil companies that we are looking at. Bharat Electronics also up over 1% in trade today. Again, this is on the back of defense stocks gaining momentum, sentimental kind of drives that we are looking at, so that is in focus. While what is not doing so well is something like Adani Ports and SBI, which are down about 2% in trade currently. In fact, if you look at the point contribution table, let's see that as well, what's happening over there. BEL, ONGC on the positive, while HDFC Bank, RIL and SBI are there on the negative. In terms of where the broader markets are also concerned, that's also facing the brunt in the market. That is down about 0.6%, so still better than somewhat bit of levels of where the benchmark indices are concerned. But the biggest story, or rather the saddest development, remains the Ahmedabad plane crash which took place yesterday. To discuss more about what went wrong in terms of the systematic failures and all, we are joined in by David Berg, Head of Center for Aerodynamics, Aerospace and Automotive Engineering, University of Surrey. Thank you so much for joining in NDTV Profit. It's a pleasure having you. My first question to you, yesterday, it was rather a big tragedy that we saw with the Air India plane crash. 242 passengers, of which only one lone survivor is there. Want to get your assessment of overall tragedy that we are looking at in terms of the plane crashes. If you just see, after a few minutes of takeoff only, the plane had crashed. So just want to get your overall assessment on the systematic failure which has taken place.
Well, it's really difficult at this stage to draw any conclusions. Anything that we come up with is going to be speculation. So, and that's inherently dangerous. So, what we do know is that weather was unlikely to be a factor. The meteorological reports at the time were relatively benign. That the aircraft took off, it was not generating enough lift. That's probably down to a lack of thrust. We don't know why that happened. It's unlikely to have been a single engine failure. That aircraft is entirely capable of flying on a single engine, and it's designed to do that. So we just don't know at this stage. We need to wait until more information is available before we can draw any conclusions. That particular aircraft has an excellent safety record. This is the first incident of its kind involving that particular aircraft. So it really is unprecedented.
Just want to get your view now. If you've seen, as you've also pointed out, that overall, if you take this aircraft in particular, it had a pretty good track record in 2011. It's been operational since then. But this brings regulatory scrutiny back to Boeing as well as Air India. Boeing also, there have been regulatory issues before also. Just want to get your overall context in terms of Boeing and Air India as well. What's the picture over here?
Well, again, it really is too early to say, and at this stage it would be entirely speculation. We just don't know what happened, and whether it was related to the aircraft itself, whether it was operational, whether there was some other factor, we just don't know. And again, speculating at this time is probably not a good idea.
Okay, but in terms of your assessment, if it's still early stage and it is speculative, what would be some of the measures, or rather some of those lapses that are seen in the aviation industry, if you can describe more on that?
I'm sorry, so general lapses that we've seen in the past, there have been incidences that have occurred. In order for something like this to happen, many things need to go wrong all at once. There are multiple layers of safety and fail-safes that are implemented in aircraft. So to lose an aircraft like this, you have to have generally a failure in the aircraft, a failure in performance of the systems, and something else as well. At least generally 3 things need to go wrong, and all of those have to align and go wrong at the same time. There has been speculation bouncing around the internet about whether or not the slats and flaps were deployed. If you have a close look at the videos, it's just not clear enough to tell. At this point, we can't really point a finger at whether it's the hardware, the crew, or some other systemic failure.
Okay, thank you, David, for joining and sharing that perspective. But moving on, on the global front also, all is not well. This is after Israel launched a wave of airstrikes against Iran's nuclear program and ballistic missile sites today. This marks a major escalation in the standoff between the two adversaries. Agni is here to break down how this risks sparking a wider war in the Middle East and what the conflict is all about. Over to you, Agni.
Right, so we know that Iran and Israel are having a conflict right now. So it began with Israel launching an airstrike against Iran. Now Israel says that the strike is against Iran's nuclear program and ballistic missile sites. The explosions were heard across Tehran, which is the capital of Iran, and in the city of Natanz, which is around 300 kilometers away from Tehran. Now Israel also says that it has targeted Iran's nuclear scientists and generals, so individuals have been targeted. And Israel's Prime Minister Benjamin Netanyahu has said that the strikes will continue for as many days as it takes to remove the threat. Now, if you see, this is a map of Iran's oil and gas natural resources that you just saw, and Israel's PM is also saying that they have struck the heart of Iran's nuclear enrichment program. Why this is a big deal, we'll circle back to that. But as of now, Iran's state TV says that Hossein Salami, the head of the Islamic Revolutionary Guard Corps, was killed in the attacks by Israel. And Israeli Defense Minister has also declared a state of special emergency in the country. Now, Israel said that it anticipated retaliatory drone and missile attacks from Iran. And as of recording this video, we know that some of these strikes have happened and Israel has intercepted the attacks. And Iran says that there has been no damage to its oil refineries or storage tanks. Now, let's take a look at how the markets are reacting to this news. Brent has risen almost 10%. It has topped the psychological $75 mark. S&P contracts have fallen 2%. US 10-year yield has fallen and is expected to fall further beyond this. And gold also has risen to $3,444 an ounce. Now, this has been a conflict between Israel and Iran, but let's move on to what the US's role in this has been. So the US says that it was not involved in any of the strikes. This is what Marco Rubio has said. But Iran is claiming that none of this could have happened without US's active support. Now, US has warned Iran against targeting American interests or personnel in retaliation. Remember, a lot of US interests lie in the region, and it's a very complicated situation for the global power right now. Trump has also said previously that he didn't want Israel to attack Iran, and that the US was committed to a diplomatic resolution of the nuclear issue. Now, moving on, we know that American negotiators were also in Oman to discuss the limits of Iran's nuclear program with Irani officials. So as of now, airspace in Israel has been closed until further notice, and Iran has also halted operations at its main airport in Tehran. Now, let's look at what we said would be the bone of contention. So the bone of contention lies in Iran's nuclear program. It has significantly expanded its uranium enrichment program since 2019. Remember, there used to be a treaty with the US under Barack Obama, where they had said that they would limit their uranium project expansion, but Trump withdrew it from the treaty in his first term, and now in his second term, the treaty has not been able to reworked according to the US's strategies. Now, Iran insists that its atomic activities are for peaceful and civilian purposes, and Trump's efforts to forge a new deal since then have not made much of a progress. But what we know is that both Israel and US say that Iran must not be allowed to enrich its uranium, which is a core process involved in making weapons of mass destruction, while Iran says that it must retain the right to do so. However, we know that on June 12, which is yesterday, Iran said that it would inaugurate a new uranium enrichment facility, and this was after the UN's International Atomic Agency, which is the UN's atomic watchdog, said that Iran wasn't complying with international obligations. Now, let's pull up a map of what Iran's nuclear program looks like. If there is a map, then we'll take you through that, but as of now, let's focus on what the wider history of the whole complicated Iran-Israel conflict is. So Iran and Israel have been locked in shadow war for decades. Remember, it's a very complicated area. There are a lot of interest and proxy wars, shadow wars happening all the time. Iran doesn't recognize Israel as a state, and we know that Iran has been accused of using proxy forces such as Hezbollah in Lebanon, Hamas in Gaza, and the Houthis in Yemen to attack Israel. And remember, Iran's backing of the Hamas in Gaza was one of the main reasons why Israel carried out the entire genocide of the Gaza Strip that has been unfolding over the last year and a half. And we also know that Israel has been accused of being behind a series of assassinations and covert attacks on Iranians, and many of them have targeted their nuclear scientists. Between recording this video, there have been a lot of updates. We know that Qatar and Turkey have come out and said that they condemn the Israeli attack on Iran, and we know that there are also emergency protocols active, and Iran's parliament will hold an emergency meeting. Now, Israel says that Iran has also launched 100 missile drones in the last few hours, which have been intercepted. And going ahead, it has also, the Bank of Israel has said that it is prepared and ready to in areas of responsibility which falls within its purview. US atomic watchdog, which we referred to earlier, has also said that there has been no increase in radiation from Iran's Natanz site. Remember, that was a nuclear site, and apparently nothing has been breached. So Turkish ruling party has also condemned Israel's attack on Iran, and as of now we are standing on very shaky territory. Remember, this is a politically hot and important location for global trade. The Strait of Hormuz, Suez Canal, everything is right there. So this is something that global investors should definitely be on top of.
Thank you so much for that detailed breakdown, Agni, on what has been the history between Iran and Israel. So that's the overall outlook that we are seeing, why the markets are under pressure today, one of the key reasons of that. But on that note, let me welcome the fundamental guest for today. Khushi Mistry joins us, fundamental research analyst at Bonanza Portfolio. Hi Khushi, welcome to the show. First of all, your overall assessment on the markets. It's not a day, it's a lot of geopolitical developments that we are looking at. What's your overall assessment?
Thank you so much for having me. So for the current situation, what's currently going on related to the Israel and Iran's conflict. So what we are saying is currently it is the global tensions have been already spiked a lot, and we are seeing many global uncertainties coming, which has even impacted Indian equities in a quite significant way. So as we saw from yesterday and even in today, so both the day the market sessions have been very stressed and tense due to these conflict news. So if we see the market volatility index, which is VIX, has also been spiked. Followed by that, even the crude oil prices have been spiked a lot, which is affecting all the oil marketing and OMC companies. And also they have been impacting quite of the critical sectors in the markets. So going forward, if we see, we might see many supply disruptions coming into due to the implications of the war situations which are going on. And even if the escalations continue, we might see further impacts on markets and impacting other sectors.
So that's a market view that we have. But one important commodity index that we have kept a track of today is the crude prices. Now, crude oil prices have jumped over 12% in trade today. But Mahima, which we'll be talking about, which sectors will be impacted due to these high prices? Mahima, over to you.
To start with, paint companies will get impacted because crude is a key raw material for paint companies, and it can make up to 30 to 35% of the total raw material cost. Paint companies generally use crude derivatives, so the impact will likely be seen in second quarter. Stocks that can see impact includes Asian Paints, Kansai Nerolac, Indigo Paints and Berger Paints. Aviation sector, of course, ATF gets expensive and higher crude will impact their overall margins. Stocks in focus will be Interglobe and SpiceJet here. Tire companies use crude derivatives for synthetic rubber, chemical chemicals and carbon black. Crude derivatives roughly amount to again 30 to 35% of their total raw material cost, and higher crude will overall impact tire manufacturers' margins. So stock in focus includes Apollo Tires, JK Tires and Seat. Lubricants, they use again crude oil derivatives as base oils and additives. It could amount to roughly 40 to 45% of that overall raw material, and stocks in focus could be Castrol India and Gulf Oil. Lastly, plastic and packaging also might be impacted because polymers generally are direct crude derivatives, and rise in crude price here again will impact their overall margin. So stocks in focus could include Polyplex Corp, Uflex and Jindal Poly. So all of these sectors will be in focus on the back of rising crude oil prices.
Kushi, two sectors that stand out from Mahima's list is the paint companies and the tire companies, both having a significant portion of its raw material from these crude prices, and now this would be detriment for their margins going forward. Just want to get your overall assessment in terms of these paint companies are, if you're positive on this space, if you're negative on this space. We've had some recent reports also indicating that paint companies continue in the negative light on the back of the increase in competition along with pressures on margins that we're looking at. And this is just another factor that adds to the negative outlook for these companies out there. I want to get your view for paint companies as well as for tire companies.
Yeah, so that's obviously the major factor which is going to impact both the sectors, the paints and the tires. If we see the most impacted area, what we can expect is their margins, because these companies heavily input this materials cause their input prices. So if we see the input costs can be increased to in a significant manner, which may increase their profitability in the going terms forward, and we might see impacted profitability and margins if we see because if we see the crude oil, the oil component is a major factor what goes in both of these sectors. So most of the profitability can go away due to the higher input cost pressures on both of the sectors. And if we'll see significant companies like aviation sectors and everything, even they have been impacted a lot due to these news.
Okay, thank you for that, Kushi, and thank you for joining and sharing that perspective on various of these counters. But another management which remains in focus is Eris Infra Solutions, and we had a conversation with Ronak Morvia, the chairman and managing director, as well as Bhavik Khara, the whole-time director as well. Listen in.
My understanding is that it's a B2B tech platform which provides procurement solutions to vendors and construction companies. Give us a sense of the business model that you are in, how long you've been doing this thing, and the kind of scalability which is available here.
Yeah, first of all, Sajid, thank you for having me on the show. Yes, we are a platform for construction materials. To put it simply, we make construction material supply extremely simple and easy. We buy, deliver construction materials directly to large construction project sites all across India. Because this industry is massive, I think the opportunity is huge, and that's what we want to capitalize on.
When you say that, so you provide a platform service where vendors can come in and companies can come in and sell directly to the prospective clients. How is it actually?
Yeah, so we don't operate as a marketplace. We don't just list vendors. We actually control the entire supply chain. So we buy materials from our vendors ourselves, and we directly deliver to all the construction sites across India. So we are not just a listing marketplace. We are a platform, but we actually own the transaction, and we buy and sell the materials ourselves.
Okay, so it's basically an inventory-led model. Is that what we can call it?
In fact, that's a very interesting point. That's one of our differentiators. We don't actually own any inventory. We operate as a platform. All of these are back-to-back transactions, directly sourced from manufacturing sites, delivered to delivery sites. We are a zero inventory model. We don't invest in capex ourselves. We don't own any plants. We work purely as aggregators.
Okay, so if that is the thing, what is the kind of revenue model in this entire thing? How much revenue do you get per transaction, and how does the revenue gets recognized for you?
Yes. So the revenue recording happens based on the value of materials sold. It's not a brokerage or a commission model. For example, if we buy materials worth 100 rupees and add our gross margins and sell it in the market, let's say for about 120 is the revenue that we record in our books. So that's how we record revenue.
So, so let me come straight. So basically, the 546 crores that you have recorded for 9-month period is actually the gross revenues of transaction. It's like a GMP in a platform, right?
Yes. So 546 is actually the value of materials sold through our platform.
And what would be the percentage of profit or revenue that you keep with you as part of the transaction fee? It could be a transaction fee or platform fee, with whatever manner you're going to name it.
Yes. So just to put that in very simple manner, 546 is the value of material sold. Our gross margins currently are at about 14%. This is just the 9 months revenue and profit that I'm talking about, FY25, and our adjusted EBITDA stands at about 45 crores, which is about 8.27%.
Because your EBITDA was coming at 33 odd crores for the 9-month period, not the adjusted one, but the EBITDA as a whole. What's the difference? Why is there a difference between adjusted and the nominal EBITDA?
Yes, you're absolutely right. The reported EBITDA is about 33 crores. We adjusted this for ESOP expenses and one-time expenses. So we have mentioned this in our definition of adjusted EBITDA. Once we adjust to those figures, we stand at about 45 crores of adjusted EBITDA.
Okay, what we can see is that your reported EBITDA margins are around 6%, and you made profit for the 9-month period of 6.5 crores. What is the kind of EBITDA that you can actually take this to EBITDA margin actually? What is the kind of time flight path that is there for the for the EBITDA, reported EBITDA?
As you're aware, not to comment on about the future numbers, but what I can actually mention here is in the last 2 years we've recorded strong EBITDA. FY24 at about, let's say, 38 crores odd to about 9 months EBITDA about 45 crores, and this is adjusted EBITDA that I'm talking about. So we have seen significant growth in our profitability ever since the first year itself. Going from 7 crore in the first year to about 45 crores in the 9 months of FY25. So, we've been, building a very, very strong sustainable model, focusing more on profitability, on operationally heavy, construction materials. And that's exactly, what we want to do, going into the future.
Well, that's all the time that we had on this edition of Profit Top Trades. Stay tuned for India Market Close coming up next.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. अब कोई soft spoken तो है?
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kuman desaya.
Imports become the exception rather than the norm, And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Mahima Vajrajani. Let's pick up where we are, where the Nifty is concerned. We're around 0.7% lower on the Nifty, so not as bad as we've started the day off, frankly. And we're well off the day's lows as well. So let's give credit where credit is due. There's a very decent recovery that we're seeing in markets. Of course, there's some bit of tepidness with regard to global, as well as everything that's playing out even domestically in Gujarat, in Ahmedabad. But nonetheless, we're doing fairly well for ourselves where the markets are concerned. Let's pull up the intraday chart on the Nifty 50. And there you go. So from the lows, we've done nearly 250 points. We've obviously clocked a high of 24,750, and we are around 50 odd points away from that high, but a 220 to 230 point rally looking not too bad at all. Let's look at the heat map as well. Basis yesterday's close, of course, this heat map is largely as is. We're seeing at least the advanced decline in that combination looking equally difficult in trade today as it was yesterday. In terms of what's really in focus, that has tilted and shifted towards defense and oil extraction. So you're seeing ONGC, BEL on the back of those, and then there's a clutch of IT names which are doing decently okay in a market that's otherwise in decline. Let's look at the advanced decline as well on the overall market before I toss it across to Mahima to take us through broader markets. It's been a steady kind of a move. We improved midway through the day, but we've somewhere deteriorated a wee bit towards the end. We've started very much with the bears in control, and today has been that sort of a day, right, Mahima? Likely even the broader markets are seeing recovery, but nonetheless they're in the red.
Absolutely in the red, and although a tad bit better than how the benchmarks are doing, right? The mid cap 150 is down by about 0.5%. The small cap 250, the kind of downtick has widened, but still down by about 0.5%. So that's with respect to where mid cap and the small cap stand. But let's pull up some stock specific names in the, and the pain plus gain is on the broader end of spectrum. There counters like Jubilant Ingravia, which are doing very well in trade today, and this is on the back of a block deal, the promoter likely to sell its stake. And it's also interesting that the entire Jubilant group is going to see this promoter stake sale. It's going to be in Ingravia, there's Pharmova as well as Jubilant Foodworks. So the stock is up 12%. There's Shipping Corporation of India on the back of the entire Iran-Israel conflict is up by about 11% because the freight charges for them will go up. In terms of other counters that are doing well, there's PSP Projects, Valor Estates up by about 8%. Nazara Tech doing well in trade today, up about 6%. Idea Forge 361 also doing well in trade today, but some counters that are under pressure. If you can pull up, in fact, the BSE 500 and see the entire universe as to how it's doing. There you go. There's Interglobe. still seeing significant amount of pressure, and it's down by about 4% now. Canara Bank, Rajesh Exports, Prism Johnson, all of these counters facing the kind of heat that is there in the markets today. But interesting news flash coming in from LIC, and that is they've come out and said that they've announced relaxation for victims of Air India 171 in the plane crash that of course the Ahmedabad witnessed. And what they've said is that they're committed to supporting affected, and they will expedite the claim settlements to provide financial relief. All efforts will be taken to ensure that claimants are reached out, and they'll try to expedite the entire process as fast as they can. But this is going to be a big hit in terms of the insurance claim going in for these insurance companies per se.
Well, yes, a lot of this is going to be borne by reinsurance, Mahima. Actually, that's essentially how this works.
Right.
So a bulk of it will be borne by reinsurance. The insurance industry in India, I don't believe will have a large impact. GICRE might have a bit of an impact. So maybe let's pull up some of those stocks actually while we're speaking about that. Let's pull up what a GICRE is doing. Okay, 1.5%, so not too bad. Let's pull up what a New India Assurance is doing. LIC, of course, muted, but just 0.5% lower, and that's the least we could expect, frankly, coming from an LIC. They've done this in the past as well, and they continue to remain committed to the victims. So fair statement coming out. Let's though quickly go across. Ruchit Jain, VP Equity and Technical Research at MOFSL, joining us. Ruchit, how are you viewing markets? Firstly, good afternoon. A decent recovery. It started off as very much a Friday the 13th kind of a day, but we've seen a bit of a recovery, right? So credit where credit is due.
Yeah, hi, very good afternoon, Harsh. Very good afternoon, Mahima. Well, if we look at the recent up move, then the broader markets had already hinted a couple of days ago that we would see some kind of pullback move or a correction in the short term. So primarily before going on a Nifty, I would start with the Nifty Midcap 100 index. So if you look at the Nifty Midcap index, then in last 2 months, right from 11th of April till 11th of May, 11th of June, that is in a time frame of 2 months, the index has rallied by 10,000 points. In percentage terms, it's come to about 21%. So the index has already seen an up move of 21% in 2 months of time frame, and we cannot expect that to keep repeating every 2 months, right? So there would be some phase where there would be some consolidations or corrections, which would be, of course, a part of the uptrend itself, because of a broader trend for our markets is still positive. But at least in the short term, last 3 trading sessions, if you see, before today's this news flows came, if we open with a gap down, but since last 3 trading sessions itself, the market breadth was more negative rather than positive. So I think there are signs of some corrective phases in the broader markets. Now corrections, either there are price-wise correction or time-wise corrections. Now given the nature of the uptrend that we have seen in the recent past, we believe that we would see some kind of a time-wise correction in the near term, where the indices would trade in a broader range, and there would be more of a sector-specific or stock-specific rotation which would happen. On the Nifty index, in last 1 month, whenever the index is corrected towards the 24,500, 24,450 range, we have seen the markets taking support over there. Even the 50-day exponential moving average for Nifty is coming around 24,400 itself. So we believe that the price-wise correction seems to be very limited for our markets. 24,400 to 24,500 would be a significant support range. Until that support is intact, it remains a buy and dip market for our markets. But yes, if we are a short-term trader, then expect some consolidation or time-wise correction to happen, wherein on the high side, 25,200 would be the resistance on the high side. And there would be more of a sector-specific or stock-specific rotations, which would be thing to pick up for next few weeks now.
Would those stocks be which would come to the fore, Ruchit?
So a couple of names that we are watching where the broader trend seems to be positive in spite of the volatility that we have seen. So one is, of course, Tech Mahindra. The overall IT space looks positive from a risk-reward ratio perspective. The IT space has gone through a long phase of underperformance or a correction, considering the lot of uncertainties which were there related to US tariffs. And I think somewhere since that concerns have now been addressed, or at least that concerns are reducing, So we can expect momentum in the IT sector where the risk reward ratio is still favorable. So Tech Mahindra within the IT space, if we do comparative analysis, then this seems to be the strongest name amongst the large cap IT names. So Tech Mahindra can be bought at current levels with stop loss below 1600, expecting targets around 1740 in the short term. And Max Healthcare is second name, which we have even recommended to our clients to go long. So primarily an outperformer in the broader market. Since last 2 months, the stock has seen some consolidation around its 52-week high itself. Yesterday, the stock gave a breakout. Today, there is a follow-up move in spite of this gap down opening, which you have seen today. And the stock is again trading its all-time high. The volumes are good along with the price up move. So clear signs of a resumption of the uptrend after a broad phase of time-wise correction. So Max Health, one can buy with stop below 1175. So for potential targets around 1300.
Right, Ruchit, any view on Nifty Defense? I mean, 1 month chart, I'm just pulling that up and it's up almost 23% now. Do you think there is more steam left there or one should start booking profits there?
So Mema, I think defense is one theme which would continue more from a mid to long term perspective rather than only short term moves. The kind of leadership that the defense space has seen since the month of March itself, the volumes are quite strong whenever the stocks are going up. Whenever there have been corrections, last 3-4 trading sessions, we have seen some pullback move in many of the defense names, but there is no volume-based selling when prices are going down. So I think that the defense space is the trend, the broader trend in the defense space is here to stay for a few months or maybe a couple of years at least. So one can definitely stay long if anyone is holding long positions. Any kind of dips that we are getting in stocks such as BEL is there, HL is there, BML, BDL, I think these are all looking structurally positive. So buy and dip strategy should be kept for the defense space.
Okay, all right. And in terms of, if we pull up the sectoral performance today, Nifty IT is one of the sectors that is in focus. Anything that is standing out there or any counters that you think, apart from the top pick that you have, is something that one can enter into right now?
Yeah, so if you look at Nifty IT index, then as we already spoke, that this has been one of the index where the risk reward ratio seems to be favorable because it has not yet participated much in the last couple of months up move, although some pullback move had been sent. 38,900 is for 38,900, 39,000 is where the immediate short-term resistance is there, which I think should be surpassed. And once that gets surpassed, I think the broader IT stocks could see a positive move. As of now, we are focusing more on the large cap IT names, stocks such as Tech Mahindra, which we already recommend, even Infosys or HCL Tech, broader from the large cap space, are looking positive. So I think one should focus more on the large cap IT stocks for now. And once we get a breakout above this 38,900 on the higher side, then I think the mid and the small names would also start participating within with KPIT Tech, Tata Elxsi. These are a couple of names which are on our watch list.
Okay, Ruchit, we'll let you go on that note. Thanks so much for coming and giving us all of those views on a very, very happening day. Let's talk and let's switch focus to oil. Israel launched a wave of airstrikes against Iran's nuclear program and ballistic missile sites today. This marks a major escalation in the standoff between the two adversaries. Agni is here to break down how this risks sparking a wider war in the Middle East and what the conflict is all about. Over to you, Agni.
Right, so like you said, Iran and Israel have launched a spate of attacks against one another, which started with Israel launching airstrikes against Iran. Now, Israel has struck Iran's nuclear program and ballistic missile sites. Now, there were explosions heard across Tehran and the city of Natanz, which is about 300 kilometers away from Tehran. Israel says that it has also targeted Iran's nuclear scientists and generals. So clearly, there has been a targeted attack on individuals as well. Now, we know that Israel's PM has said that they are going to continue the strikes for as long as they go, and this is an image of Israel's oil and gas fields. So if you look, Tehran is somewhere up in the north where the attack took place, and there's a refinery there. There's another refinery in Abadan which you see marked in red over here, and one more refinery here, the Bandar Abbas refinery. Now Iran has come out and said that all of its refineries are safe and nothing has happened to them. But moving forward, you will see that the strikes are going to continue, which is what Benjamin Netanyahu has said. said, and we'll go as long as it takes to remove the threat. Now, what exactly is the threat he's talking about? We'll bring more on you, but they are saying that they have struck the heart of Iran's nuclear enrichment program. So clearly there are strategic sites in Tehran and Natanz which Netanyahu is talking about. Moving on, if you see that Iran's state TV says that the head of the Islamic Revolutionary Guard Corps, who is Hossein Salami, was killed in this Israeli attack, and Israel has also said that there is a special state of emergency within the country as it anticipates a retaliatory strike by the Iranian forces. Now, Iran, again, like I said, says that there are no damages to oil refineries, the 3 refineries that we showed to you, which are crucial for the country's economy. Now, moving ahead, we will look at how markets reacted to this news. So, Brent has risen 9%. It has topped the psychological benchmark of $75 per barrel. S&P contracts have fallen 2%. US 10-year yield has also marginally dipped, and it's expected to go down further if this conflict continues. And gold, of course, has risen 1.7% to 3,444 rupees a piece. Now, though the war is between Israel and Iran, let's take a look at what US is saying. Now, Marco Rubio, the US Secretary of State, has said that US is not involved in the airstrikes, but of course Iran doesn't buy that. They are saying that they are involved, but US is saying that they have warned Iran against targeting American interests or personnel in retaliation. It's a huge area of interest of US. They have a lot of assets, a lot of personnel there. Now, Trump had earlier said that he didn't want Israel to attack Iran, so there is a clear commentary of de-escalation from the US president, and they said that they were committed to a diplomatic resolution to the nuclear issue. Now, American negotiators, we know, were in Oman to discuss the limits on Iran's nuclear program with Irani officials. As of now, airspace within Israel has been closed until further notice, and Iran has also halted operations in the Tehran airport. Now, moving on, I told you I'd tell you more about what the entire nuclear issue is about. So, Iran has been significantly expanding its nuclear enrichment program since 2019. Remember, this was a deal they had signed with Barack Obama, but from which Trump later withdrew in his first administration, and ever since then, Iran has been insisting that its atomic activities are for peaceful civilian purposes only. And moving ahead, we can see that Trump's efforts to forge a new deal ever since in his second administration have not made much of a progress. But US and Israel say that Iran must not be allowed to continue with its nuclear endeavors. But Iran says that, of course, this is crucial to its functioning as a state. But yesterday, which is June 12, Iran had announced that the inauguration of a new uranium enrichment facility, which is probably the trigger which led to a wave of airstrikes from Israel's end. And the new facility was announced after the UN's watchdog, which is the IAEA, warned Iran that it was not complying with international obligations. Now, going ahead, we can see a map of all the nuclear sites which are in Iran. You can see that there are uranium enrichment sites, there are power reactors, there are also research reactors and uranium minings over there. Now, the military testing sites which you see near Tehran are the ones that you need to be watching out for. Let's go ahead and look at what the wider history of the conflict is. So, Iran and Israel have been locked in a shadow war for decades now. Iran, of course, doesn't officially recognize Israel as a state, and Iran is accused of using proxy forces such as Hezbollah in Lebanon, Hamas in Gaza, and the Houthis in Yemen to attack Israel. Remember, Iran's support of the Hamas was one of the main reasons why Israel has been carrying out its genocide in the Gaza Strip over the year and a half. And Israel is accused of being involved in a series of assassinations and covert attacks on Iranian soil. So they have been particularly targeting their nuclear scientists because this is what they see as the #1 threat that Iran poses to them in the region. But Israel says that Iran has launched over 100 drones in the last few hours after Israel's first attack. But Israel says that we have countered them successfully. The Bank of Israel, on the other hand, says that it is prepared and ready in all areas of responsibility to shield the country against any economic shocks. And the US atomic watchdog has said that there has been no increase in radiation at Iran's Natanz site. Remember, we showed you the map where all the nuclear testing and reactions facilities were. Turkish ruling party has condemned Israel's attack on Iran, and so has Qatar in the last few years. So you can see there's a wave of support coming in from Irani supporters in the region. And that is the latest update that we have for you. It's a developing situation. Do stay tuned, and this is something global investors should definitely be watching out for.
Okay, thank you so much, Agni, for that very detailed piece. It was extremely interesting as well. At least I found it extremely interesting. Let me bring in Probal Sen, Senior Research Analyst at Oil and Gas at ICICI Securities. Probal, what do you make of everything that's happening? Just give us some perspective. Oil price shot up, has come back off from those highs. How are you reading into the situation, and what are your expectations?
I think more qualified people than me are entitled to comment on what the geopolitical implications are of whatever is going on. Frankly. So the only thing that I would point out is that crude was at nearly these levels not that long ago. So even after all the sentiment that has turned towards the geopolitical tensions, the fact is that crude still reached about $75-$76 levels. Yes, there were fears, and there I think are still fears that depending on the scale of Iran's retaliation and then what Israel does in return, and whether this conflict then extends to actual disruption on the Strait of Hormuz, which is basically the critical area that Iran is in control of, and through which I think almost 25% of all globally traded crude is actually shipped. I think that will probably continue to remain a key monitorable, whether Iran can and will actually disrupt operations on this strait. Because in any ways, what we have seen is that shipping routes across the world, the Red Sea, due to the Houthi rebels in Yemen, the Panama Canal, because of the problems with respect to water levels, those anyways have been impacted over the last year or so. So this additional, disruption can actually raise the costs of transportation and can disrupt actual supplies to a huge extent. Secondly, Iran itself, despite whatever sanctions have been imposed on it, still manages to, I think, export close to about 1.5 million barrels. Reports vary of the actual number, with most of the output being consumed by China. And therefore, there are other implications as well if that crude supply is impacted. Broadly speaking, at this point of time, at $75, yes, there is an impact because the $7 increase has three implications. One, around a 3.5 to 4 rupee reduction can happen in terms of the retail fuel margins for the OMCs. Obviously, there's every dollar increase in net realizations has about a 1.3 to 1.4% positive implication on EPS for ONGC and Oil India. So there had been some downgrades that we had seen because crude had gone down versus their earlier realizations of 74 to 76. So this obviously restores realizations back to those levels. So that has an impact. And of course, three, even for the natural gas segment, as far as we are concerned, given that term LNG prices and now even new well pricing are all linked to Brent crude levels at about 12 to 13% linkage. As you can imagine, a $7-8 or a $10 movement increases the price of both of those tranches of gas by $1.2 to $1.3 in MMBTU. So obviously, a sudden increase and the kind of extent of increase is a broader negative. But I will again emphasize that this $75 level is still below the average crude that was there for FY25. If memory serves, it only sort of is, obviously a stark contrast to where crude prices had slumped to in the backdrop of the whole tariff war and concerns about global economy and concerns about, adequate supply. So this brings the market back into sort of slightly tighter territory, I would think. But I think if supply routes are not really impacted, and as I said, I have no clarity on what will happen over the next few months, I think crude will probably settle back down once again to $70 to $75 levels. So we'll have to see and wait how it goes.
Right. Probably just in case, if things escalate further, then we're not expecting, crude to settle down to that $70-$75 mark, right? Just want to get a sense that it's, because the crude derivatives have an impact on multiple sectors. It's your paints, your tires, your lubricants, your packaging companies, all of these will be impacted because anywhere between 30 to 40, 45 odd percent is crude derivatives is that percentage of the total raw material cost. How do you think that entire thing to play out, and what sectors and stocks do you think will be impacted the most?
I think very clearly, see, at the end of the day, we are price takers as far as commodities are concerned. whether it is crude or natural gas or even metals to a certain extent. So at the end of the day, if there is a sudden and sharp movement that we are seeing, and if this continues to sort of escalate, then obviously as the sectors that you mentioned, paints are there. There are several, construction industry uses chemical derivatives which are linked to petrochemicals. FMCGs across the board use a lot of petrochemical products in terms of packaging, in terms of other things. Food inflation is sometimes linked to what the price of diesel could be. Now there, obviously, one will have to see whether OMCs are allowed to raise the prices in line with the rising crude prices. I don't know. As of now, they have not really taken a price cut, which was due for a long time. So how that will be balanced, we don't know. But if that price is allowed to be passed on, then transportation costs actually rise across the board, because diesel obviously is used by the transportation sector in a very, very meaningful manner. So there is a whole lot of trickle down impact that happens. I'll once again emphasize, at $75, probably that impact doesn't show through to a huge extent. But as you rightly mentioned, if the conflict escalates, or rather the sentiment around crude prices continues to change towards more bullish territory, and we see $80, $85, $90, then I think you would have a very, very broad negative impact across sectors and across the economy of this conflict.
Taken, Prabal. Prabal, pointed question with regard to oil and gas. You have upstream and downstream. For how long at these price levels does the consensus earnings estimate for FY26 likely change?
I think the answer would probably be surprising. I would say at $75, it won't change too much, because I don't think anybody was realistically building in $65, $67 for the full year. I think a lot of estimates across the street were still probably building in maybe about $70. So additional $5 reduces marketing margins to a certain extent. So there is obviously mid-single digit downside risk to OMC earnings, and similarly a mid-single digit upside to upstream earnings, which is ONGC and oil. Gas becomes a little bit complicated because, gas prices, as I mentioned, are a derivative of crude. And, you will have to also factor in whether they can pass on the prices, whether they'll have to take a hit, and so on and so forth. But obviously, what we are looking at essentially is probably the street going from 70 to a level of $75, $76 at this point of time. And that $5, $6 obviously will have a negative impact on everybody other than ONGC and Oil India. That is probably how I would look at it right now.
Okay, thank you so much, Prabal, for joining us, giving us that perspective. Prabal, someone who most of us listen to when it comes to oil and gas, have our ears on him when he's talking, clearly brushing it off, saying that it's not going to be that big an impact. So maybe
not at $75 per se.
Yeah, exactly. And maybe therefore that reaction, and I would believe him when he says that, and therefore that reaction, let's pull up some of those counters very quickly. And HPCL, a BPCL, and ONGC, and Oil India, let's quickly look at some of those names and just see as to how they're doing. And some of these have already taken a knock-in trade yesterday. So again, I want to figure whether this is actually a value zone for some of these plays. Okay, let's do a thing. Let's slip into a short break. On the other side, we'll continue our coverage on crude and implications of the Israel-Iran conflict on India. We'll have M.K. Surana, former chairman and managing director at HPCL, to get us that perspective. We'll also get stock ideas from Aditya Shah and Kunal Shah on the other side. Stay tuned.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब कोई soft spoken तो है?
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
you even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kumandasaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk.
Welcome back. You're watching India Market Close, and you know the big story that's dominating really across the world is what's happening between Iran and Israel. And who better to speak on the implications, not just for the oil and gas sector, but for the entire space from an Indian perspective than M.K. Surana, former CMD of HPCL. Mr. Surana, thank you so much for speaking with us. Tamanna here. Great to have you on NDTV Profit. Let's just start. Thank you so much, sir. Let's just start by understanding whether you think crude prices will stay at this peak. Is what we're seeing with Brent right now, in your view, a knee-jerk reaction? Because if it is, the impact should not be so much on downstream companies.
First of all, thanks for having me on your show. So let's, right now the situation is in the domain of uncertainty. So we can't say surely, but let's analyze in a scenario basis. There are three scenarios possible that either this issue which has escalated between Israel and Iran, it settles, or the second thing, it remained constrained or contained within that zone only, and third, it escalates to engulf the whole of Middle East region. Now, structurally, if you see, there is no reason why the crude prices should be running above $70 because there is an increased supply of crude from the OPEC countries. Since last 3 months, they have accelerated the supply. So there is more supply in the market. Because there is a summer season and driving season, so there will be some increase in the demand. The China-America story is still having the issues which have a shifting stance on the everyday basis. So demand side, there is no specific triggers to drive up the price. So structurally, I don't see there is any reason why the crude prices should go above $70 apart from the geopolitical tensions. Now, as far as geopolitical tensions are concerned, definitely whenever such thing will happen, there will be a risk premium which will get built in, not only in the prices, but also the freight cost, the insurance cost, and also the speculation activities hikes up. So that is the reason which you are saying the sudden spike of almost 10% or so today. Now, whether it will stay at this level, it depends on how this thing comes. As I mentioned, in three scenarios, there may be different things. If the issue is getting settled, it should come down back to below 70. If it remains contained also, then I think there are lesser possibility of, though there will continue to be volatility, but lesser possibility of going beyond 80. But if it escalates beyond, then definitely it will go high. Now, come fourth quarter, I think by that time the summer season would have been over. If the accelerated supply continues, in that case, there will be all the 2.2 million barrels per day of supply would have been in the market by that time. And if the demand triggers are not there, there will be a surplus oil in the market. And therefore, the crude price should come back to 65 range by the fourth quarter if the geopolitical tensions do not give some different scenario.
What is the lag, Mr. Surana, before it starts hurting pricing for Indian companies? Because obviously inventories are built up in advance. So if you have prices at a steady 74, 75 where they are right now, say for the next couple of weeks, how soon does it begin to hurt margins for us?
So it depends on which coast of the country you are on. The west coast, it will be lesser time, but on the eastern coast, it may be anything between 30 to 45 days from where you are getting the crude supply, while on the western coast, it may be anything between, let's say, 10 to 25 days. But if you see the Indian situation, for quite some time, the prices were static in the domestic market on the pumps. And in spite of whether the crude prices were high or crude prices were low, and the government has managed it with increase or decrease of the excise duty. Now, if that is the situation, I don't see a change in the pump price in the immediate future if the crude prices are not going beyond, let's say, $80 or so. And because the margins on especially the MSHSD were reasonably good in the recent past, and there was a lot of clamor for reducing the prices, which has not been done to that extent. So I don't see that there will be increase in prices immediately unless the crude prices continue to be high for a substantially long time. And in that case, also government will have a way to manage the excise duty or reduce the excise duty, because some election in some of the states will be coming in the future. And government for a long time now, almost 2.5 years, has maintained the pump prices static. Also, with the RBI giving a heavy dose of liquidity in the market, government will be cautious of inflation part if the crude prices are going, if the pump prices are going high, because it will have a snowballing effect.
Mr. Surana, this is Harsh here. Please clarify if I have understood correctly, sir. Are you trying to suggest that the spike that we saw today morning was largely a knee-jerk reaction?
It is definitely a knee-jerk reaction. Whether that jerk reaction will continue will depend on how it pans out now.
Sure.
So if you see the history of crude oil, always the jump happens in a knee-jerk reaction only, when you would have seen the oil price going up suddenly from $60 to $128 and then coming back to $40 also. But knee-jerk reactions then comes down also quickly. So as I am mentioning, that structurally there is no reason for the crude prices to be high. And definitely it is a reason for the risk premium. What you call is knee-jerk reaction. It is the risk premium which get built up in the prices. Because let's assume that if the crude vessels have a risk in passing through certain areas because they are under the turmoil or it is under the conflict zone, the insurance cost, the freight cost will increase. Second is that there will be speculation. A lot of paper activities also happens on that, which boosts up the price. And it always moves in the direction of the momentum. If the prices are going up, the speculators will pump it further up. And if it is going down, they will beat it down further.
Mr. Surana, thank you. You've been extremely elaborate and you've been extremely clear with what you've said. So thank you for coming in, speaking with us. Fascinating, right, Tamanna? My key takeaways, frankly, from this is it was a knee-jerk reaction. Oil prices have cooled off thereafter. We've seen a sharp cool off, a 5% odd cool off in crude oil. And the fact that till $80 a barrel, OMCs will largely be unaffected.
So the kind of hit that you've seen today, and on the other side, the kind of gains to ONGC also might be a bit exaggerated.
Correct. Yes.
Even for an interglobe, for that matter. I mean, I don't know if they get impacted that quickly. I seriously doubt they get impacted in a day. And the fundamental reasons why crude has been at low prices through the last several months don't change. That demand is low, global economy is not really firing up. US, and its shale production, those things haven't changed.
Correct, absolutely. So in fact, let's take a quick view as well. Aditya Shah joining us, Kunal Shah as well. Aditya Shah from Hercules Advisors and Kunal Shah, Senior Tech and Derivative Analyst at Mirae Asset Sharekhan. Aditya, let me come to you. Not sure how much of that conversation you heard, but clearly and evidently so, it doesn't seem to be a large impact. And even if it is, especially for OMCs, even if it is, what is being suggested by Mr. Surana is the fact that the government has enough bandwidth in terms of excise which could well offset any large knock which any of these companies will actually take? We've seen a 5-7% correction in the stock prices of some of these companies.
So, good afternoon, Harsh.
Good afternoon.
Iran is a very important partner for India in terms of the crude oil supply that India gets, and any hit or any war that Iran is engaged in is not only negative for India, but it is negative for the entire world. That we could see a short-term spike in the crude oil prices, but I don't believe structurally there could be a sense that that supply is getting disrupted over a longer period of time. If there is an elongated war, I think people will start to come in and ask both the parties to calm down so that crude oil market is not really affected. So in my opinion, this is short. This is negative in the shorter term. However, longer term, this will not have any bearing per se. Again, negative for for aviation companies, and negative for the paint companies and all those who are dealing in crude related derivatives. But over a longer period of time, I don't think this has a material impact on any of those companies.
Aditya, hi. Very good afternoon to you. I mean, would you say that it is heartening to see not a massive recovery, but of course off the day's lows? Is that heartening, and would there be positions that you feel confident about building up, or any picks that you feel confident about, especially in the BFSI space right now?
So I think today was a reaction to what the war was. The war news was there, where where Israel had attacked Iran, and the market wanted to see what really happens. But domestically, per se, the economy continues to do really well, and that's where your concentration should really be. Likes of an HDFC, ICICI, or an SBI for that matter, also within the BFSI space, continues to do really well. Companies like HDFC AMC or a Nippon AMC, they're continuing to do tremendously well. Domestic facing economy stock, we are seeing that everybody is trying to move into the mutual fund and the advisory business. That is the next theme that one should really concentrate on. Insurance stocks will continue to do really well. So domestic facing economy stocks will continue to do really well. Up and down of the market, because of the international issues that are taking place, are part and parcel of life. People need to use this to their own advantage. Whenever they get an opportunity in good stock, they should enter.
Okay. Let me go across to Kunal Shah as well. Kunal, a very good afternoon to you. Do you think that there is some underlying strength that we're seeing on the Nifty?
Good afternoon to everyone. Yes, definitely what we have seen in the markets in the last couple of trading sessions, yes, there is a bit of volatility which is there, but the larger term trend still remains intact. So for me, on the downside for Nifty, 24,400 will be acting as a very critical support for the market. If that is taken out decisively, then we move towards on the downside, where the next support comes at 24,000, 23,800 mark. So till the time we are holding 24,400, I'll be still bullish on the markets. The immediate resistance for the markets is placed at 24,800, 900 zone. This is where the 20 DMA for the Nifty is placed. If we are able to see any rejection out there, aggressive rejection out there, then probably we might see this support getting breached on the downside. So till now, I think it's a broader range in which the market will trade, where 24,400 is the support and 25,100 is the resistance. So I expect the market to trade in this broader 500, 600 point range. Within this range, you will get opportunities on both the sides. A breakout or breakdown on either side will have trending moves in the market. Coming to the Bank Nifty index here, similarly, the Bank Nifty index was one of the leaders. And in fact, in today's trading session, we break the 20 DMA. But again, we are seeing a smart recovery from the lower levels. So now the broader range for the Bank Nifty is 56,500 to 55,000. So again, a 1,500 point range for the Bank Nifty. And I am expecting Bank Nifty to trade in this broader range. Overall, the bias remains positive. Only a break below 55,000 will see further selling pressure on the Bank Nifty towards the mark of 54,000.
Okay, Kunal, your picks for this afternoon?
So there's two picks. One is on the buy side, one is on the sell side. First, I'll discuss the buy pick, and that is Max Health. I think a very strong setup on the chart. So what we have got, it's a rounding bottom formation on a technical chart, a breakout with volumes, what we have got. So this looks very strong technically. 12, 30, 31 is where it is trading. One can go long at the current levels, keeping a stop loss of 1180 and looking for targets of 1270 to 1295 on the higher end for Max Health. Second call, that is on the sell side, and here I'll go sell on Dixon Technology. Already the structure is quite weak. The stock has been forming lower top, lower bottom formations. Today the stock has breached the recent swing low of 14,500, and even when the markets are recovering, it is still trading below that level. So clear cut weakness over here in the stock. Any bounce would be a good opportunity to go on the sell. So currently the futures are trading at 14,324. 14,400, 500 would be an ideal range to go short onto. Keep a stop loss of 15,000 on the upside and look for a downside target of 14,000 to 13,700.
Dixon Tech on the radar on the back of that call. Aditya, let me have your view. Dixon Tech has entered into a binding term sheet as well with Signify, which is a subsidiary of Philips Lighting. Now they're getting into lighting equipment and they're doing manufacturing within that space. They're trying to improve margins. Of course, valuations not comfortable, but is this the right direction in terms of the way they're building their business up? They're diversifying. They're trying to do better margin business. They're getting into new businesses. They have certain moats which they've created, and they're trying to add to those.
So, in the longer term, in order to get the valuations going, the focus is really on expansion into businesses where margins are really very good. But then the core focus of Dixon has always been into one business, which is the mobile manufacturing business per se. And I will want Dixon to concentrate there. I don't know how they're going to behave if they enter into the new businesses per se. This is something to watch out for. It is good, but we don't know what is the execution time. And again, many people have failed in the lighting business per se, and we don't know what the future is going to be. However, the bigger risk to Dixon continues to be its valuations. Valuations are extremely expensive. Any knock on the growth will mean a valuation derating for the company. So one should be very careful on the stock, but one should also monitor the stock for how the ramp up goes up in the future. I would right now stay away from the stock and wait for how the progress is to take a call in the future.
We continue to focus on global, and shipping companies are in focus because freight rates have surged. In fact, the Baltic Dry Index, which we've been tracking since the morning, is up 10%. And we are seeing a whole host of stocks moving around on the back of that. We have Jasmeet here, who's here to explain it and also, bring us the stock of the day. Jasmeet.
Well, the stock of the day today is Shipping Corp, which is 11% up already in trade. Let's understand why is that. Most of the shipping stocks are skyrocketing today on the account of the Middle East issues. Let's understand why is this happening. All ships coming from Israel generally take Strait of Hormuz route. That's the only route available for the closest distance from India. While the companies take that route, they reach sooner. Well, given that the ships have to avoid that route, to avoid the tension, they'll take a longer route through Africa. Now, when they take a longer route, this would increase the freight charges, also make the fuel costlier. But why would a shipping company's share price rise given that increase in crude oil? Let's understand this. The Baltic Dry Index, which is up 9%, while the index is about the freight charges, which is already up 9% today, which says the freight charges will be going up in the coming time. So given this reason, which is a positive sign for the companies, the longer route and the costlier route, this will be a positive sign for the company. And as Shipping Corp revenue, 77% of it is based out of tankers and carriers. Now, to understand the amount of exports that generally come into that particular route, while Iran exports 2 million barrels per day of oil, while India imports nearly 80% of its crude oil. And Indian crude oil imports mainly from Gulf nations like Saudi Arabia, Iraq, UAE, and Kuwait. That's the reason why the stock is buzzing today, and it's the stock of the day.
Very, very well done. Thank you so much, Jasmeet, for breaking that down for us. Pertinent questions, pertinent answers. Aditya Shah, what do you make of some of the shipping companies? Is that something that finds favor in your portfolio?
Not particularly an avid follower of the sectors, Harsh, will not be able to comment on.
Shipping Corporation of India seeing that buzz today. Kunal, I wonder on the charts if you see this sustaining. If you were holding, would you recommend an exit right now on Shipping Corporation of India?
So for SCI, the next resistance zone on the upside is at 242, 243 mark. We are trading at 229. So still some momentum left in the stock. So say around the mark of 240, one can look to exit the stock.
What about Jubilant Engrava? That's the other buzzer today because of block deals. Actually, a couple of block deal action-backed stories this afternoon. Jubilant there, definitely Jubilant Engrava. Interglobe as well, buzzing in part because of the crude hit. What do you make of Jubilant on the charts, Kunal?
See, Jubilant has already been in a relative strength, and we saw this breakout coming in today around the mark of 750. And now we expect further momentum to continue on the technical chart, where it can go towards the mark of 810 to 830.
Okay, so just stay on with us, Kunal and Aditya. We were talking a short while ago about Interglobe crude prices. We've been talking in detail about the impact of this, but what's the impact for the world? Michael Ingram joining us now, market strategist. Michael, good afternoon to you from where we're sitting. Definitely not afternoon for you yet, it's morning. But how are you looking at all the developments you would have seen overnight? Things seem to be escalating very, very quickly, and we don't yet know what the retaliation, if any, from Iran on Israel is going to look like, isn't it?
Yes, indeed. And I would point out that equity markets were actually in quite a vulnerable position prior to these Israeli airstrikes. We'd seen global equity indices make up most, if not all, of the losses that they had initially incurred in the so-called Liberation Day tariff disputes. There were moves perhaps to resolve the situation with China. So, you know, the equity markets were waiting to be slapped down. And of course, what's happened overnight has given the perfect catalyst for that. So no surprising that you've seen stock markets actually taking a bit of a hit. I would suggest that actually the price action we've seen such far is actually quite modest. And then again, you got, you know, on the flip side of that, in a classic risk-off move, you've seen gold move higher above $3,400 per ounce. So yeah, we're all on tender hooks at the moment. I think one thing to look forward to perhaps is that there was a scheduled meeting between US Special Envoy and the Iranian Foreign Minister scheduled for Sunday. Be very interested to see if that actually takes place. I'm pretty sure in any event that the Iranians are not going to sit on their hands and lick their wounds. These were massive strikes overnight, and they're going to retaliate.
Michael, very correctly put, right? There were massive strikes. Sorry, Harsh here. So there were massive strikes, and likely you will see a reaction. Our markets, the move hasn't been as strong as one would anticipate, given the way in which the situation is escalating and fast escalating. Do you expect there to be an accentuated move on markets, maybe over the next 12 hours at least, into the weekend?
Yeah, I think they're quite vulnerable. I think one of the challenges, ongoing challenges that multi-asset managers have been having really for the last year or so is they would actually quite like to be going into bond markets, but you know, inflation has been sticky globally. I know the last set of inflation numbers out of the US were relatively benign, but certainly expectations have moved a long way over the last year or so in terms of, for instance, what the Fed is going to be doing, faced with this sort of inflation profile. So to some extent, if you're running a multi-asset portfolio, you're kind of stuck in equity. Now, you have seen a rotation, certainly this year, from US equity, which was a default overweight position, into certain European markets. You've recently seen the DAX in Germany, for instance, reach new highs. But that seems to have kind of run its course at this point. The growth outlook in Europe isn't very good either. So, you know, where do you go? A bit of it can go into gold. You know, we've seen gold reach successive new time high, but the amount of money you can physically put into that asset is actually quite limited. So, you know, as I say, unless you want to throw your hands up in the air and admit you've got no investment ideas left and you put it all into cash, which, let's be honest, the investment managers are never going to do, you're in a bit of a quandary.
When you look at this kind of a risk-off mode, do emerging markets and the idea of emerging markets sort of fly out of the window? How do you see it, Michael? And especially from an Indian market's perspective.
Yeah, I mean, theoretically you should, but I mean, reviewing the performance of emerging markets, thus far this year, they've actually been incredibly resilient. Now, some of this might be due to the fact that they've taken a bit of a beating and been serial underperformers in recent years. So there's a certain amount of catch up going on. And the move that I mentioned, the rotation into Europe, I mean, I think, emerging markets, certainly inflows have been a net beneficiary of that. The other thing which I think has mitigated any contagion effect into emerging markets has been the price action on the dollar. And the dollar's down about 10% this year on the dollar index. So this classic risk-off move where you see the dollar rise and then emerging markets getting hit and probably having to effectively import more unhelpful US interest rate policy. That linkage hasn't been there this year. The dollar has remained weak. It may get weaker still. So they're kind of off the hook. But let's be clear. We're not talking about vast flows. It doesn't take that many certainly institutional international investors to change their minds for the performance to actually reverse. But thus far, it's held up quite well.
Michael, just trying to play devil's advocate here. One, you have the US which is itching to cut rates. Two, you have Donald Trump, who wants peace in the world, or is preaching peace to the world. And three, we can ill afford major escalations globally at this point, all of which point to the fact that likely this situation might well get doused quicker than what most are anticipating. Could this well be a time to go contra?
It's possible. I mean, you say that the US is itching for interest rate cuts. I think certainly the Trump administration is itching for interest rate cuts. And obviously they have spent much of this year berating the Fed for not being quicker to cut rates. But if you look at what the market is thinking at the moment in terms of what the Fed is likely to do maybe a quarter point cut in September and a further quarter point cut in December of this year. Now, these are cuts which the market had been penciling well over a year ago. We didn't get as many cuts last year, so I think there's a question mark as to what extent there is effectively a Fed put on risk assets. In terms of, and again, if you go into in terms of the ongoing diplomacy in various areas of the world, well, I think it's quite clear that the Israelis went ahead with these strikes with the knowledge, but not with the approval of, I think, the United States. Trump had been trying a diplomatic route. Clearly, that is out of the window at the moment. And if we move closer to where I'm sitting in Europe, what's going on in Russia, Ukraine? Russia is continuing to attack Ukraine. It's continuing to come up with excuses. So there's a very real risk that Trump is either going to walk away from that situation completely and just say, this is Europe's problem. Or he might go the other way and decide that he's going to, increase aid to Ukraine and prolong the war. But neither, I would suggest, is going to be an option which is likely to decrease geopolitical risk. So, yes, I can see. I mean, we all like playing devil's advocate because it makes for interesting discussion points. But I think on the balance of probabilities, and given where risk assets have come, how equity markets have recovered this year, I still feel on balance that the risks are probably lie to the downside. But make no mistake, we're going to be tested in that over the coming days, because I would expect an Iranian response in fairly short order.
All right, thank you so much, Michael. This is a wait and watch situation. Let's be very, very clear about that. We do not know what's going to happen next, but this is something which will impact global markets as well. What's fair to say is that the panic of the morning has come off. So if I show you the intraday of the Nifty, if I show you the advanced decline ratio, both of these indicators will tell you clearly that the panic of the day has come off to some extent. You are not looking in as tough a mood, but this remains to be seen. It's the last half hour of trade. So if you are going to see more retaliatory strikes or any retaliatory strikes, more strikes from Israel on Iran, this could worsen as we move along. So that's the only part that you have to take care of, that this is a situation which could go either way. Now, on to our segment where we talk about the stock of the day, but we give it to you from both sides of the story. So today, Jubilant Ingreva is in focus. It's zooming on the back of a block deal, nearly 15% up now, and it's believed that the promoter families and the promoter entities could be selling these blocks. Why is it then zooming, and what is the bull case, what's the bear case? We're speaking to Varsha about this now.
Yeah, thank you so much for that. As you rightly said, the stock is buzzing on the back of block deals that the company has seen. But you know, over the longer horizon, what is actually working for the company? One is they've set a clear target. They want to triple their revenue to 12,000 crore and want to take their profit to almost 4 times from what they are today, that is to 4,000 crore by FY30. Now this will be driven by high margin specialty products and also new ventures that they are entering into, that is semiconductors. But on the bear case, though they have set a I would say aggressive target, this requires flawless execution plan by the company, number one, and the complex field like semiconductors, meeting those targets when you are into this complex sectors would may be difficult for the company, and this targets may be challenging for the company. But moving on, the other thing that is actually working for the company, where I would talk about the bull case, the company is strategically shifting its business mix towards high growth, high margin products, that is specialty chemicals, targeting 60% of revenue from high margin products, specifically in the CDMO and fine chemical space, including the newer or sunrise sectors like semiconductors. But intense competition, especially from the Chinese peers, from especially in the commodity chemical space, and also potential price war could actually impact the margins that they want to target. But you know, they boast that they have a global market share when it comes to biopyridine, and they are number 2 when it comes to vitamin B3. Cost leadership will actually allow cost leadership will help them to achieve that margin, and operating leverage will also help them to grow faster, and a diversified portfolio will actually support the growth that they are eyeing into. But and lastly, if the ambitious export target that they've set, that is 65% of revenue from export that they are eyeing by FY30, makes the company vulnerable when it comes to geopolitical shifts and trade wars, such as unpredictable tariffs war that we are seeing. But so overall, if you see a good aggressive target that the company has seen, rather the company has set up for the next 3 to 5 years, but competitive pressures from Chinese products and of course the geopolitical pressure that the company is seeing, and the overall pressure in the chemical industry will make them hard to achieve those challenges.
So that's the fundamental point over there. We had got the technical view from Kunal earlier, so let me go across to Aditya and detailed both sides of both cases kind of view from Varsha there. Do you see this space as interesting, and what about the company specifically, Aditya?
Oh, chemical space particularly is interesting to me. Jubilant Ingrevia operates in a very commoditized space. So when the demand is not great, they will not do well. And when there is excellent demand, they will continue to do well. On top of it, they have also aligned to move towards the semiconductor space. All of that again depends on a good execution over a period of time. Although too many players are entering the semiconductor space, I don't think all of them will be successful. Some of them will die out, and only few of them will be successful. So this rally, I will advise the investors to be really very careful. Execution will matter a lot in terms of Jubilant Ingrevia, and you need to wait and watch and see how it goes. So I'm cautious on this stock as of now.
Okay. Jubilant Ingrevia buzzing this afternoon. There are some buzzers there. I mean, from lows, the recovery has been, not a sharp recovery, but not as bad as it was looking about half an hour ago. So that's the case with the Nifty 50. I want to pull up the Bank Nifty Intraday as well for you. and there the situation is also not as bad as it was earlier in the day, still about 600 points down. We'll take a very short break. On the other side, we're coming back with BTST ideas. We have a special conversation on the insurance space as well. Remember, the Air India crash in Ahmedabad could turn out to be one of the biggest insurance payouts in the aviation industry. All of those details after the break.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अबाक soft spoken तो है. Did you just call me soft spoken?
Yeah.
No? No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis.
Welcome back. You're watching India Market Close, and of course it was just yesterday at this hour that we had that terrible crash that we were watching visuals of, and would likely be India's most expensive aviation claim, with potential liabilities translating to upwards of even 2,000 crore rupees. My colleague Pallavi joins us with a perspective on what this could entail. Pallavi.
Right, so like you said, yesterday's tragedy can actually turn into India's most expensive aviation claim. Now, typically how it works is that airline fleet insurance policy covers risks such as the airline parts, spare parts, the aircraft hull, and liabilities to passengers as well as third parties. Now, yesterday's incident is expected to trigger claims both in terms of the liability section
section as well as the hull insurance, because we saw a total loss of the aircraft as well as the fatalities. Now the aircraft damage will be covered under the aviation hull all risk section, which ensures the valuation of the aircraft including the spares and the equipment. And according to industry experts we spoke to, this valuation could range anywhere between $210 million to $280 million. Now, in fact, one of the people we spoke to was Amit Agarwal, the Chief Executive Officer and MD of Howden, India, and he explained that the aircraft which was involved yesterday was in fact insured for approximately about $115 million. Now, coming to the liability section, which could very well be the most significant component of yesterday's loss, could amount to millions of dollars. This section covers the airline's legal liabilities to pay to passengers as well as third parties, and this includes medical expenses, cargo, baggage loss. Now, the fact that the aircraft crashed into a civilian compound will also mean substantial third party losses. But let's remember that these are estimates at this point, and what the figures will be are still to be ascertained precisely. But how this typically works is such losses are generally split between multiple reinsurers. Airline flight policies are often placed on a facultative basis and they involve several participants. So that's what it is. We're speaking to more people to ascertain these numbers further.
That Pallavi. Now, to understand this better, joined now by Sajja Praveen Chaudhary, Director PB for Business, to just shed light on this. Mr. Chaudhary, thank you for speaking with us. Let's just go through this from different aspects. Let's start from the airline's perspective, and then of course we'll come to the passengers as well. And in this particular case, in the Ahmedabad case, there are also the bystanders who were not on the flight, were just there existing, and then this tragedy has taken place. So let's just get your perspective now from the business point of view or the airline point of view. For the airline, I suppose everything is already insured and reinsured well enough.
Yeah. So from an airline perspective, one, you can look at just the flight or the plane per se, and then second is when you look at airline as a company as such, the kind of risk cover that they would have taken for various risks, whether it's a third party liability risk or whether it's for the hull risk or whether it's the passenger risk that you're referring to, kind of, right? There are multiple risk lines which would get triggered in this case. So as we were hearing earlier, the airline itself, probably the hull part, what we understand at this point of time would be about roughly 700 to 900 crores is what the cost or the claim cost can be in that case. But when you look at particularly what is going to get triggered from airline policies, apart from the hull part, there is obviously the passenger liability, as per Montreal Convention, which we assuming, would be about anywhere roughly about 2 crore kind of thing per person, or, with respect to whatever the convention says. And this will be covered as part of the airline liability policies. Now, outside of this, then there is anything which is a third party liability. Now, as you said, there are bystanders. It's not only about the, passengers who are there in the aircraft as such. Obviously, yes, there are people who have sadly lost lives on the ground. And obviously, there have been certain destruction that has happened because of the airline crashing into a hospital site. And we're not sure if there is anything else on the other sides in terms of any business houses or any residential complexes that got affected. So anyone or any property that gets affected on the ground because of this act, obviously there's a liability that gets that comes out of this. And as part of that, the third party liability or the public liability policy, which the airline would take in and which would be there in place generally for these kind of organizations, will cover these. Will have to cover these liabilities, whether it's in terms of death-related liability for these people who would have passed away on the ground, and the hospitalization-related liability for those people who have got hospitalized related to this or injured as part of this, and also, as I said, the assets that would have got destroyed. Then there's one more category, which is primarily the crew who was there, the pilots and the crew, which also generally the coverages are higher in nature, and that's the other side of it, which also gets triggered onto the airline side at this point of time. And the last one, which might be smaller, I'm assuming in this case, because it's not a cargo flight, it's a passenger flight. Having said that, as we know, when there is space available, the passenger flights also kind of take up some cargo. And in case if there are any valuable things which are much higher in value, whether it's pharma related or anything which are of very high value, then that cargo related losses would come up. But having said that, generally the 700-900 crores of liability, or not the liability, the loss that we speak about Hull, apart from that, all other liabilities, whether it's passenger or on-ground people, everything is expected to be covered in the policies that they would have, and most of it would be taken care of from that perspective.
I'm trying to understand, Mr. Chaudhary, you mentioned the Montreal Convention, and we'll get those details up on the screen as well. But for a lot of our viewers and flyers, not everyone knows that there is something like the Montreal Convention which covers you in case of a terrible tragedy like this. Just take us through the details of that.
See, there's a, as per the international regulations or the standards that they're there, there's a Montreal Convention which had, I think if I'm not wrong, it's about roughly $1 lakh or something, which was there earlier, but it was changed in the month of December 24-25. And that's roughly about, I think about $2 lakh, which is there, which would kind of, take care of any kind of passenger related liability that would come in. And now that part would be taken care of automatically. Now, when we say, will the airline take care of this? But generally, when such rules are there, the airline would have taken insurance policies, which would cover these liabilities to that extent as required under the rules and all of that. So all of this liability that you would say as a payout that would go to the families or the members who would have passed away or would have got, kind of hospitalized in these situations, this amount will go to them, and most likely the insurance policies will take care of these.
I'm not sure, Mr. Chaudhary, I heard you right. This is Harsh here. So you're suggesting it's $200,000 at a fixed rate, or is there some variable element to that number?
Yeah, so see, basically under that, there are certain categories under which it is there in terms of, it also mentions clearly in terms of, in case of a delay, what would happen, in case of a package, what would happen, or in case of cargo, what would happen, and in case of, kind of death or any other liability of, a person kind of thing, what would happen. So it is depending on the situation that this comes out. But having said that, in this situation, as you would see, it's a death of most of the people that's there, right? So we're not speaking about something else, and we're speaking about specifically that specific number as such.
I'm just trying to understand this from the insurance company's point of view, Mr. Chaudhary. What is the extent of hit that you expect for the sector and the payouts thereon?
See, generally, we're not looking at, for the sector to get hit as such. As I think, we've been discussing, or, as I heard from your colleagues as well, which is right. Generally, what happens in these policies, which are very, very high risk volume policies, is that these undergo, or these go through a facultative reinsurance treaty, and generally 95% of this is ceded to the reinsurer, which means the Indian insurers would generally be holding only about 5% of the risk on their books. And whenever this claims would come up, and then when they're getting finally settled, which means that 95% of this losses is bound to come from the reinsurer books. What it means is, depending on where it ends, like, let's say a 1,500 crores or a 2,000 crores kind of a loss, which you estimate an overall level, then what we speak about 75 to 100 crores, and that too probably divided between, say, the lead insurer, who's Tata AIG in this case, as we understood, and few more insurers who are there as co-insurers. Given the kind of, I think, strict regulations that we have from the regulator in the country, and the kind of solvency margins that they're supposed to maintain, and knowing how strong an insurer Tata AIG is, backed with the Tata Group, I don't think there's going to be much immediate issue that the insurers are going to get on their books for sure. So that's very, very clear from this perspective. But what's going to impact is probably the next year when these treaties come up for renewals, and the kind of risk that we're seeing right now. See, it's not only about this specific incident that we're speaking, right? See, this is one-off incident which has happened with Air India in the country. But then if you've seen, there are obviously, you're seeing some more news around the airlines coming back already, which are in air, which were already on the way to US or Mumbai because of the Iran border closing and all of that stuff, right? There's a lot of things that are happening around the airspace and the air traffic kind of a thing.
Yeah.
So as a result of this, and also we've heard in the last few months, a couple of crashes around other countries as well. This is expected to kind of raise the reinsurance rates, and automatically there's going to be impact on the premium for the airline companies. And obviously, the airlines can't really avoid
would that then
right?
be, just to follow up on that, so would that be specifically for Air India in this case, or would this be for across the board?
See, I don't think it will be specifically for Air India. It will be generally across the board, and it will also have an impact on not only Indian. See, this is one-off incident that's happened, and generally such kind of incident happens once in, say, 20 years, 30 years kind of thing, right? And unless there's something specifically which is found out, see, in some of the countries in the past, what's been found out in such accidents is that the regulations were not so strict, and hence there are a lot of accidents happening. In that situation, what happens is the airlines that are there in that country or flying to that country would get impacted with high premiums. But in this case, there's nothing as such, right? That's come out at this point of time, and there's a lot of flights that India operates, and we don't see these risks happening very often. And what we're referring to is a global incident kind of a thing, where there's one incident that happened in India, and there are a couple of more incidents that happened in the past few months across the globe, and obviously the entire thing that's happening around Iran. That's going to lead to an overall rate that's going to increase, even for some of the other airlines which are outside of India as well, very clearly.
Okay, thank you so much for that. So the reinsurance or the renewal rates for the entire aviation industry go up next year. That's a big takeaway to understand. Thank you. That's the insurer's point of view on the entire situation. Now coming back to Aditya Shah and Kunal Shah, we spoke earlier about one aspect of it, which was shipping corporation. But Aditya, if I look at it from the insurer's point of view and largely general insurer's point of view, what is the kind of impact do you see, and do you see some impact even on their stock prices and the overall sentiment?
Question for me?
Yes, Aditya, that question's for you.
Can you repeat that? I couldn't get your question.
Yeah, my question was the view on general insurers in light of what's happened in Ahmedabad.
So what is going to happen is, I believe New India is the insurer to insure to Air India, and anyway, general insurers do not retain the risk. They always pass on the risk to reinsurers, and then reinsurers again split those risks up. So the people who will be affected particularly would be the likes of GIC or the likes of AIG in the US and Europe, where they would take the hit. But as a consequence of this crash, there would be a lot of repricing of products. And because repricing of products, insurance premiums will start to move up. And that is going to be a major fallout of this. So I don't think particularly any general insurer is going to suffer. But reinsurers are going to reprice the entire concept of risk, because we had so many years without any crash. And now we've seen a crash on a big 787 aircraft, where it is supposed to be one of the safest aircrafts around. So no particular impact, but reinsurers will particularly see an impact also.
Okay, that time of the show when we go across and get our BTST trade as well. Kunal, do you have one for us today?
Yeah, I think on the long side, what I'll be looking out for life insurance space, and that is looking attractive. So out here, my pick would be SBI Life. Already the stock in today's trading session has hold on from the low levels, and the prior trend is still on the positive side. So we expect this up move to continue over here to the 20-day moving average, which is placed at 1785 on the higher end. So SBI Life would be a buy for me, keeping a stop loss of 1720, looking for targets of 1785 to 1800 on the higher
end. Okay, so that's the BTST call right now. But I think another stock which is buzzing is Nazara. Nazara Tech is in action. What is adding to the rally? A few days after a big drop because there was an exit, or not an exit, a paring down of stake there. The stock is buzzing. Vansh is joining us with more details. Yes, Vansh.
So Nazara Tech is up 7% in trade today. The volumes have surged 3.7 times than the 30-day average. So let's look at the key triggers for the company. Nazara has completed 100% acquisition of Curve Digital Entertainment of 11th of June. Curve Games is a leading London-based video game publisher focused on premium PC and console platforms. Secondly, they have also launched an open offer at 990 rupees per share, which is at a discount of 22% from the closing price of 1274 on 11th of June. The open offer is being led by Aksana Estates, Plutus Wealth and Juno Moneta Private Limited. The tendering period is from 9 June to July 2025. Also, a key thing to watch out for would be Rekha Junjunwala has reduced the stake in the company from the 7% to 5%. And when it comes to the future outlook, the management is optimistic and targeting an EBITDA of 300 crores by FY27. So this is what the overall picture looks like for Nazara Tech.
Thanks so much for that, Vansh, and welcome to the team. That's of course your debut. Aditya, let me come to you with regard to Nazara. Do you like it? We've done a deep dive with regard to Nazara as well. So viewers, for perspective, we've done a Know Your Company series on Nazara. But Aditya, what really stood out for me is very poor return ratios. I mean, they continue to acquire companies, but return ratios not spiking. Are you positive at all on this one? How do you look at the business?
So Harsh, again, as you background that their model continues to be now that acquired companies and operate them. So inherently, they will keep on diluting their equity as well, sometimes in exchange for the takeovers that they are really doing. Return ratios are suppressed, but I think that the whole space that Nazara Tech operates in, the video game segment as well as the gaming segment, will continue to do well over the next 5, 10, 15 years, and there's a good opportunity. Return ratio, if the management continues to work towards improving the return ratios, the company could start to do really well. So I'm a close watcher of the stock. No investments as of now, but the stock looks really very interesting to me.
Okay, Aditya, also on a side note, wanted to understand what the view is with regard to capital market plays and where within capital markets are you finding value. And the reason for that is I'm seeing some stocks really flying. You have a 361 which is up 5%, BSE in the news for completely different reasons. Just give us a perspective. Is this space an opportunity, and if you were to play it at this point, how would you play it?
A very expensive space, interesting space, a lot of potential in this space, but really very expensive. BSC for that matter alone in the last 1.5, 2 months has gone up phenomenally well. Most likely on the back of NSE listing that is going to come, and similarly CDSL has also gone up on the back of NSDL listing that is going to come up. In my opinion, all of these stocks are really very expensive. One needs to be really very careful. As I said, you could look at an HDFC AMC or a Nippon AMC for that matter. Within the mutual fund space, they look really very interesting. Wealth managers are expensive. I would tend to avoid brokers such as Angel One. Those stocks are really very expensive, and again, any slowdown could materially affect their broking income that is there. So mutual funds is something that I want to stick to. And CDSL is something that I have an eye on, but the stock is too expensive right now at this stage to invest in.
Okay, so that's Aditya's take. Now let's go across to Tushar, who's at ground zero in Ahmedabad with the latest. Tushar, what do you have for us?
Good afternoon, Harsh. So all of the attention now has shifted to actually identifying the deceased. Air India as well as the state government authorities are facilitating the movement of the next of kin to Ahmedabad so that the bodies can be recognized. We know that what the government as well as the BJ Medical College Hospital doctors are trying to do is trying to match the DNA of the next of kin with the bodies of the deceased so that there can be some identification that can be done. Remember, 241 passengers out of 242 died in the Air India plane crash yesterday. Only one survivor could walk out of the particular crash. All of these bodies, we don't know whether all of these bodies have been identified yet. The process is still going on. Helpline numbers have been set up. Apart from that, earlier today, Prime Minister Narendra Modi was here at the plane crash site at 8:30 a.m. in the morning. He visited the site. He visited the civil hospital to see to meet the lone survivor and to assess the situation. He was also seen at former Gujarat Chief Minister Vijay Rupani's house, offering his condolences to the family. So all of this coming here. We also saw Air India CEO Campbell Wilson also here. So it's actually a day of where all the pieces are coming together so that in the next few days we can identify who all have died. Apart from that, last two pieces of crucial information. The black box officially has not been recovered. We managed to talk to some NDRF officials off the record. They said that some extra NDRF teams had come in the morning to comb or actually sift through the debris that was collected once again. While this person could not tell me what they were looking for, certainly it was not for the black box. Officially, the black box is still not recovered, but there's a DVR that has been recovered for the in-flight video recording. We don't know what the contents are, but till the black box comes out, we cannot say what exactly happened in the last moments of this particular plane.
To be uncovered there. Thank you, Tushar, for coming in with all of those details. Just about 3 minutes left on trade, and it's been it's been a tough day. It's been a tough day. You're closing about 146 points down on the Nifty, but off the day's lows and significantly off the day's lows as well. You're over 1% up, more than 250 points actually from the day's lows, 260 points from the day's lows. And I want to come to you right at this point, Kunal. The way we have been set up, where we have recovered 250 points from the day's lows, you're going to close much higher than the day's lows. Do you see this as a setting of a bit of a rally on Monday?
I think definitely we will be testing the 20 DMA on the higher end, which is at 24,833 on the upside. So 24,850 will be a crucial level for the markets to test. So I'm expecting at least from the current levels, say 100 to 110 point on the upside from the spot Nifty that could be tested. And similarly for the bank Nifty as well on the higher end, the 20 DMA is again placed at 55,721. And I'm expecting bank Nifty should test the resistance of 56,000 on the higher end, which was earlier the support. So even for bank Nifty, more 500 points rally could be possible from your end. So I'm expecting a pullback, and probably from those levels, we have to wait and watch whether we find further selling pressure from those levels. If not, then we might continue this rally on the higher end.
Thank you so much, gentlemen. We'll let you go on that note. Thanks so much for joining us, giving us that perspective over the last hour or so. Let's quickly look at how we've gone through the day. In fact, it's not been as bad. As Tamanna did mention, there's been a decentish recovery. We've closed around 0.6% lower, just about. But when you're putting this into perspective, yesterday was expiry. We saw a bit of a correction yesterday towards maybe the last couple of hours of trade, and putting this today's day of trade plus yesterday's, we've seen a bit of a cool off where markets are concerned. Let's look at it intraday though. Let's look at the silver lining. Let's look at the positives. Glass half full. Seen a solid recovery from the day's low point. So that's the one piece. Markets have held up fairly well for themselves. The VIX, which has spiked, has also cooled off. We can pull up the intraday on the VIX as well. That spike over there right at the start of trade, we've cooled off. We're 7% higher where the VIX is concerned. Now, I want to talk about the Nifty 50 itself. Let's look at the heat map. Now, what's not looking pretty is the kind of advanced decline we've seen today. The breadth has been weak on the Nifty 50, but broader markets is where the action has been much better. Let's look at the broader markets. Let's zoom in, and the Nifty mid-cap has seen a very strong recovery at close. So we're just 0.25% lower at close intraday, and 0.33% lower on the Nifty small cap. I want to quickly also highlight the advanced decline on the NSE, and that kind of also shows now it's just about 2:1 at close. So from the lows of the day where the breadth was extremely weak, we've obviously gotten better right towards the fag end. So that's the other key positive. I also want to look at this more zoomed out for the week gone by, because we've closed the week as well. Let's look at the Nifty for the week gone by, and thereafter the Nifty mid cap and small cap indices. We're down 1.5%. A large part of that was between yesterday and today, mind you, and otherwise we've not had a bad week at all. Let's look at the Nifty mid cap and small cap indices as well. 1.8% lower on the Nifty mid cap, and the Nifty small cap largely better, in fact, 1% lower on the Nifty small cap index as well. So that's how we've shaped up for the week on some of those. Let's look at a heat map of the sectors. I want to cull out how the recovery on some of these sectors has been. We saw all sectors in the red at the start of trade. A fantastic comeback by the Nifty defense index right at the start itself, in the first 15 minutes itself. But thereafter, we've seen a slew of sectors come back quite well. So we've closed decently well. The Nifty India defense was up 1.5%, courtesy, of course, global geopolitical concerns. But look at the Nifty PSU Bank, which was languishing, down around 1.2%. Again, off the day's lows though, so that's a positive. FMCG, the Nifty Bank is where a large part of the pressure was. IT though did okay. It outperformed the index. It was in the green. But metals again down 1% or thereabouts. So that's how we've really shaped up for the day. Let's look at the BSE 500 top gainers, top losers. And let's just look at some of those names. Narayan Hridayalaya has done fairly well for itself. A 361, Hitachi Energy 361 seeing a bit of a cool off from the highs of the day. Rajesh Exports was down for, KRBL was down for, and Tata Tele also in focus. Let's look at the cues that we need to look out for come Monday. We'll have India foreign exchange reserves, balance of trade data, and China industrial production. We'll have a couple of adjustments with regard to dividends that you need to keep in mind, and you have a split, a record date for a split of Bajaj Finance stock and a bonus issue of the Bajaj Finance stock. So that's also a key piece to monitor come Monday. And of course, we'll bring you that update on Monday as well. But with that, completely out of time on this edition of India Market Close. From Tamanna, Mahima, as well as myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब कोई soft spoken तो है? Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down, cut through the noise and set the context for you.
Hello and welcome. Good afternoon. You're watching Market Express and I'm your host Malika Mishra. Let's get straight into the show. Geopolitical tensions weigh on markets as both Nifty and Sensex ends the week in the red. Nifty ends near 24,700 mark and 41 out of the
all Nifty 50 stocks declined in trade. Sensex slipped by about 500 points and India VIX cooled off in the last leg of trade to close with gains of near 7%. Sectoral action remains mixed. Nifty, Defence and Realty surged in trade. Nifty, PSU Bank and FMCG end as the top sectoral losers. The broader market stood resilient through Friday's trade and the market breadth ended in favour of declines. And the Indian currency rupee closes sharply lower against US dollar. It weakens by 49 paise to 86.09 against the greenback. Residents of Tehran woke up to loud explosions as the Israeli Air Force launched airstrikes across Iran, targeting nuclear and military sites. In response, Israel declared a state of emergency, preparing for possible missile and drone retaliation from Tehran. Israel has reportedly killed Ali Shamkhani, the top advisor to Iran's supreme leader. The attack involved over 200 fighter jets, according to the Israeli military. Iran, meanwhile, is accusing both Israel and the US of escalating the crisis. And in an escalation, Iran launched around 100 drones towards Israel following deadly Israeli airstrikes. Top Iranian military officials and 2 nuclear scientists were killed. Israeli PM Netanyahu said this was just the beginning. And Iran has officially shut its airspace after a major Israeli offensive targeting key sites. The move follows rising fears of further retaliation. Israel's strike on Iran has led to airspace closures in Iran, Iraq, and Syria. Major airlines like Qatar Airways and Air India are rerouting flights, with 16 Indian flights diverted so far. Russia has strongly condemned Israel's recent large-scale strikes on Iran, calling the attacks a dramatic escalation of tensions between the two countries. Kremlin spokesperson Dmitry Peskov stated that President Putin is closely monitoring the situation and the Russian Foreign Ministry plans to submit a detailed statement to the United Nations. Now, Russia has urged both Iran and Israel to de-escalate the conflict to prevent further instability in the region. Donald Trump has urged Iran to negotiate, emphasizing that there is still time to end the ongoing conflict. Posting on Truth Social, he stated that Iran must make a deal before the situation worsens, warning that failure to do so could lead to devastating consequences. Trump reiterated that he had given Iran multiple chances to reach an agreement and stressed the urgency of diplomacy to prevent further escalation. His remarks come amid heightened tensions between Israel and Iran, with global leaders closely watching for potential resolutions. And as a consequence of this war, oil prices surged over 13% intraday following Israeli airstrikes on Iran, sparking fears of supply disruptions amid escalating Middle East tensions. Back home, barring ONGC, all the oil-related stocks traded with cuts. Iran-Israel escalation has India on high alert. The Ministry of External Affairs expresses deep concern as Israel claims responsibility for strikes on multiple targets in Iran, including nuclear research facilities. With tension soaring, Indian embassies in Tehran and Tel Aviv have issued urgent advisories for citizens to stay alert. The escalating tensions between Israel and Iran could just put the Strait of Hormuz back in global spotlight, and this time, the biggest worry would be on the impact of supply chain issues for key crude oil producer countries. Speaking of stocks that could take a hit are as follows. Petronet LNG, Indraprastha Gas and Mahanagar Gas could see a negative impact from the oil and gas space. Paint companies like Asian Paints, Kansai Nerolac Paints, Indigo Paints and Berger Paints could be affected, and this is because the cost of crude oil can make up to 30 to 35% of total raw material price for paint makers. And then tire companies like Apollo Tyres and JK Tyres could see pressure as crude derivatives roughly account for 30 to 35% of the raw material. Stocks in focus in the tire segment are Apollo Tyres, JK Tyres and Seat. Also, Gulf oil and castor oil could also take a hit from the lubricant space. And aviation stocks such as Interglobe Aviation and SpiceJet might face headwinds because aviation turbine fuel will get expensive as higher crude will impact margins. Gold prices in India spiked. The MCX Gold August 2025 contract opening at 100,300 rupees, driven by Israel's strike on Iran and a stronger dollar. Analysts are debating whether to buy or sell amid this high volatility. Shipping stocks are soaring as tensions rise between Iran and Israel. The Baltic Dry Index has surged nearly 50% in a month, gaining about 9.7% today. With fears of trade disruption through the critical Strait of Hormuz, tanker rates are expected to firm up as well. As vessels reroute around Africa, freight costs could climb, benefiting companies like SCI. India's crude imports, mainly from Gulf nations, may face supply shifts, reinforcing optimism in the shipping sector. Prime Minister Narendra Modi arrived in Ahmedabad on Friday and visited the site of the Air India Boeing 787-8 Dreamliner crash that killed 241 people a day earlier, one of the worst air disasters in recent times. He also met the lone survivor of the crash, Vishwas Kumar Ramesh, at the hospital, who is an Indian origin British national. On Thursday, Union Home Minister Amit Shah and Civil Aviation Minister Ram Mohan Naidu had also visited the site to take stock of the situation. And also following this devastating crash of the Air India Boeing 7878 aircraft, the Ministry of Civil Aviation is mulling a safety review of the domestic fleet of Dreamliners. As per our sources, the government is considering the possibility of grounding all Boeing 787-8 Dreamliners as a precautionary measure while initial inquiries into safety concerns are underway. While talks are underway with multiple stakeholders, including the Tata Group carrier, Boeing India, the National Transportation Safety Board, as well as the Federal Aviation Administration, a final decision will be made after the investigators' assessment of the crash site. The crash of the Air India flight is set to become India's most expensive aviation claim, with potential liabilities ranging between $211 million and $280 million. On the upper hand, this will roughly translate to a fat 2,400 crore rupees. The incident involving a Boeing 787 Dreamliner aircraft is expected to trigger claims under both the hull and liability sections due to the total loss of the aircraft and the fatalities. This incident is likely to trigger multiple aspects of a typical aviation hull all-risk policy. Bajaj Allianz Life Insurance has activated measures to assist families of its policyholders affected by the crash. The company has established a special claims settlement desk to prioritize the processing of death and disability claims for customers impacted. To simplify the process, the insurance company has listed a minimal documentation process that nominees, legal heirs, or policyholders need to submit to process their claims. And following suit, LIC will also expedite claim settlements to provide financial relief to the victims of Air India flight AI-171 and also people on the ground who were killed due to the plane crash in Ahmedabad. The insurer said in a statement on Friday that LIC of India has announced many concessions to mitigate the hardships of the claimants of LIC policies. In lieu of death certificates, any evidence in government records of death of the policyholder due to the plane crash or any compensation paid by central or state government or airline authorities will be accepted as proof of death. And as per news reports, a day after the Air India plane crash that claimed at least 265 lives, National Security Guards have recovered digital video recorder of Air India flight AI-171 from the wreckage of the aircraft. A DVR is an aircraft records video from cameras used for security, training or crash investigations. A black box comprising a flight data recorder and cockpit voice recorder logs flight parameters and cockpit audio, mandatory for all commercial flights to aid safety probes. Bloomberg reported Boeing's Chief Executive Officer Kelly Ortberg has cancelled plans to attend the Paris Air Show after Thursday's Air India crash. Boeing commercial aircraft head Stephanie Pope also won't attend the Paris Show, which is the global aviation industry's most important annual gathering. GE Aerospace, whose engines power the doomed plane, has cancelled a June 17th Investor Day. Now, this crash can be a grave test for new Boeing leadership. Nazara Tech, the shares of this company gained momentum today as strong trading volumes boosted sentiment. The company completed its acquisition of Curve Digital Entertainment, strengthening its presence in high-margin gaming. Meanwhile, an open offer from key investors is set to reshape its shareholder structure. Investor sentiment also shifted as Rekha Jhunjhunwala reduced her stake. Looking ahead, Nazara is focused on expanding its business with ambitious growth targets and new opportunities in VR and the metaverse space. Shares of NBCC has secured a major construction order valued at approximately 518.5 crore from Navodaya Vidyalaya Samiti. This multi-state project involves the construction of permanent campuses for Jawahar Navodaya Vidyalayas across 4 states, which are Arunachal Pradesh, Assam, Manipur and Telangana. The contracts cover 9 locations including Lohit, Pakke Kesan and Lower Siang in Arunachal Pradesh, as well as Sonitpur and Majuli in Assam, Noni in Manipur and Bhadradri in Telangana. These projects aim to strengthen educational infrastructure in remote regions and are awarded under project management consultancy contracts by Navodaya Vidyalaya Samiti. Torrent Power's renewable arm Torrent Green Energy has bagged a significant order worth 2,650 crore for a 300 megawatt wind power project. The company has received letters of award for this large-scale project, which is set to be commissioned within the next 24 months. This development marks a major step forward in expanding clean energy capacity and strengthening India's renewable energy landscape. Crompton has secured a major order worth 101 crore from the Maharashtra Energy Development Agency or NEDA. The order involves the commissioning of 4,500 off-grid solar pumping systems across the state. This project aims to boost sustainable agriculture and provide reliable irrigation solutions to farmers. Crompton is expected to complete the entire project within a tight timeline of 90 days, reflecting its strong execution capabilities in the renewable energy sector. Nomura has rated Dr. Reddy's Laboratories as a buy with a target price of 1,575, indicating a 16% upside potential. While investors remain cautious about declining Revlimid sales from FY26 onwards, the company's management is confident of delivering double-digit growth in its core business and aims to maintain 25% EBITDA margins. Semaglutide is seen as a key growth driver with a possible launch in Canada by January of 2026. If Canada rejects semaglutide, Dr. Reddy's plans to shift capacity to emerging markets. The company is also focusing on selective high-value biosimilars and holds a strong net cash balance of $250 million. Additionally, it has a potential acquisition plans worth $2 to $2.5 billion to fuel future growth. Kotak Securities has maintained a reduced rating on Dr. Reddy's Laboratories with a target price of 1,250, implying an 8.3% downside. The downgrade reflects concerns over priced-in gains and ongoing risks, particularly the challenge of filling the revenue gap created by falling generic Revlimid sales, which drove most of FY 2025's earnings. Kotak forecasts semaglutide sales in Canada to reach about $138 million in FY 2027, but expects these to decline thereafter, adding to the downside risk of the stock. Indegene witnessed a significant block deal on the NSE today with a large trade volume of 1.8 million shares, changing hands at a price of 590.8 rupees per share. The total value of this transaction stood at approximately 106.63 crore, and this notable trade activity highlights strong investor interest and could signal upcoming market movements for the stock. The Bhartiya family, promoters of Jubilant Group, has executed significant block deals to offload stakes across 3 listed companies. In Jubilant Ingreva, 9.87 million shares or 6.2% of equity was sold at a floor price of 627.45 rupees per share, an 8% discount, reducing promoter holding from 51.47% to 45.27%. Jubilant Pharmova saw 4.8 million shares, about 3% of equity, traded at 1,013 rupees per share, a 9.9% discount, bringing promoter stake down from 50.68% to 47.68%. Meanwhile, Jubilant Foodworks had 12.5 million shares or 1.6% of equity, sold at 641 rupees per share, a 3.8% discount, with promoter holding falling from 41.94% to 40.34%. And these sales, valued at nearly 1,900 crore rupees, are part of the group's strategic capital realignment following its acquisition of a 40% stake in Hindustan Coca-Cola Beverages. The early arrival of the monsoon is cooling power demand, with surplus rainfall historically leading to slower growth in electricity consumption. Cooling appliances are used less, dragging down revenue growth for power companies. Data shows that years with surplus monsoon see weaker power demand growth, impacting revenue through stock prices don't always reflect this trend. Despite lower electricity consumption, the market response remains mixed, with shares not necessarily advancing during high rainfall periods. Investors are watching closely as the monsoon season unfolds. And according to the Ministry of External Affairs, India and China have agreed to expedite the resumption of direct air services between the two nations and will continue to stabilize and rebuild ties. The agreement was reached during a meeting between Indian Foreign Secretary Vikram Misri and Chinese Vice Foreign Minister Sun Weidong, who is on a 2-day visit to India. The Foreign Secretary also called for early finalization of a revised air services agreement. Additionally, the neighbors agreed to work on easing visa processes and encouraging exchanges between media and think tanks. The Ahmedabad bench of the National Company Law Tribunal on Friday admitted Gensol Engineering into insolvency on a plea filed by the Indian Renewable Energy Development Agency. While the company has formally entered the corporate insolvency resolution process, an interim resolution professional is likely to be selected from the Insolvency and Bankruptcy Board of India panel. However, a detailed order on the case is not out yet. Gensol's trouble began on April 15th when the Securities and Exchange Board of India barred promoters Anmol Singh Jacki and Puneet Singh Janki from accessing the securities market. Businessman Sanjay Kapoor, former husband of actress Karishma Kapoor, has tragically passed away at the age of 53. He suffered a fatal heart attack while playing polo in England, with reports suggesting the attack may have been triggered after he accidentally swallowed a bee during the game. Kapoor was a prominent industrialist serving as chairman of Sona Comstar, and he was also known as business and polo circles. He is survived by his children from his marriage with Karishma Kapoor and his current wife, entrepreneur Priya Sachdev. His sudden demise has deeply shocked both the business and entertainment communities. An Air India flight from Phuket, Thailand to New Delhi made an emergency landing on Friday following a bomb threat received on board, airport authorities confirmed. Flight AI 379 carrying 156 passengers took off from Phuket International Airport but returned shortly in accordance with emergency procedures. An Airports of Thailand official said all 156 passengers on the flight have been escorted from the plane. San Francisco Unicorns opener Finn Allen has broken the world record for smashing most sixes in a T20. A 26-year-old slammed 19 sixes against Washington Freedom in their MLC match on Thursday. He broke the previous record jointly held by Chris Gale and Sahil Chauhan, who hit 18 sixes each. And with that, it's a wrap on Market Express, but do stay tuned to NDTV Profit as there's a lot more lined up for you right on the other side.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto.
अब्बा कोई soft spoken तो है. Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture. Bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this. How can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Nakuman desaya.
India's healthcare landscape is evolving. And this transformation is not just a goal, it's a necessity. Join the movement towards a healthier India. NDTV's India Health Mission Season 2, Blueprint for Health Vision 2047, brings together the country's healthcare leaders, policymakers, innovators, and change makers to shape the future of Indian healthcare. So let's unite to build a healthier and more equitable India by 2047.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
Iran retaliated and launched 100 drones towards Israel after it attacked Tehran's nuclear and military sites, killing the country's military chief and leader of Revolutionary Guards. Gold hits an all-time high to cross the 1 lakh mark amid Israel's strike on Iran. International gold futures also hit nearly a 2-month high. Nifty and Sensex fall more than 1% for the week as Nifty snapped its 2-day gaining streak to close below 24,750. Mid-cap index also closes the week lower. Air India's insurance claim after the crash stands at over 2,000 crore rupees, making it India's most expensive aviation claim. The incident is expected to trigger claims under both hull and liability sections due to the total loss of the aircraft and the fatalities. Sources say government may temporarily ground the existing fleet of Boeing 7878 operated by Indian air carriers while initial probe into the safety concerns is underway. NCLT's Ahmedabad bench admits Gensol Engineering into insolvency on Irida's plea. An insolvency professional is likely to be selected from IBC panel. Hello and welcome back. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, I will be taking you through a lot of latest updates on the markets as well as national and international news, so stay tuned. Starting with benchmark indices, They have ended on a weak note with Nifty closing below 24,750 rupees. The Sensex was down over 500 points except media and realty. All other sectoral indices ended in the red. FMCG, PSU Bank, oil and gas, power, telecom lost between 0.5 to 1% today. My colleague Varsha joins with a detailed market roundup of the day.
Well, yes, Nifty closed below 24,800 mark. Now, we all know that markets were under pressure due to the escalating conflict between Iran and Israel. Nifty mid-cap 150 falls. Now, this was dragged by IRDA and Ajanta Pharma. Shipping stock rise. Now, this was due to geopolitical tensions. But I won't be doing justice if I didn't talk about how the market performed during this week. So, Nifty and Sensex falls more than 1% for the week. Nifty fell by 500 points from the weekly high. Eternal and Adani Ports are the top losers when it comes to Nifty. Nifty snaps 2-day gaining streak. Nifty midcap 150 fell more than 1% for the week, which was dragged by Cochin Shipyard and 197 Communication. Nifty small cap 250 fell 0.4% for the day, which was dragged by Netweb Tech and Angel One. Nifty Realty fall the most and it was the top worst performing sector for the day. Brigade Enterprises and Raymond are the top losers in Nifty Realty. Nifty Realty, Nifty Bank, PSU Bank snaps 4-week gaining streak. Now Nifty IT, if you see, snap 3-week losing streak, and Nifty Pharma gain for the third consecutive week. And lastly, if I were to talk about Nifty Oil and Gas, which gained for the second day in a row.
And tensions in the Middle East have escalated sharply. Iran struck back at Israel after it launched a wave of airstrikes on 100 sites in Iran. Israel targeted the nuclear and military sites in Tehran. In response, Iran has shut its airspace. My colleague Agni will join us with a detailed roundup of this escalation.
Iran and Israel have launched a spate of attacks against one another, which started with Israel launching airstrikes against Iran. Now, Israel has struck Iran's nuclear program and ballistic missile sites. Now, there were explosions heard across Tehran and the city of Natanz, which is about 300 kilometers away from Tehran. Israel says that it has also targeted Iran's nuclear scientists and generals. So, clearly, there has been a targeted attack on individuals as well. Now, we know that Israel's PM has said that they are going to continue the strikes for as long as they go, and this is an image of Israel's oil and gas fields. So if you look, Tehran is somewhere up in the north where the attack took place, and there's a refinery there. There's another refinery in Abadan, which you see marked in red over here, and one more refinery here, the Bandar Abbas refinery. Now Iran has come out and said that all of its refineries are safe and nothing has happened to them. But moving forward, you will see that the strikes are going to continue, which is what Benjamin Netanyahu has said, and we'll go as long as it takes to remove the threat. Now, what exactly is the threat he's talking about? We'll bring more on you, but they are saying that they have struck the heart of Iran's nuclear enrichment program. So clearly there are strategic sites in Tehran and Natanz which Netanyahu is talking about. Moving on, if you see that Iran's state TV says that the head of the Islamic Revolutionary Guard Corps, who is Hossein Salami, was killed in this Israeli attack, and Israel has also said that there is a special state of emergency within the country as it anticipates a retaliatory strike by the Iranian forces. Now, Iran, again, like I said, says that there are no damages to oil refineries, the 3 refineries that we showed to you, which are crucial for the country's economy. Now, moving ahead, we will look at how markets reacted to this news. So, Brent has risen 9%. It has topped the psychological benchmark of $75 per barrel. S&P contracts have fallen 2%. US 10-year yield has also marginally dipped, and it's expected to go down further if this conflict continues. And gold, of course, has risen 1.7% to 3,444 rupees a piece. Now, though the war is between Israel and Iran, let's take a look at what US is saying. Now, Marco Rubio, the US Secretary of State, has said that US is not involved in the airstrikes, but of course Iran doesn't buy that. They are saying that they are involved, but US is saying that they have warned Iran against targeting American interests or personnel in retaliation. It's a huge area of interest of US. They have a lot of assets, a lot of personnel there. Now, Trump had earlier said that he didn't want Israel to attack Iran. So there is a clear commentary of de-escalation from the US president, and they said that they were committed to a diplomatic resolution to the nuclear issue. Now, American negotiators we know were in Oman to discuss the limits on Iran's nuclear program with Irani officials. As of now, airspace within Israel has been closed until further notice, and Iran has also halted operations in the Tehran airport. Now moving on, I told you I'd tell you more about what the entire nuclear issue is about. So Iran has been significantly expanding its nuclear enrichment program since 2019. Remember, this was a deal they had signed with Barack Obama, but from which Trump later withdrew in his first administration, and ever since then, Iran has been insisting that its atomic activities are for peaceful civilian purposes only. And moving ahead, we can see that Trump's efforts to forge a new deal ever since in his second administration have not made much of a progress. But US and Israel say that Iran must not be allowed to continue with its nuclear endeavors. But Iran says that, of course, this is crucial to its functioning as a state. But yesterday, which is June 12, Iran had announced that the inauguration of a new uranium enrichment facility, which is probably the trigger which led to a wave of airstrikes from Israel's end. And the new facility was announced after the UN's watchdog, which is the IAEA, warned Iran that it was not complying with international obligations. Now, going ahead, we can see a map of all the nuclear sites which are in Iran. You can see that there are uranium enrichment sites, there are power reactors, there are also research reactors and uranium minings over there. Now, the military testing sites which you see near Tehran are the ones that you need to be watching out for. Let's go ahead and look at what the wider history of the conflict is. So Iran and Israel have been locked in a shadow war for decades now. Iran, of course, doesn't officially recognize Israel as a state, and Iran is accused of using proxy forces such as Hezbollah in Lebanon, Hamas in Gaza, and the Houthis in Yemen to attack Israel. Remember, Iran's support of the Hamas was one of the main reasons why Israel has been carrying out its genocide in the Gaza Strip over the year and a half. And Israel is accused of being involved in a series of assassinations and covert attacks on Iranian soil. So they have been particularly targeting their nuclear scientists because this is what they see as the #1 threat that Iran poses to them in the region. But Israel says that Iran has launched over 100 drones in the last few hours after Israel's first attack. But Israel says that we have countered them successfully. The Bank of Israel, on the other hand, says that it is prepared and ready in all areas of responsibility to shield the country against any economic shocks. And the US atomic watchdog has said that there has been no increase in radiation at Iran's Natanz site. Remember, we showed you the map where all the nuclear testing and reactions facilities were. Turkish ruling party has condemned Israel's attack on Iran, and so has Qatar in the last few hours. So you can see there's a wave of support coming in from Irani supporters in the region. And that is the latest update that we have for you. It's a developing situation. Do stay tuned, and this is something global investors should definitely be watching out for.
Right, Agni. Thank you so much for that elaborate coverage on the Israel-Iran conflict. And moving on, while crude prices have cooled off after jumping by 13%, high prices are most likely to impact companies across various sectors such as paints, aviation and tires. My colleague Mahima joins in with more details.
To start with, paint companies will get impacted because crude is a key raw material for paint companies, and it can make up to 30 to 35% of the total raw material cost. Paint companies generally use crude derivatives, so the impact will likely be seen in second quarter. Stocks that can see impact includes Asian Paints, Kansai Nerolac, Indigo Paints and Berger Paints. Aviation sector, of course, ATF gets expensive and higher crude will impact their overall margins. Stocks in focus will be Interglobe and SpiceJet here. Tire companies use crude derivatives for synthetic rubber, chemicals and carbon black. Crude derivatives roughly amount to again 30 to 35% of their total raw material cost, and higher crude will overall impact tire manufacturers' margins. So stock in focus includes Apollo Tires, JK Tires and Seat. Lubricants, they use again crude oil derivatives as base oils and additives. It could amount to roughly 40 to 45% of that overall raw material, and stocks in focus could be Castrol India and Gulf Oil. Lastly, plastic and packaging also might be impacted because polymers generally are direct crude derivatives, and rise in crude price here again will impact their overall margin. So stocks in focus could include Polyplex Corp, Uflex and Jindal Poly. So all of these sectors will be in focus on the back of rising crude oil prices.
Right, thank you so much for that, Mahima. And crude prices have been on a roller coaster driven by rising geopolitical tensions across Israel and Iran. We spoke to Peter McQuire, CEO of Trading.com, to understand the broader geopolitical implications of this crude price surge. Meanwhile, Dinshaw Irani of Helios Capital Management believes this spike might be short-lived and expects prices to cool off. Listen in.
If you look at price, and let's look at there first, it's been up nearly 12% as far as a super spike on crude. You've had WTI really ratcheted up, and so has Brent. So there's the first part as far as price. Now it's come back to around about 8 or 9% up. So it's given up some of those big blowout as far as gains. If you're looking now from a geopolitical standpoint, the impact of this is, first question, will there be retaliatory action from Iran, and how will that be positioned? Is it going to happen now, or is it going to happen over the next couple of days? Is this going to be a long drawn out wartime, or is it going to be something compressed and we're going to see, no further action in 24 or 48 hours? That's the unknown. And does the US get involved in this, Tamana? So there are many moving parts that need to be, I think, worked through until we get to that point.
So basically, I don't think this conflict is going to have a long-lasting issue. As hopefully it will get sorted out pretty soon, and that should stabilize things. But and probably crude prices also will come back to normal. They're already at $75, $76 to a barrel, which is bad news for us. But fortunately, we have a buffer in the form of a very low inflation. So maybe they'll add some percentage points to inflation. And you're right, and you rightly pointed out that actually that geopolitical tension, apart from the crude, I don't think they'll have much impact on India per se.
Right, and gold glistened the brightest today as it crossed the 1 lakh mark to hit a record high of 1,350,000 rupees per ton gram. In fact, the price of this precious commodity was the highest in Chennai. Meanwhile, international gold futures have hit a nearly 2-month high following the airstrike launched by Israel on Iran, which has triggered a rally in safe haven assets like gold. A day after the devastating Air India Boeing 787-8 Dreamliner crash, Prime Minister Narendra Modi visited Ahmedabad, meeting the injured at civil hospital and inspecting the accident site near Sardar Vallabhbhai Patel International Airport. The London-bound flight crashed just minutes after takeoff, claiming 241 lives, with only one survivor pulled from the wreckage. Authorities have begun returning victims' remains to families following DNA testing to confirm identities. Efforts to clear the crash site continued overnight and are now in their final stages. For more details, let's go across to my colleague Tushar, who is reporting from the ground.
Good evening, Malika. So, yes, the forensics team which arrived early at the crash site earlier today is still combing the location, the crash site. They are saying that it's identifying victims has been really difficult. DNA tests are underway. Remember, Air India as well as the government has set up helpline numbers and dedicated flight options for the next of kin to arrive in Ahmedabad to identify the remains of the disease. They have started coming in, but that is what forensics teams are telling us, is that it's a bit difficult to arrive given the situation that we are in at this point of time. A second valid important point that we need to track continuously is the black box. While there have been reports that at least one of the black boxes is recovered, there is no official statement on the recovery of black boxes. We saw earlier today that about a couple of NDRF teams have come back to the location to comb the entire premises yet again. They also said that they're looking for something, but they didn't specify whether it was the black box or not. So, since there's no official word on the recovery of black box, we cannot immediately say whether they are in possession of the authorities at this point of time. As you mentioned, Malika, yes, Prime Minister Modi was here throughout the day. First, he visited the crash site, and then he went to the civil hospital to see the arrangements that have been made for the bodies that have been coming in. He also met the lone survivor of the crash at the hospital. While we are not allowed inside the hospital, the best we can do is actually get the sense of how the mood is around us. We've seen traffic coming in, cars coming in all day. Apart from that, last bit of information is about the people or the students who were in that hostel campus into which the plane crashed. Sources tell us that there were 75 to 100 people in the mess in the hostel at the time of this particular accident. Some of them are injured, some of them are dead. Final count is yet to be arrived at, though numbers say that the rise could go up to 295 total dead. That's included 241 deceased in the plane crash. Malika.
Right, Tushar. That's NDTV Profit's Tushar Deep Singh reporting from Ground Zero and giving us all the details. And meanwhile, while this strategy may just be India's most expensive aviation claim, with potential liabilities translating to upwards of over 2,000 crore rupees. My colleague Pallavi Nahata joins in with a calculation of this.
Right, so like you said, yesterday's tragedy can actually turn into India's most expensive aviation claim. Now, typically how it works is that airline fleet insurance policy covers risks such as the airline parts, spare parts, the aircraft hull, and liabilities to passengers as well as third parties. Now, yesterday's incident is expected to trigger claims both in terms of the liability section as well as the hull insurance, because we saw a total loss of the aircraft as well as the fatalities. Now, the aircraft damage will be covered under the aviation hull all risk section, which ensures the valuation of the aircraft, including the spares and the equipment. And according to industry experts we spoke to, this valuation could range anywhere between $210 million to $280 million. Now, in fact, one of the people we spoke to was Amit Agarwal, the Chief Executive Officer and MD of Howden, India. And he explained that the aircraft which was involved yesterday was in fact insured for approximately about $115 million. Now, coming to the liability section, which could very well be the most significant component of yesterday's loss, could amount to millions of dollars. This section covers the airline's legal liabilities to pay to passengers as well as third parties, and this includes medical expenses, cargo, baggage loss. Now, the fact that the aircraft crashed into a civilian compound will also mean substantial third party losses. But let's remember that these are estimates at this point, and what the figures will be are still to be ascertained precisely. But how this typically works is such losses are generally split between multiple reinsurers. Airline flight policies are often placed on a facultative basis, and they involve several participants. So that's what it is. We're speaking to more people to ascertain these numbers further.
Right, Pallavi, thanks for that. And to understand the diverse landscape of insurance options, we spoke to Sajja Praveen Chaudhary, Director of PB for Business, who provided valuable insights into different insurance categories, claim processes, and the specific liabilities of airline companies under the Montreal Convention 1999.
From an airline perspective, one, you can look at just the flight or the plane per se. And then second is when you look at airline as a company as such, the kind of risk cover that they would have taken for various risks, whether it's a third party liability risk or whether it's for the hull risk or whether it's a passenger risk that you're referring to kind of, right? There are multiple risk lines which would get triggered in this case. So as we were hearing earlier, the airline itself, probably the hull part, what we understand at this point of time would be about roughly 700 to 900 crores is what the cost or the claim cost can be in that case. But when you look at particularly what is going to get triggered from airline policies, apart from the hull part, there is obviously the passenger liability, as per Montreal Convention, which we assuming, would be about anywhere roughly about 2 crore kind of thing per person or, with respect to whatever the convention says. And this will be covered as part of the airline liability policies.
Right. And on that note, LIC has come up with some insurance relief for the victims. The company has said that it will expedite claim settlements to provide financial relief to the victims of Air India flight and also the people on the ground who were killed due to the crash. In a statement, the insurer said it has announced many concessions to mitigate the hardships of the claimants of LIC policies. And of the 242 passengers and the crew on board the ill-fated Boeing 787-8 Dreamliner, only one person walked away from the shattered wreckage. British Indian national Vishwas Kumar Ramesh, seated in 11A, is identified as the sole survivor of the flight, which crashed just moments after takeoff from Ahmedabad's Sardar Vallabhbhai Patel International Airport. Let's take a look at the report of the lone miraculous survivor.
In a tragedy that snuffed out 241 lives, one story stands out. A miracle amid the wreckage. From seat 11A, a single survivor, 40-year-old Ramesh Kumar, emerged from the ashes of Air India flight AI 171. It was just minutes after takeoff from Ahmedabad when the Boeing 787 plunged. Its first fatal crash since entering service. But as rescue crews sifted through twisted metal, they found something they didn't expect. Someone breathing. Seat 11A, mid-cabin, an aisle seat. Somehow, against all odds, the passenger in that seat survived. Bruised, broken, but alive. Kumar walked out with a few scratches. The sight, nothing short of extraordinary. Fire, smoke, and still life. While the nation mourns the souls we lost, this one survivor offers something we all need right now. Hope.
What are the cases that Air India may face after this crash? What are the legal remedies available for the families of the victims? What compensation can they expect? My colleague Charu joins us to answer all these questions.
Hi, so as we all know that a tragic incident has taken place in Ahmedabad with regards to the Air India plane. What question arises here is what kind of legal remedies can the families of these victims avail? How can they approach a court of law or any authority in this country to sort of get some sort of a relief in this difficult time? So as per several legal experts that NDTV Profit spoke to, there is a possibility under the contract law as well, because this is a sort of a contract where a service is being promised to the passengers in return of some consideration, that is money, and that promise not being kept. Now there are obviously some legal technicalities here, but a case under the contract law is also something that can be expected. Apart from that, there could be a class law action suit as well. Now this is again something which takes up which comes ahead whenever there are a lot of individuals facing similar sort of issues. So instead of having individual different cases having the same relief that has been sought, they are all clubbed together in a single case. Now a class action suit or a civil suit under Contracts Act or something along the lines of claims for negligence could be sought. Now it remains to be seen what happens, because it is also heavily going to be dependent on what kind of findings come out of an investigation.
Thank you so much for explaining the impact of Air India crash. And now that's all the time we have on this edition of Profit 360, viewers. But do stay tuned to NDTV Profit as we bring you all that you need to know from the world of news. So stay tuned.
In one go, Rapido is taking on Ola, Uber, now Swiggy, Zomato, Zepto. अब कोई soft spoken तो है?
Did you just call me soft spoken?
Yeah. No?
No, I should just record this and let my team hear it.
I think what changed the game was bringing two-wheelers into the picture, bikes, right?
Yes. India has always been the land of two-wheelers. Why don't we leverage this existing infrastructure to create a commute?
Now you've entered a space which is all about, cash up in films. You want to get into delivery and quick commerce.
Entry into this was more a strategic move. For us, our simple motto is this: how can I ensure that this captain who's coming on my platform earn more?
You even ended up learning Korean. How do you use those skills now?
I've actually quit my job while I was on a business trip in Korea.
How did you say I quit in Korean?
Na kumandasaya.
India's healthcare landscape is evolving. And this transformation is not just a goal, it's a necessity. Join the movement towards a healthier India. NDTV's India Health Mission Season 2, Blueprint for Health Vision 2047, brings together the country's healthcare leaders, policymakers, innovators, and change makers to shape the future of Indian healthcare. So let's unite to build a healthier and more equitable India by 2047.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis, conversations that matter. We break it down, cut through the noise and set the context for you. Hear from top policy makers and
Hello and welcome. You're watching KYC. I'm Harsh Saita. We'll today look at City Union Bank, and what I want to really know within this mid to small cap banking space is 3-4 things key which stand out for me when it comes to a City Union Bank. One, what's their growth strategy? Growth has been muted, has been weak. Last 3-4 years have been a bit of a drag, but does that change going forward? They've guided for decent growth. How sustainable, how long is really the question. The second one is they have a large geographic concentration, whether that is expected to change short term and more so long term. Is there a thought process behind changing that? Third piece is with regard to recovery pipeline. They've spoken a lot in their calls about how recoveries is going to outstrip slippages. What is the recovery pipeline? Their PCR has gone up, so where should your provisioning coverage ratio go? And all of those factors around asset quality, and whether the past, which has been slightly checkered in terms of provisioning, is now firmly behind them. Last off is with regard to ROA stability. Can they maintain that ROA at 1.5, and is there any upside potential to that ROA number? So all of that and more as we speak about City Union Bank. But first off, I want to quickly talk about the company and quickly get you perspective on where this company is from. It was incorporated in 1904. Tamil Nadu was its presence, continues to be a predominant presence in Tamil Nadu. It's one of the oldest and largest
or rather oldest private sector banks in India, can't be the largest. It operates around 875 branches, around 1736 ATMs nationwide, and has a very, very strong presence in South India. Out of those 875, 732 branches are in South India, of which 550 are in Tamil Nadu in particular. So it's got a large presence in Tamil Nadu. Let's also look at the branch mix now. Before we go to the exact states in which they have branches, I want to look and give you perspective on each of these. Rural is the lowest focus for this one, around 171 branches in rural. Metro is around 203, semi-urban is 215, and urban is 286. So a large part of where their presence lies is beyond tier 2 and beyond rather. Metro is something which they have the least presence in after rural. So that's broadly the mix, but it's a decent mix, to be frank. With an 875 branch count, that mix seems to be well shaped. In terms of branch geography, their maximum is in Tamil Nadu, as is evident. Then you have less than 10% in all of the others, Karnataka, Andhra, Telangana, Maharashtra. But you look at that 550 out of 875, that's a very, very significant number in terms of the presence in Tamil Nadu. 60 to 70% presence, which is extremely large. The current strategy and how they're looking at business, they're looking at digital loan origination. That's what they are currently pushing. They have part of this is the credit assessment and risk-based pricing, which they are beginning to implement. They have BCG, and BCG has helped them implement digital lending initiatives. The bank is also focused on pre-qualified / unsecured personal and business loans. That's one place they are focused on. But now let's look at the loan mix, because that is essential to understand what the bank is up to. The largest focus again here, the concentration is very large. The largest focus, 41%, is MSME. So when you're looking at the loan mix share, it continues to be very, very large where MSME is concerned. You can see that 41%. Then there are some others, agri, joint liability, non-agri, all of those start taking center stage. So those two pockets, agri and joint liability, non-agri, is around 30%. Again, the concentration, 70% of their loans, MSME, agri and joint liability, non-agri. That's 69 or nearly 70% of their loan book. So again, something in terms of the concentration that the bank has been rather lending to in terms of cohort is extremely sharp. Then you have some of the others, commercial real estate 7%, housing 5%, NBFC 2%, personal loan 2%, wholesale trader 2%, loan against deposits, retail traders, large industries, infra. Then you have all of these within the 2 to 1% bracket. But really, that concentration in those three buckets is what I would be most worried about. So, well, that's with regard to what the company is doing at this point. They were pulled up by the RBI a year or so back with regard to lower provisioning that they have done, and therefore the stock went into a long period of consolidation. The bank had to correct some processes. These are also systemic issues within the bank which were present, which now the bank claims they're out of the woods. I'd want to understand and get more clarity on that as well. But let's talk about the metrics first. What is it that we will be looking for? We'll start off with the income statement, the balance sheet, the operational metrics, as we always do when it comes to banks, and then we look at asset quality as well. Thereafter, we look at shareholding, street cred, street coverage, and valuations. We'll cap that up and we'll give you a rating out of 8 at the end of it. Let's start off with the income statement. Now, when you're looking at the numbers, FY22 to FY25, what is it that you're seeing as a viewer? You're just seeing an 8% NII growth, 2% operating profit growth, while provisioning has come down significantly. What you're on a higher base, of course, and hence I'm saying significantly. Otherwise, in absolute terms, it's just 13% lower on a CAGR basis. But profit is getting a lift because of that. So do you want as an investor, do you want profitability to come from lower provisioning, or would you want profitability to come from higher growth? And this is not a bank which is substantially large. It's a 50,000 crore AUM bank. What you would want is stronger growth. And that's not coming. That's not reflecting on the net interest income or on the operating profit for that matter. So therefore, we've given this a strong thumbs down. Provisioning has had its set of issues as well. I did say that. And therefore, again, even on the provisioning front, how stable is this number is something we'll ask. But that's how the last 3 years numbers have evolved. FY23, FY24, FY25. So it's largely in the 500 to 550 range in the last couple of years, but FY23 again was elevated, the provisioning number. And that kind of drags the bank down as well. So all of that not adding up very well. And that's why you're seeing a thumbs down on your screen when it comes to the income statement. Not too happy, you'd want more with regard to the income statement. Let's look at the balance sheet now. Again, what you're seeing is an 8% to 9% growth on the advances front. The deposits have grown slightly better at 10%, and CASA is up around 11.5 odd percent. So maybe on the CASA front, maybe it's slightly better, but outside of that, you're not seeing growth. I mean, you're just about seeing a double-digit 3-year CAGR growth on the deposit number. Wouldn't you want more on a deposit base of 60,000 crore? For sure. And therefore, again, here, the numbers don't look very enthusing. You want a better number. The only piece here is the capital adequacy. It's poised at 24% to do decent amount of growth, at least going forward. Now, whether they capitalize on that or not is really the question. But at least the capital adequacy looks okay. They haven't done any equity funding round since a while now. So the balance sheet from that standpoint is okay. There's no dilution of shareholders' equity. But what you're otherwise seeing is just very, very low growth on an otherwise extremely low base. So maybe a lot more to be desired on that count as well. Now let's look at operational metrics and let's put this into better perspective. Look at the way in which your yield on advances has gone up, just about 50 basis points since FY23. Even your cost of deposits has gone up, and that's also to a certain extent due to the repo rate as well. You want to factor that in. Your net interest margin has largely been stable, so that's the impressive bit. 3.9, 3.7, 3.6 is largely stable net interest margin. What you're seeing on the cost to income side, it's seen a bit of a spike, but at least last 2 years it's been decently stable. But really the essence of it is the ROA. 1.46 to 1.55 is not a bad range to hover around, and they've done that for 3 years on the trot now. Mind you, FY23 was a year in which provisioning was elevated as well. So despite that, the ROA number doesn't look too bad per se. So it's been a steady kind of a number on the ROA count as well. Largely, we'd see this number as a steady number, and therefore we've given this a neutral rating where the operational metrics are concerned. Now let's talk about asset quality. This is where you start to see a little bit of improvement of a high base. 4.4% GNPA in FY23. FY24 it tapers down to 4. FY25 it tapers down to 3.1. So you're seeing that improvement year on year on the GNPA number. Clearly a thumbs up. You look at the NNPA number as well. It's largely in that kind of a bracket. And the NNPA number has come down from 2.4 to 2 to 1.3, as you can see on your screen. So a thumbs up when it comes to the GNPA and NNPA. I also want to quickly zoom in. Q2, the GNPA number was 3.5%. Q3, it was 3.36%. Q4, it's 3.1%. So you're seeing steady improvement even when I'm looking at the last 3 quarters in terms of GNPA. NNPA also very similar trajectory, 1.62, 1.42, 1.25. That's how the NNPA number has come down by in the last 3 quarters. So a thumbs up on that count where asset quality is concerned. Credit where credit is due. They've improved their asset quality. They've improved their provisioning coverage ratio, which is The coverage on the NPA number has gone up, which is again a positive. They've provided, they've over-provided, they're being conservative. All of those are positive points. Let's talk about shareholding now. Now, there isn't a single promoter in this bank, and therefore, you would want to look at what kind of institutional investors are sitting here. You look at the December 24 numbers, you look at the March 25 numbers, there are some numbers which are already sitting there in front of you. But let me quickly read out some numbers on an annual basis. FIIs originally were holding around 20 to 21% of the share capital in FY20, came down to 18% by FY22 and has risen back to 28% by FY25. So steep FII interest that we've seen over the last couple of years. DIIs, on the contrary, used to hold 30 to 35%. Holdings inched up in FY22 to 40%, and now they've tapered back down towards the 29 to 33% kind of band. As usual, the tug of war between FIIs and DIIs seems to be evident here in the shareholding. The public holding has been around the 42 to 39% kind of number, or maybe 43 to 38% kind of number. That's the kind of band that public shareholding has stood at, in particular with regard to this one. I want to also try and point out that there are some very interesting institutional investors sitting here. Let's pull out that list and we'll get perspective. There you go. And HDFC AMC holds around 9% and SBI AMC 8%. Capital Group is the other one, and Franklin India. And again, then you have a combination. You have Axis, ICICI, all of those mutual funds, AMCs holding roughly 8 to 9%, including a Kotak AMC holding around 8 to 9% stake in this one. So you've got these clutch of investors and AMCs which really seem to like the stock and therefore have decent amount of holding in it, which kind of gives you some bit of comfort, right? That you've got these large institutional investors which are holding large stakes. Not that it doesn't mean that they will exit at some point. They might. But what I'm saying is it gives you comfort. It lends comfort that there are several of these large ones, and therefore there's something that they are seeing in terms of positivity with regard to the bank. And therefore, we've given this one a thumbs up because of the uniqueness of the way in which this is structured. Let's look at Street Cred now. Again, an interesting picture. You look at the 1 month returns, it's up 1.5%, 3 months it's up 16%, 6 months it's up 6%, and 1 year it's up 31%. All of this looks good till you zoom out and look at the 5-year picture. That's where the problem lies. 43% returns in the last 5 years is a far cry from satisfying, and therefore again you want to see more with regard to the performance over the longer period, and hence we've given this one a neutral. Now let's look at the street cred. What is it, the street coverage. What is it that the analysts are suggesting? There's only one sell call, the 26 buy calls, and the average upside is just 10%. Again, we'll give this a neutral because what you want to see is more. Have you already seen a larger part of the rally having been done or not is really the question. While there are 26 buy calls for sure, the upside is not as compelling at this point. I want to also look at the valuation picture because that will also give us a clearer picture as to how this is stacking up in terms of peers. You look at City Union versus some of the others. Now I understand that the ROA picture for some of the others may be different, and that's something that you must also note. But the price to book at 1.5 times and the recent stock rally, again, the valuations will likely price in a decentish growth and a 1.5 to 1.6% ROA. Can it beat some of those expectations will be the question. And before I go across to N. Kamakodi, who's joining us, who's the CEO at City Union Bank, who's joining us, before I go across to him, let's quickly stack up the KYC ratings in front of us for our perspective. The income statement and the balance sheet are a thumbs down. You want more with regard to growth. Operational metrics are a are a neutral. Asset quality is a thumbs up. Let's look at shareholding, street cred, street coverage, and valuations. All of that stacks up to a 4 out of 8 on our KYC ratings for a City Union Bank. Now let's go across to N. Kamakodi, who's joining us. Mr. Kamakodi, always good speaking with you. Good morning. I want to start off by asking you that you've guided for around a 200 to 300 basis points higher growth than industry. What's capping your growth at this point? I mean, you're well capitalized, your PCR has gone up, you should be happy with the way asset quality metrics are evolving. So what's capping and what's keeping you cautious with regard to growth on a loan book which is 50,000 crore?
See, if you look into any bank, the actual mistakes are made in good times. So we had always maintained, like say, we are test match players. We are not a short-term player, like where we want to have, like say, a 10% over and above the industry and take it and all. We take a cautious, like say, a treaded path, where like say our growth rate almost like say a few percentage point over and above the growth rate of the industry, so that like say we have a total comfort over the risk metrics and also on the growth per se. So this had all along been our practice. This is how the bank had stayed profitable and efficient for 120 years over the since it was like say started. So we continue with the basics, so that like say we take a growth like say about 2 to 3% over and above that of the industry.
But what will help you grow faster, or will you just avoid growing faster just because